Conclave. I'm Alex Matthew.
And I am Mahima Vachrajani. Over the next few hours, we host you, a collective of India's most prominent corporate and market leaders, to explore the country's revolutionary roadmap to becoming a developed nation by its centenary year. This conclave will discuss the agenda for Viksit Bharat 2047. It's a national initiative that's focused on the 5 key pillars: economic growth, technological upgradation, infrastructure development, social empowerment, and sustainability.
The conference will highlight how this vision is being realized in important industries, highlighting India's commitment to long-term, meaningful growth and global leadership. The topics lined up for today range from manufacturing, disruption in technology, and of course the global buzzword, artificial intelligence, and how all of this ties in to present a once-in-a-lifetime opportunity for the Indian investor in the markets.
Absolutely. It's a power-packed lineup. So, let's kick things off. But first, a big thank you to our sponsors for facilitating this fantastic meeting of the minds. Presented by Pernod Ricard, co-presented by Shema General Insurance, banking partner SBI, co-powered by Share.Market by PhonePe, premium menswear partner Reed & Taylor, state partner Uttarakhand Government, summit partner Invest MP, and out-of-home advertising partner Lakshya Media Group.
And now for the first word of the day, please help me to welcome on stage Sanjay Pugalia, NDTV's editor-in-chief. Put your hands together, please.
Namaskar. Good morning and very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat. एलेक्स, तुमने मेरा काम आसान कर दिया कि क्या एजेंडा है, क्या थीम है और क्या क्या बातचीत होगी ये बताने के लिए। मुझे सिर्फ इसमें 1-2 बातें जोड़नी हैं जो आप हमसे ज़्यादा जानते हैं, लेकिन उसको रीआइटरेट कर देना बहुत ज़रूरी है। एक बात तो हमारे अपने बारे में, एनडीटीवी प्रॉफिट के बारे में, कि अब हम 7 चैनल्स इंक्लूडिंग एनडीटीवी वर्ल्ड, 7 चैनल्स और 15 वेबसाइट के प्लेटफॉर्म हो गए हैं, यानी एक बहुत बड़ा नेटवर्क हो गए हैं। उसमें एनडीटीवी प्रॉफिट का रीलॉन्च हुआ है। तो उसकी खास बात क्या है? उसकी खास बात यह है कि न तो ओल्ड लिंगो है, न ओल्ड जार्गन है, और ओल्ड ऑडियंसेस के बजाय बहुत तेजी से हम मूव कर गए हैं यंग ऑडियंस की तरफ। ऑडियंसेस हमारी ऐसी हैं जो इस वक्त ज़्यादातर लोग आप कह सकते हैं कि 18 से 45 साल के एज ग्रुप के हैं, जो मेजॉरिटी हैं। आपने देखा होगा कि जितने नए इन्वेस्टर्स इस वक्त बाजार में आ रहे हैं वो भी इसी डेमोग्राफी के हैं। जो पूरा एक मार्केट हमारा वाइडन हो रहा है, कैपिटल मार्केट, उसमें इन लोगों का बड़ा रोल है। और आप ये भी देख रहे हैं कि उनकी कंजम्पशन की हैबिट्स किस तरह की हो गई हैं। और उसको देखते हुए हम लोगों ने एनडीटीवी प्रॉफिट को इस तरीके से डिज़ाइन किया है जो यंग इंडिया से ज़्यादा बात करे, डिजिटल लेड हो, और ओल्ड क्लीशेड एनालिसिस के बजाय, मैक्रो के बजाय, आपको इतना माइक्रो गाइडेंस दे सके बाय वे ऑफ inviting esteemed guests, analysts, commentators and institutional investors included on the panel conversations, जो आपको बिल्कुल पैसा कमाने में सीधे सीधे मदद कर सके। तो डीजॉर्गेनाइज करना, यंग इंडिया से बात करना, और इस बात का ख्याल रखना कि दुनिया भर में डिसरप्शन कितने हैं। अब आप देखिए, जितना हम लोगों ने सोचा था, उसके बाद ग्लोबल पॉलिटिक्स जो बदली, अमेरिका में जो रिजीम चेंज हुआ, उसके बाद अनप्रेडिक्टेबिलिटी कितनी जबरदस्त है। लेकिन उस अनप्रेडिक्टेबिलिटी में नोटिस करने की क्या बात है? नोटिस करने की बात यह है कि मोदी लेड इंडिया एक न सिर्फ ब्राइट स्पॉट है, न सिर्फ सबसे तेज ग्रो करने वाली इकोनॉमी है, बल्कि पूरे ग्लोब को, पूरे डेमोक्रेटिक वर्ल्ड को एक सैनिटी और सस्टेनेबिलिटी और एक स्टेडी ग्रोथ की तरफ ले जाने का काम हमारा देश कर रहा है। आने वाले दिनों में ये बात ज्यादा अच्छे से समझ में आएगी जब आप एक तरफ ट्रंप टेंट्रम देखेंगे, उसके कारण अनप्रेडिक्टेबिलिटी होगी, टैरिफ वॉर होगा, न जाने क्या क्या होगा। लेकिन अब जो ग्रोथ के बेसिक फाउंडेशनल वर्क को कंप्लीट कर दिया गया है, और ये बजट उसका इंडिकेशन आपको देता है कि हम किस तरह से एक ही डायरेक्शन में रहेंगे, स्टेडी डायरेक्शन में रहेंगे और वो अपवर्ड डायरेक्शन है। यही वजह है कि जब अब मार्केट अच्छा है, प्रॉफिट बुकिंग करके अगर एफपीआई यहां से एग्जिट कर रहा है तो इंडियंस बड़ी तादाद में आकर के मार्केट को डेप्थ दे रहे हैं, स्टेबिलिटी दे रहे हैं और अपवर्ड ट्रेजेक्ट्री दे रहे हैं। मुझे मालूम है कि पिछले दिनों मार्केट में जो डेवलपमेंट्स हुए हैं उसके कारण, ऊपर नीचे होने के कारण एक प्रकार की फिर से एंग्जाइटी है, फिर ये सोचना समझना है कि अब आगे क्या होगा वगैरह वगैरह। लेकिन हर गिरावट नए इन्वेस्टर के लिए, बनते हुए भारत के इन्वेस्टर के लिए तो अपॉर्चुनिटी है। इसलिए मुझे लगता है कि जो पहले होता था कि एफपीआई आएगा जाएगा, उस पर भारत का कैपिटल मार्केट, इन्वेस्टमेंट क्लाइमेट और ग्रोथ ट्रेजेक्ट्री तय करेगी, उस हम्प से, उस बैरियर से हम पार कर चुके हैं। ये मुझे लगता है कि सबसे ज्यादा जरूरी और बड़ी बात है। ये विषय एक्सपर्ट लोगों के हैं, हम जर्नलिस्ट लोग हैं, एडिटोरियल लोग हैं, उनकी बातों को सुन करके आपको बताते हैं, तो उस पर मुझे आपको ज्यादा कुछ बताने की जरूरत नहीं है। लेकिन ये बताने की जरूरत है कि आज का दिन भर का जो हमारा लाइनअप है, फ्रॉम मिस्टर पीयूष गोयल टू ऑल द स्पीकर्स, हमको पक्का अंदाज है कि आज हमको बहुत उनके विजन से, उनके गाइडेंस से, जो पॉलिसी मेकर्स हैं उनकी बातों से काफी कुछ अंदाज मिलेगा, गाइडेंस मिलेगा, एक विजन डेवलप होगा आप लोगों के मन में, खुद के, हमारे एनडीटीवी प्रॉफिट के सारे दर्शकों के मन में, कि आने वाले दिनों में किन बातों का ध्यान रखें ताकि अपनी जो खुद की भी प्रॉस्पेरिटी की जर्नी है उसको हम आगे बढ़ा सकें। तो मैं एक बार आप सब लोगों का फिर से स्वागत करता हूं और एलेक्स को वापस बुलाता हूं।
Thank you, Sanjay sir. Let's kick things off with the first panel of the day. If there's one thing even market veterans are asking today, it is, market kya lag raha hai? Tezi kab aayegi? Right? And that's because it's been a rocky start to 2025. But the thing is, if you focus too long on that piece of the puzzle, you're likely to miss the bigger picture.
Absolutely. And that bigger picture is what we want our guests to paint for you today. Please join us in welcoming on stage market experts that have seen the reds and the greens and all the hues in between over the past several years. Ridham Desai, MD and Chief Equity Strategist India, Morgan Stanley. Dinesh Thakkar, Chairman and MD, Angel One Limited. Ashish Kumar Chauhan, MD and CEO, NSC. Joining them on stage, my colleague and a market veteran himself, Neeraj Shah. Ladies and gentlemen, please put your hands together on welcoming them on the stage.
I'm here. Yeah. To the left according. To the live audience who've tuned in right now on television and on social media platforms, thank you for tuning in. And to the audience out here at the venue as well, a loud round of applause for yourselves for taking the time out and participating in our first ever conclave. Now, from being counted as the least intelligent investor many years ago with a lot of handicaps, to becoming the plank on which the Indian capital markets literally runs these days, the Indian retail investor has come a long way. Regulations, availability of options, awareness of the power of investing and compounding in equities have all helped. The question is, can the next 25 or 35 years be as dramatic in terms of a shift as the last 25 have been and arguably the last 5 years have been? And what do capital markets have in store for the Indian investor in 2025? As Alex said, even the veterans are asking, kya lagta hai? So let's try and answer those questions, all of them, over the next 30 minutes, with the panel starting from my left, Mr. Ridham Desai of Morgan Stanley, Mr. Dinesh Thakkar of Angel One, and Mr. Ashish Chauhan of NSC. Gentlemen, all three of you, thank you so much for joining in. And can I start off? I'll start off in this order. Ridham, we are going to get to the outlook ahead because Ridham Desai has on a timely note written a note today which speaks about how equities are overlooking the good news. Did you time it with the panel today, Ridham?
Yes, I did.
You did? Okay. And we'll get to that as well. But can we start off, Ridham, by talking about how you've seen the emergence of how Indian markets have come through in the last so many years? Because from a point of time when agar FI bechega, to market khatam, to the point of time now, as long as the DI is investing, we are in safe hands. We've come a long way.
See, Neeraj, I have to claim credit that I predicted this in 2015 when the Honorable Prime Minister paved the way for retirement funds to invest in Indian equities. And it was what I have called many times the 401k moment for India. The same thing had happened in the US in 1980 when Ronald Reagan allowed 401k plans, the equivalent of India's provident fund and pension funds, to invest in stocks. And what you got then was a 20-year bull market in America that only ended with the Nasdaq bubble. So this will also only end when we get a bubble. It will probably last longer than 20 years, starting from 2015, because we have a younger population than America. You know, by the time you got into the millennium, a lot of baby boomers in America started retiring. So they had to start withdrawing their funds. That's not happening in India for many, many years to come. So yeah, this is as predicted. It's par for the course, and it's got many more legs to go.
Okay, many more legs to go indeed. But the evolution to both of you, and I'll now go to my next speaker to my left, Mr. Thakkar. The evolution of how the markets have come has been quite dramatic, right? From shouting in the ring to screen-based trading, with regulations empowering it, exchanges playing such a vital part. We've come a long way.
Yeah, definitely, because I have seen all the phases. When I started my career, it was floor trading on the floor and all that, outcry system. And it was like a Wild West. There was no regulation, no capital adequacy norm. If one broker defaults, it spills over the market. And markets were like very volatile, like going up 100%, 200% and coming down equally fast. So I think in some sense that Harshad Mehta scam gave us some kind of a sense of seriousness that we need a proper regulation in this market. And I know when this capital adequacy and all that were introduced, that time there was a big kind of like resistance from existing brokers. But we know that, okay, after all this kind of regulation came in, our market expanded. I remember in those days, BSE used to do volume of around 100, 150 crores. And by the time I think a government regulator decided that we need to bring in a modern system, NSE came into picture, and we saw a big jump in terms of volumes and penetration. And then came a Y2K kind of an like phase in India, where lots of IT professionals started investing in India. But they were unable to understand how to really manage volatility of the market. We did not see as much penetration as we saw when digitization and digital India movement came. India Stack was very popular, UPI payment for stock market, and that gave a kind of an like, I would say, access to tier 2, tier 3, where you saw a big surge. Like I'm talking about 2000 when there were just 20 lakh investors. And today, as we speak, we have around 18 crore demat holder.
Yeah, it's been stratospheric, if you will, the last 5 years in particular. Mr. Chauhan, a word on that as well, because you've seen this through multiple lenses. And do you reckon, I mean, what to your mind has been one or two defining moments over the last 10, 15 years especially, when the pace of change has been very, very quick? And how do you see the next 5 to 10 years in terms of what exchanges would do to facilitate even deeper penetration of equities? And more importantly, even in terms of regulations, is there stuff that you anticipate will come in which could make the markets even stronger and better and safer?
I mean, I'll go back 30 years. As Dinesh Bhai said, he was on the floor side, I was on setting up the NSE side. It has been a sea change. Today, even those days when NSE was set up, it was a breath of fresh air for the world, not only for India. And NSE was not only the screen-based automated exchange which became successful in India, but it was also the first screen-based automated stock exchange to become successful in the world. It changed Indian stock market, but it also changed India's IT. There was no IT project worth showing in India before that. There was one railway reservation framework which was for internal to railways. Otherwise, normal Indians had no access to computers which could actually change their lives And I recall many of the current stars of IT industries, they used to bring their potential customers to show NSE that India can do it. And that's how
Sure.
Y2K and all those contracts came. Why I'm telling you this, it was the first public digital infrastructure of India. It was the first fintech of India. It was the first large IT setup in India of any type, right? So it changed India, NSE changed India in many, many ways. But what it did for stock market is amazing. That time, India's market capitalization in 94 when NSE started was around 4 lakh crore. Today it is 440 lakh crore, 110 times. And probably dollar terms also it's more than 60, 70 times. What it got, things actually when revolutions happen, you get to see them upfront and then they peter out. When evolutions happen, they happen slowly, but then suddenly they become fast. You know, they gather pace after some minimum critical mass is obtained.
Sure.
And that's what India's stock markets have happened because of NSE. That I think we can give a lot of credit to NSE in terms of automating things, in terms of the trading part, trading, clearing, settlement, risk management, ensuring the defaults don't happen and stuff. But more importantly, the corporate governance cleanup that has happened when I joined the business or as a job in 91, getting annual report was a pleasure.
Sure.
Quarterly results, you guys keep on talking, or the sort of material events which you keep on talking on TV every day was not even a thing, right? And most of the time the companies will actually combine 2-3 years and give you the results after 2-3 years. From there to come here, we are now better than the best in corporate governance. For me, the trust of the investors, because many times we think the stock market's job is to allow you to trade, which it is. But the main job is to actually ensure that the corporate governance takes place in such a way that it is always in the interest of the minority shareholders. And I think today India is pretty much better than the best in the world in terms of protecting minority shareholders' right. I think that is where the confidence of individual investors, of institutional investors like America has a golden share. America has shares with extra rights.
Sure.
Which India doesn't provide. For me, that is the true protection for minority shareholders, which we actually don't talk because we are assuming that has to be hygiene. But if we don't have that, slowly, when profits are sort of available or one person with very little shareholding ends up making a lot of decisions, those rights actually will bring down the capital markets. And those are the things we need to watch out for in protecting our capital markets.
Okay. No, so I have a follow-up, by the way, but just a shameless plug here in terms of how proactiveness is happening. A very young researcher from NDTV Profit recently filed a story about 10 days ago about how a company with hardly any employees and hardly any revenue has some 7,000-8,000 crores worth of market cap. And in about 4 days, we had SEBI come out and say that we are investigating this company as well. So some things are being taken. I urge you to actually read that story on our website too. But, okay, Mr. Chauhan, a follow-up now. What's expected next? AI, machine learning, a lot of things happening, right? What do Indian markets look forward to? You are at the right position to tell us what's to be anticipated in the next 5 years.
I mean, we have seen companies like, if you look back in 1970s, nobody thought a polyester company would become the largest company in India in 40 years' time, which it became. In 1993 or 94, a small IT company's IPO came. Nobody thought that IT is a thing. That issue failed. And today, it is basically, it made many billionaires by accident because they were underwriters who were forced to actually subscribe, right? That company's name is Infosys. So, and then pharmaceuticals, Sun Pharma, Kotak Bank. You have seen the waves of newer and newer and newer companies. Today, you have Swiggy and Zomato and Nykaa and so many more who have come, right? So for me, it is as an exchange infrastructure provider, our job is to allow Sachin Tendulkar to also come, and then later on Virat Kohli, and then later on Rohit Sharma, and then Surya Yadav. We need to provide continuously good grounds, fair umpires, good facilities for people. That is what our job is. And as and when things keep on changing faster, the newer technologies will come, newer companies which will take advantage of that technology that will keep on coming, and of course the wealth gets created by newer technologies. So for me, whatever you say about AI or drones or 3D printing or newer sort of things which will come on top of that, exoskeletons and all, you are going to see a lot more companies which will come. Earlier, you required a lot of capital to create more capital. 1970s is first time where some of the young companies came, raised funds from the public, became large like Reliance, and then Infosys proved that you don't require a lot of capital to begin with.
Sure.
And now, newer technologies are not requiring a lot of capital. I call it capitalism without capital. And that's where you will see a lot of youngsters aspiring to become entrepreneurs in variety of areas. They'll come raise funds from the markets because despite whatever proclamations and page 3 of newspaper you see, the private equity and venture capital don't fund even 1% or 0.1% of the actual companies that want to be funded. And today I have 22 crore accounts of investors, 11 crore unique investors. 20% of all households in India are now trying to fund the dreams of entrepreneurs. Of course, they also are expecting returns.
Of course.
But basically that is what...
Which are not there right now, but that's okay.
The beauty of India is that now every entrepreneur can try to come, raise funds. Some of them will fail, some of them will succeed, but they will create more jobs, more wealth for themselves as well as for the economy.
Okay. Mr. Thakkar, you've been at the forefront of disruption, if you will, right? What's next to be anticipated from a platform business like yours, or just in general from the Indian platform businesses which are facilitating investing and trading in all asset classes for the Indian investors?
Yeah. See, if you see, technology already came into our market way back in 93, 94, as Ashish Chavan told. But I think what helped was deeper penetration when we saw deeper penetration of smartphone, internet available to almost like 96% of villages in India. So what I am saying, today we were able to get this kind of like market coming to capital market, stock market, because we gave a good access to them. Sure. It was very easy for them to access the market. Because of technology, we were able to reduce the price, pricing came down. What I'm seeing right now, if you see lots of investors, although they have opened the account, but they are not ready to take their first step. So either awareness about this asset class is missing, or we have to build lots of intelligence in our app. So that is where like broking company like us are investing heavily on AI and machine learning. It will take some time to get that kind of an app to an intelligent level where a person gets his first salary or gets his first kind of an like income stream, and app is able to guide them on next steps, be it investment in equity, be it taking credit, being responsible in terms of their financial management. All said and done, this is my experience, when people in this financial industry also, they do not have kind of a time or kind of like full knowledge about what asset class are available and what's the right way of approaching in terms of managing their financial goals. So I believe AI is a best kind of like tool which can help personalize every journey. See, an app should be able to scan the whole ecosystem, what products are available across, especially for Indian market, for India. And how do we match or how do we kind of build confidence in investor to take first step? I think best step was introducing sachetization of the SIP 250. We have to reduce the cost. What is prohibiting us from introducing all this product in a very sachetized or tokenized or fractionalized way is cost of transaction. If you are able to bring it down by using technology, be it regulator, be it exchange, be it banks, I think that will create a big surge of new set of investors who will start investing 100, 200, 500 rupees. People feel that equity is only for rich, wealthier people. So we have to democratize, we have to build confidence, we have to build intelligence in our app so that it gives confidence to every person in India that even if you want to invest 100 rupees regularly, this can be invested on this app. I see a big kind of like future in terms of blockchain, where underlying asset is anything, not crypto, because crypto we are not comfortable.
Yeah, sure.
But I think I see a great future in terms of 5 to 7 years using blockchain technology so that underlying asset can be anything. It can be real estate, it can be painting, it can be wine, it can be whatever can be invested. And that can be fractionalized to a level where a retail investor can invest. I think you must have heard about Finternet, a project which is now kind of like, I would say, pet project of Nandan Nilekani, and we are also closely working with them. I see a great future in Finternet. It may take 7 to 8 years, but I am a big believer blockchain, an underlying asset, anything apart from crypto would be a great future, and that is what I think will bring all India to this market for all asset classes.
Interesting. Well, looking forward to some of that. Now the question is, will the market buoyancy be their rhythm for the Indian investor to realize that this is yet another period which will pass through? Because the last 4 years have been different in that dips were bought into, people consistently stayed the course, right? This seems to be the current, now I'm talking about the present, the current seems to be the first one where people are actually a bit shaken up. I see that in conversations, we see that in our show that we do, a caller show for 1 hour, called Ask Profit, wherein people are now questioning that should we even stop the SIP? I mean, this had never come before. How do you see this?
I'm sure you have tapes of your shows.
Yes.
Just check May 2022.
Okay.
Same thing had happened. Just 3 years ago, actually. So I don't think it's anything out of the ordinary. Markets do not go up in a straight line. They're bound to produce some volatility from time to time. The genesis of this particular one, I think, was the slowdown in growth that happened largely because the government started consolidating its fiscal deficit. And the central bank continued to pursue, I would say, quote-unquote, hawkish policies. And that, I think, set the stage for a slowdown which has, I think, lasted for 2 quarters. In my view, we are already out of that slowdown. The budget was a phenomenal one. I have titled it a magic budget. It continues to consolidate the fisc, but at a much slower pace, only 40 basis points versus 120 in the trailing 12 months. It has increased capex share of GDP by another 20 basis points to another record high. And, of course, it has cut tax rates as well. So it has got an incredible combination for the economy. And at the same time, most importantly, the RBI pivoted. And the market has just ignored what I think is one of the biggest pivots in modern central banking history of India, where it has gone all out to convert liquidity into positive territory, cut interest rates, and taken the foot off the regulatory pedal. If credit growth doesn't accelerate from 11 back to 17, I'll be very surprised. So this is like, I am just amazed that people don't see this as an opportunity. In hindsight, they would realize it. It's impossible to catch the bottom. I don't know where the bottom is, but we didn't know during COVID as well. You have to buy stocks. They will go down maybe another 5-7% and you buy more. And I think you come out quite good. Now, are there some things to worry about? Of course, there are lots of things to worry about. But I'm not really worried about President Trump anymore. I think he's put his cards on the table and they look very benign. So this is nothing close to what we thought could be the worst case scenario. I think India has done a superb deal with America last week, which should result in much greater trade cooperation and military cooperation. 2 wars are ending. A third one is being taken off the table. The tariffs which were coming on China don't seem to be coming. So if anything, I think business sentiment in America seems very solid and improving. And it will soon turn in India as well. So my worry was that global growth slows down because of policy actions, and that worry is ebbing at the margin. So that was the biggest concern. And we will get lower oil prices, no wars, potentially lower interest rates in India, a slower pace of fiscal consolidation, a slew of tax cuts, a lot of tax reforms, and higher capital spending from the government.
Can't ask for more, are you saying?
You know, I may sound like a broken record, but I am very bullish at these
No,
these
this is great to know, and I see both gentlemen smiling, so I'm going to ask them as well. But Rhythm, I have a follow-up for you, which is a question that everybody is asking. Okay, FI वापस कब आएगा? Right? Everybody wants to know this.
नहीं, देखो, in 2015, when the retail balance sheet started shifting, and by the way, it has not made such a big shift as people think. Trailing 10 years, in Indian households have still put more cash in their cupboards than cash into equities. They put more cash into gold than into equities. So we're still at the tip of the iceberg. We have really not traveled this journey. There are only two players in the market. It's either a domestic investor or a foreign investor. If every morning, even through this fall, at 9:15, if a $100 million bid is coming from domestic investors relentlessly, somebody has to sell. Otherwise, how do you get a trade? Even in the open outcry system, there was a trade, and there the market maker would go short. Somebody has to trade, right? Somebody has to sell. So unless the issuance cycle reemerges, and the third player comes into the market, which is the corporate sector, comes and offers stock, I don't think foreigners can come to buy. Now, a couple of things let me just say here, is that when we look at emerging market portfolios, the underweight position of foreign investors is now to an all-time low. So they are more underweight on Indian stocks than they have ever been in the past. The last position was in 2007. The other thing that I would say is that India is hurting considerably because of its classification as an emerging market. The emerging market cohort is no longer the story that people dreamed about in the mid-90s. So it is unraveling, and a lot of assets in that cohort are shrinking, and India is facing some of that brunt as well. So it's important, if you ask me, I think India needs to diversify its sources of capital. We need to allow other pools of capital to walk into Indian stock markets, and that would then ensure more secular flows. But in the meanwhile, I think somewhere in the next few weeks or months, I think foreign investors will start coming back. India has considerably underperformed China. China is up 50%.
Yeah.
September 25th, and I have to say in hindsight, I underestimated the Chinese policy stimulus then. It seemed in the wrong direction, but it proved to be a bottom for the Chinese stocks and a top for the Indian stocks. And the relative chart now looks really juicy for India. So those who are waiting for India to get more attractive in valuation terms and in performance term, I think the moment has come. And one last point, I like to measure the Sensex in gold ounces. I've been doing that for 30 years. This is the cheapest the Sensex has been in gold ounces since November 2020.
Sorry, can you explain that?
How much Sensex can you buy with an ounce of gold?
Acha, okay, fine.
Okay. So this is the cheapest since November 20. It's like COVID.
Oh, okay. Okay.
So people like to measure the Sensex in earnings term, in INR terms, in dollar terms. I like to also measure it in terms of gold ounces. So
interesting.
This is the cheapest it has been in 4.5 years.
Wow. Okay. Well, two gentlemen are smiling with that. So, Mr. Thakkar, you've been smiling and wanting to come in twice. You want to add a point here?
Yeah. See, I have seen this market in terms of retail perspective. You have seen in terms of institution, they are far more knowledgeable. But retail are very emotional and sentimental. When a market crashes, next day call comes from customer, abhi kaun trade karega? And I remember in 2000 when this dot-com bubble happened, and SIP used to be like around 150, 200 crores per month. And dot-com bubble happened, everybody told that now nobody is going to invest in equity. And today as we speak, a SIP book is like running at the rate of 24,000, 25,000 per month. So what I'm saying, till that time, like fundamentals are good, retail would get lured towards volatility, market momentum and all that. But we know fundamental of the country is good. And every year we will see progressive, there will be some kind of a growth in corporate earning. And we are seeing inflation has been controlled. So retail investor is going to come back in a big way. And if you look at, as you said, can we see this next 20 years, as shining or as lucrative as it was past 25 years. In fact, I feel it would be better than that. Because that time India was building in terms of infrastructure, in terms of digitization, in terms of, even if you see, demography also was not favorable. Today, every household has more earning member than what used to be previously. Now, if I fast forward for next 20 years, India would be having highest working population. So all this population who are earning would have no other way but to invest their saving in equity. Now, if we talk about today's median age, which is around 28, 29, that means people have just, this young population I'm talking about, have just started earning. And next 20 years also, Indian median age would be just 40, which is almost not even like, it is just closer to developed countries. So I think we are yet to see that phase where India, where it is, will go to that developed status. And that is where a serious relationship of family starts with equity, saving, long-term goals and all that. I feel that we are going to see far more better momentum and better phase than what we saw in past 20 years.
Wow. Okay. Mr. Chauhan, last word to you. And I'm asking you to wear a different hat. We have a world-class exchange system. We have world-class brokerages. We have world-class apps to trade. Would love to understand your view next 15 years. We have two bullish views out here. I'm asking you to wear a different hat than the head of the NSE exchange and tell us what do you think about it.
As an NSE head, I usually have no view on whether market goes up
Completely.
or
I'm not asking you for the markets.
But,
I'm just asking how do you see the...
As a person who has observed
Exactly.
and also thinks about future, for me, the technology is the only change that creates wealth. Technology brings change, and that actually change brings wealth. Technology waves used to come very slow earlier, so we didn't realize that technology was the change. And technology waves used to come so slow that the wealth also used to be created slowly. Last 30, 40 years, first time in human history we saw in one single generation a full technology play from sort of computer not being there to computer being almost everywhere. And the next layer of technology changes are going to be even faster. So the wealth that is created in last 30, 40 years is way beyond what was created in, say, last 100, 200 years because of that faster change. But the changes are coming so fast that next 30, 40 years will create even more wealth than what was created in, say, last 10,000 years. And it happened in very many periods like Industrial Revolution in Europe and all. And this next 30, 40 years, who creates that wealth is young population. Because they understand new technology, they adapt to it. And basis that, they create new wealth. Of course, that economy had to have a capital. Today, technology doesn't even require new capital to be invested. So if you look at Japan, it's old. China suddenly became old. India, young and technology oriented. Europe is old. America will become old if they don't import people, right? So effectively, India is in a great position to take advantage of that technological waves and the wealth that comes with that, right? So 17% of young population, means 70% of world population, 20% of young population. If they create 25, 30% of the next wealth that gets created, India will have a chance to become rich before it becomes old in next 30, 40 years.
Cross fingers. And America, well, if it has to import people, then that also puts India in a great place, I would reckon. But I think we have time for maybe one or two questions if the audience has questions. So, Alex, Mahima, do we have any questions from the audience?
Where's Mahima?
Yeah, thanks a lot, Parag here.
Okay, we have one question here, yes.
So my question is for Rhythm. So while I completely agree on these two fronts, that government has started a bit in terms of giving a consumption boost in the budget, and RBI has done a lot in terms of providing adequate liquidity, and those are the foundations of a good growth journey, which we might see after 2-3 quarters. The results might be visible after 2-3 quarters. The only thing which keeps me worrying is US inflation. If because of whatever is happening, and if US inflation inches up, and again we head for a stronger dollar or a stronger US 10-year, then what happens?
Yeah, so I think the turnaround is happening now. It's not 3 quarters later, because you must understand that the government's spending got stalled in the first half of the ongoing fiscal. and a lot of it has come in the second half. So the turnaround is already happening. What they have done in the budget and the RBI's policy pivot will carry that momentum into the next 2-3 quarters. The second part of your question with respect to the US dollar, yes, that is obviously a concern if the dollar resurges as it did after the victory of President Trump. However, I think the signals are as follows. The current administration in America is very business friendly, and it is also very stock market friendly. So I don't expect them to do things that will actually derail the stock market. And including those, in that list, things that get included are things that can upset US earnings. So my instinct is that the US dollar, may have done its jig. So that's my assumption. But the risk that it comes back for other reasons is very much a concern for us as well.
Okay. I hope that answers. Any other question? We have maybe time for one more. Yes, please.
Question to Ridham Desai.
Sorry? Okay.
Hello, my question to Ridham Desai. Nowadays, what is debt to GDP ratio of India, China and US? Approximately. Debt to GDP ratio of India, China and USA.
Yeah, there is no comparison. India is at 140% and the US and China are considerably higher. Clearly there is a problem with respect to debt in both the Western Hemisphere as well as in China and Japan. And they have aging populations. So if you ask me, the long-term outlook on global growth is not very good. There is a debt demographic problem which humanity has not faced before, and it will unravel at some point in time. It's very hard to predict when these things take place, but there will be a moment when of reckoning that will come. India, on the other hand, and I'll borrow from what Dinesh spoke about earlier, which is that we are actually on the path where our debt to GDP will rise on an aggregate basis. There will be a shift in the mix. The government's debt to GDP will fall. The private sector's debt to GDP will rise. What is debt? Debt is essentially borrowing from the future, which is spending the next generation's consumption today. So America has already spent its next 3 generations. We're about to start that journey, and that is hyper bullish for stock markets. It will end very badly, but it will happen after this room has left the planet.
Okay,
Sorry, I may have assumed made that assumption, but yeah, I think most of this room would have gone by then.
Okay, which is a fair point. Okay, we have maybe time for one last question, guys. Okay, whoever has, if somebody has the mic here, the gentleman, yeah, whoever. Fine. Just give the mic, whoever, not a problem.
Hello. Very nice insights, but the only concern for the market today is that US markets have gone up considerably, and the valuation metric which bothers a lot of people is market cap to GDP ratio, which is about 207% higher than all the times in the past, even 2008 Lehman Brothers times, 2020 COVID times, dot-com bubble times. So that is the metric which even Warren Buffett follows, and a lot of fundamental analysts track that. So what's your view on that? Although we have a lot of growth triggers for the market, but the valuation concern, could markets still rise considering that valuations are so stretched?
Is this the question on the US markets?
No, I think the Indian market, the Indian debt to GDP. So
no, Indian market cap.
I said the valuations are stretched in USA, but there's always trickle-down effect on Indian markets also. So that's the global risk which could impact the Indian markets.
Global, yeah, indeed. Okay. Yeah, Rhythm, why don't you start? Maybe
so India's correlation with global markets has reduced a lot. And there are fundamental reasons for that, and we don't have time for me to go through all those reasons. But in technical terms, the beta, the relative sensitivity of Indian stocks to the world is now down to 0.4. It used to be 1.3. So we are less affected by this. But of course, if America were to enter into a bear market, it is unlikely that the rest of the world does not react to it. It will.
Okay. Mr. Thakkar, you want to add to that before we wrap up? I mean, do these ratios worry you? I mean, you've seen many cycles. Do these ratios worry you?
No,
so
not
much?
at all. I think currently, if I look at our ratio, it is like quite reasonable. And we have seen fluctuates from, say, like 50% to 150%. And Currently, it would be around 105, 6% something.
It's down to 100 now.
Yeah, so down 100. So I think we are reasonably priced that way. We are just waiting for that kind of trigger point when he starts investing, and we will chase him.
When he starts investing. Yeah, well, that's good to know. Okay. Well, Rhythm, the onus is on you to start investing and your clients to do that. But no. But thank you, all three of you.
See,
Thank you.
I'll make the final point. Every day, flows are net zero in the market. Flows don't matter. What matters is liquidity. That's different from flows. Liquidity comes from the confidence in growth. A moment will come in the next few weeks when people will say, oh my God, it's looking so nice. We are buying stocks.
आपके मुंह में घी शक्कर सबके मुंह में घी शक्कर because you three have sounded so bullish. A round of applause for our lovely panel here. Thank you so much for joining in, gentlemen. Really appreciate your time. A past, present and future of the Indian markets and the Indian investor. Lovely talking to all three of you. And thank you all of you for listening.
Big round of applause, everybody. Please, let me hear you.
I think that answers your question, Alex.
It-
Tezi kab aayegi?
It does. And also, of course, Rhythm spoke about the fact that most of us might be gone from this room when things turn, but who knows? Well, we've got representatives from the pharma industry right here. Who knows, in 20 years they'll find something that will help us live forever. Let's wait for that to happen. But in the meanwhile, let's talk about Make in India. Because we've given the market perspective, we've spoken about how the near term looks, and Rhythm Desai certainly is bullish. I don't think he ever stopped being bullish, but then he's given you the reasons why he is right now. The Make in India mission, and I'm sure you know this in this room, has completed its first decade. And the seeds that were sown years ago are now bearing fruit. The focus for many Indian companies is now shifting to encompass a wider global market. They're now aiming to not just make in India, but also make for the world.
Absolutely. And to talk about the opportunities and the challenges for India Inc. and to talk about whether goals for Make in India for the world can be achieved sustainably, please put your hands together for the next power panel. The participants represent three unique opportunities in manufacturing, pharmaceuticals, textiles, and semiconductors. Deepali Goenka, CEO, MD, Wellspun Living Limited. Dr. Habil Korakawala, Founder, Chairman, Walk Hard Group. Rajesh Sharma, CEO, Keynes Technology India Limited. Please make your way to the stage. Joining them today is my colleague Tamanna Inamdar. Ladies and gentlemen, please put your hands together in welcoming them on the stage.
Please. Ma'am, बैठिए, please. I think Neeraj has left his phone here. Alex, Neeraj has left his phone. Okay. Welcome everyone, and thank you so much. Now, let me set the context for our conversation today. India's manufacturing sector is just not only an economic engine, it is the foundation of our journey towards Viksit Bharat. Contributing around 17% to the nation's GDP, manufacturing is set to play a transformational role in India's economic future, with the government ambitiously working to raise the share to 25% in the near term. The Make in India initiative, which has completed a decade, has been pivotal in fostering and strengthening India's global manufacturing status by enhancing foreign direct investment, skill development, and updating manufacturing infrastructure. In fact, thanks to production-linked incentives, or the PLI scheme, as we all know it, FDI in the manufacturing sector has surged by an impressive 76%. But India's vision now extends beyond Make in India. It is Make in India for the world. With shifting global supply chains, India has emerged as a strong alternative manufacturing hub as companies seek to diversify and reduce dependence on several nations, including China. A shift that has accelerated with Donald Trump's return as the 47th US president and his renewed focus on trade policies. The evolving landscape presents both challenges and unprecedented opportunities with this impressive growth potential. Our panel today represents 3 unique voices in manufacturing to discuss how India can sustainably achieve its goals and become a global manufacturing powerhouse. Let me welcome Dipali Goenka, CEO and MD, Wellspun Living Limited, Habil Khorakiwala, Founder Chairman, Wockhardt Group, Rajesh Sharma, CEO, Keynes Technology India Limited. Now, in this panel, we have 3 distinct sectors, but all of them very, very crucial to this dream of Viksit Bharat. Look at it this way. Every time there is a requirement, it's the private sector asked to come up, put in the capex, create the jobs, and of course, drive us to Viksit Bharat. Let me start with that thought with you, Dipali. This claim or this assertion that the road to Viksit Bharat is paved by the country's manufacturing sector. Would you agree with it?
I totally agree with that, because when we talk about and when I talk about manufacturing, and we are talking about 1.4 billion people, and 30 to 40% of that is the youngest population in the world, definitely it is the path towards Viksit Bharat. When I talk about manufacturing and when I talk about Wellspun and home textiles, let me tell you one thing. When you talk about the white collar and tech, that is another aspect for it. But the deployment of the grassroots level will be done by manufacturing, like example, textiles. Because after agriculture, it is manufacturing in textiles that deploys the maximum people. And I think the highest, and after, I think it is one of the highest revenue earner as well for India today. So yes, manufacturing will be an integral part of what India wants a journey towards Viksit Bharat, but there's a lot more to be done there, Tamanna. And I think I leave at that right now as we speak forward.
I think it's also important to set the context of why manufacturing is so crucial. From the last 75 years plus of India's independence, we have made our name in the world as a service sector powerhouse. We're famous for the back office of the world, the call centers of the world. It's time to shift gears. And Dr. Khorakiwala, let me come to you on that point. Can we really continue to rest on the power of our service sector as AI threatens some of those industries? Why has manufacturing become so crucial? And you see policymakers shifting gears as well.
One of the aspect of our industry, pharmaceutical and manufacturing, is ours is a very science and technology driven industry. So when you talk of our industry, manufacturing along with innovation is a very integral part of our industry, and our India's success of supplying medicine to US and other parts of the world is a result of a technology input over the years. And I believe that the health sector and medicine and drugs are undergoing transformational change over the years, and the future is very unlikely to be the same like the past. And there is going to be major technology shift from chemical-based entities, which is today bedrock of our pharmaceutical product, to moving towards the biological-based drugs. So new drugs which are recently approved in the last 5-7 years, 70% of them are of biological origin. So I think this is the area where already India has a base, but I think we have to build up the kind of strength we have done in chemistry, in biologics in the years to come to be successful. The other important aspect is that in our industry, if you have to make a mark in the world, 2 things are required. One is ours is a intellectually driven industry more than the people driven industry. So you need scientists, you need, and the IT certainly helps. AI and IT will certainly help the future of our industry. Therefore, what is important that we need to establish a good base where there is only a little beginning has been taken place, is finding new drugs. And therefore, research and innovation will be very important if India has to be recognized as a worthwhile a pharmaceutical company other than supplying medicine.
So, Sir's super hit Zenic is something that everyone's talking about, new innovations coming in from across the board.
Oh yeah, we have invested for last 25 years to finding new antibiotics. And today I can, without exaggeration, can say that we are in antibiotic space on drug discovery. Probably we are the most successful drug discovery company anywhere in the world.
That is amazing. That is amazing. Remember, we are going through a phase of antibiotics that are getting more and more resistant. So to put in context, an innovation coming out from India, from an Indian company, of an antibiotic which is at the forefront becomes very crucial. The other aspect of innovation, and Mr. Rajesh, the industry that you are in is so exciting. What's also exciting to hear from you is what happens when there is government and policy push. So, for example, the PLI scheme, and how much of it has ensured that in your space, you can charge ahead and compete with the rest of the world?
So certainly, Tamanna, first thing I'd like to say, actually instead of Viksit Bharat, we should call it Reviksit Bharat.
Reviksit Bharat.
Reviksit Bharat, because if you read the history of India, in the, AD 1 to 1000, India had almost 33% of the world's GDP share. And we are talking in 2047 to reach that level again. So if you are talking of that, and that's where something where the government is working towards, it's very important for the success of scheme like this where the industry leaders do come together. In addition to that, the government policy makers have to join hands together, very strongly supported by the financial markets. Because without financial institutions coming forward, a collaboration between these three segments is extremely critical for manufacturing to really become large in the country. Coming to your specific questions, certainly PLI has given a great push to the Indian manufacturing. That was one of the areas, where when China was growing into the manufacturing side, the support from the government was very, very critical. Now, if you look at the infrastructure development, where the ports, the highways, the supply chain, etc., the logistics is improving, in terms of integrated supply chain, which is very, very crucial to the whole thing. And then the talent pool, which is very critical. Now, Deepali already talked about the age of, the average age of the people in India, with, average being between late 20s and early 30s. That workable age of employees that are going to be in India is very, very important for manufacturing segment. So the PLIs have certainly given a great push to the manufacturing in India, specifically in the scheme one of PLI, whether it was IT, whether it was telecom, has been a great opportunity for companies like Keynes and the other electronics manufacturing company to gain the advantage of that and make better offerings at competitive price to its customers.
So the EMS story is well known from a manufacturing perspective, from a stock market perspective, and we'll go around again to the next point, and I'll come to you, Rajesh, on this. When you hear about reciprocal tariffs from the American perspective, what does it mean for you, considering your company is now also foraying into semiconductors?
See, of course, the importance of semiconductor was very much realized during the pandemic time.
Yes.
When the whole world was completely shifting to the technology, the schools working from home, the jobs happening from home, the need for your display fabs, your mobile phones, your tablets, your laptops, everything was in short supply. And it's not just India, the countries around the world focused on their semiconductor policy. It's not just that the India alone set up an India semiconductor mission. The many countries who actually established their specific semiconductor missions, making a push for the semiconductor policy of their country so that they can support the increasing demand for the electronics and technology for the country. So there could certainly be tariff pushes that will come up from the US and other countries. But I think more than reciprocal, the government has to work towards the bilateral tariff system with the countries, and that because it's not that everything either India could manufacture or China can manufacture or any other country can manufacture. It is, it's a global village today. We all talk about global village. Unless we all work together with bilateral tariffs, bilateral system, that will be very, very important for the success of manufacturing.
Which is why the next few weeks become so crucial from the perspective of the manufacturing sector in India and the world. Dr. Khurakiwala, when you hear about reciprocal tariffs, what is your response? Are you worried or are you not?
See, our industry, pharmaceutical, basically to make a change in formulation, for example, takes roughly 3 to 5 years. So from that context, there is, unlike steel or cement, you can switch suppliers at a day's notice. You can't do this in our industry. So the view I have is short term. Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
Okay.
But long term, one doesn't know what happens after 3 to 5 years.
Yeah. No, let me repeat that. This is interesting. Any tariffs that are imposed on Indian companies will impact American consumers, not Indian companies, because we'll just pass it on.
That's right.
Yeah. So you know, this is an interesting perspective. I suppose, Dipali ji, the concern is that does it make us less competitive? Because if it's reciprocal tariffs, then from that perspective, we are seeming higher.
So first of all, I think let's keep the tariffs aside, but let's talk about India in a position for me as a textile hub or the manufacturing hub. I think the world needs India, and as we're speaking about Viksit Bharat, I think India has been put on the world map and is being spoken about in all the boardrooms across the globe of all the countries for being an integral part of that supply chain. So for when we talk about America, I think, and when I talk about Welspun as a company, as an organization, I mean the complete integrated supply chain, one of the biggest manufacturing factories or company this side of the world, apart from China, creating the entire supply chain and the serviceability for all the retailers globally, and having more than 42 patents in home textile. Wow. I think I can just tell you one thing, that while we talk about the tariffs, I think, first of all, I think it's going to be more bilateral, because I think when we're talking about two countries, they've already come to a conversation where they're going to be talking about growth in both the countries, and it's going to be beneficial to both the countries. So I think for me, I'm more positive about it. To Mr. Khurakwala, when he talked about it'll be passed on to the consumer, for us in home textiles, it is a very small part of that wallet share where, we are that towel or a sheet or that rug that they use, and it is very, very sensitive.
Yeah,
so I think it will be something that we will have to work mutually. But however, coming to Tamanna, coming to the tariffs, I think for India and US, both of them need each other, and I think the bilateral trade will be something that will be where we will be talking about more than anything else.
You want to come?
I want to add a point here.
Yes, of course.
See, if you look on the semiconductor side, the US has predominantly and has a very large share of the design-led semiconductor. The manufacturing focus was always on the Far East Asia, China, Japan, Korea, Taiwan, and countries like that. And then the supply chain was completely dependent on China and Taiwan. So with that as the scene, so what we are looking at is shifting manufacturing into India. And if you look at the design workforce, almost 20% of the design workforce in semiconductor and electronic space is Indians, whether based out of India or based outside of India.
They might as well do it here.
Yeah, so that's what would happen. So there's a lot of shift happening on design-led manufacturing and also on the manufacturing per se in the country.
I just would like to add, as far as pharmaceutical industry is concerned, we are one of the largest supplier of medicine worldwide.
Yes.
Our industry is about number 3 in terms of export earning today, and we supply 40% of medicine the American consumers uses.
Wow.
60% of vaccine worldwide it is supplied, and that is same happened in COVID-19. So it's a very, very significant player. We are already there. And therefore, from that point of view, if we keep up with technology and science, as we have done in the past, we can always aspire for more.
We should acknowledge the role of Indian pharmaceutical companies in supplying affordable medicines across the world to nations and people who have not been able to afford them. So that is a huge contribution of the Indian pharmaceutical industry, and that is something that we should acknowledge. But Dipaliji, since we were talking, and this is something Rajesh brought up, about being an alternative to China. So let's address the dragon in the room. We keep talking about India plus one or India versus China as an alternative to China. How do you see us getting there? In your industry, are we able to capitalize on what we are seeing in neighboring Bangladesh, which has been a textile hub and is undergoing some issues right now?
So, we always speak about China plus one for India, but I think the important aspect, let me point out here, is that, we are talking about the youth and the skilling here. There's a lot more to be done here. The government has leveraged, government has given us the opportunity for Samarth, even in the kind of budget when you're talking about government is talking about upskilling, skilling, the whole Gati Shakti being the logistics, because that's an integral part of the entire supply chain, the PLI, as we spoke about. There's something that we really need to do is about the culture in this country and the speed to market, because it's not just about the investments in manufacturing, it's the investments in that, the manpower and the people. And I think there's something that we need to really look at as if we compare ourselves to China. There's lots that we've done, but there's still lots more to be done. And for us at Welspun, we deploy around 25,000 people. And if we are talking, and I think as corporates, and we had spoken earlier, that it comes down to the privatized sectors to look at capex, look at how we are, taking on that, burden or an opportunity to take that forward. I think at Welspun, we actually are looking at skilling more people, looking at investing in technology, Industry 4.0, AI, and other investments. So while we talk about China, I think we ourselves are our own brand ambassadors. And I think at Welspun, we believe in that when we take that baton forward. And whether it is the supply chain analytics sitting in America, or the warehousing doing the vendor managed inventories, or working on the patents or different kind of innovations, I think that's going to be a very important aspect. Now, taking on the opportunity of investing in capex, investing in whether we need to make our fashion towels here, or fashion bedding, or it could be the utility bedding, setting up even the pillow plant in America. I think there are interesting things that I think as corporates we'll also have to take on. So while the government will leverage, will give us some more opportunities, but I think it is on us. How do we take that forward?
No, well said, very well said, in terms of what the role is of the private sector. But let me just come to you again on the point you made of what we need to learn in terms of quick turnaround. And if I can ask you to elaborate on that, because it's not as if there is no appetite for Indian goods. It's about whether we can deliver in the time and speed that is required.
So again, I think we all will agree here on the panel as well. I think the critical thing is about technology and digitization. And again, I'll just give a simple example of what we do. I have warehouses in America. For certain retailers, I do vendor managed inventories. That's like literally writing the POs for them. Actually analyzing what the consumer is wanting and actually integrating the entire supply chain together. For all of us sitting here in this room, the key thing is that now it is about how you are going to contribute towards the Viksit Bharat. It's not just going to be the government working with you, but it's also going to be how you are going to be working towards that as well.
Let me come to you, Rajesh, on the point of should India be looking at, or should Indian industry be looking at itself as an alternative to China, competing with China? And is this moment ripe for it? How should we position ourselves in a global scale?
You see, in my opinion, we should stop looking ourselves as an alternative to China. We have our own strengths. We have our own market in India and outside of India. And that's what Indian Inc. should be focusing on, delivering with your capabilities. See, one of the advantages of how China positioned themselves was on scalability. If I look at electronics industry or semiconductor industry, if we talk of the factories in China and Taiwan and these places, they run into square kilometers. We talk about acres. If you have a 500-acre factory, we think it's like really big. And there we talk of, factories of Foxconn, which runs into square kilometers.
Right.
They talk of hiring 4 to 5 lakh people in one single factory.
Wow.
And we are talking of employment of a few thousand or maybe a few 100,000, that's it. So that is a huge opportunity. The scalability can be delivered.
No, so how do we deliver that scalability? How do we get there? Because this is, I think, the nub of the entire conversation. Everyone's clear we are getting to Viksit Bharat. Everyone's clear manufacturing is the driver. Now the question is about how.
See, the OEMs around the world are looking at India, so they are looking at Indian manufactured goods. Ever since the pandemic was over, the way we have been receiving the inquiries from some of the largest OEM brands around the world in various segments. When we talk about electronics, it's not just the white goods or the mobile phones or laptops, etc. We talk about automobile industry completely. We talk about electric vehicles. We talk about medical devices. We talk about railways. We talk about aerospace. We talk about defense. We talk about outer space.
Wow.
So these are 9 or 10 industries which Keynes alone caters to in the electronic space. So it's every segment that is open and available for you to explore.
Let me just add on here, being the thought leader. I think we just can't be followers, and we can't just be, doing just the manufacturing, but I think leading. And I think that's going to be a very key thing for us to work on, now, whether it's textiles or, the semiconductors or pharmaceuticals, as, we are talking about. I think it needs to be that thought leadership that India needs to provide to lead also towards the Viksit Bharat.
Yeah, I mean, an example of the world as sustainability. I think one of the biggest examples, and Dipali, you alluded to this question earlier. When we hear from policymakers, we hear from economists, there are two things that come in time and again when we're talking about our economy currently. Why is private industry not investing enough? Where is the capex? The second part is, are enough jobs being provided? Now, I think entrepreneurs in this country are some of the most resilient people because you have to go through so much to be successful and move on. That it takes real grit and determination. But the ask today is, please invest more, please provide more jobs, please provide higher paying jobs. What is the response to that ask? And I'll start with Dr. Khurakiwala on this.
It's a tough ask. One aspect basically is that as industry, at least I can talk about our industry, as industry, science and technology progresses and you move to a higher level of doing things with more science and newer technologies. And we are highly regulated industry in India and worldwide. One of the things I continuously observe, there are regulatory mechanisms and regulatory people who manage this hasn't changed in the last 30 years. So that itself creates a dissonance, what is needed to be done and how it is to be done. Many times the regulatory bodies are not aware of a new drug or innovation.
In India?
In India.
Okay.
How to be managed. So we generally go by what happened in Western countries. If that is the same, okay. If something innovated in India, they have 100 questions to ask on the same subject. So that is a very massive structural gap we have in the country. And that needs to be corrected. Maybe this is true in other industry also. I am not aware. But this is one area which needs to be corrected. Second aspect is in terms of capabilities. From a regulatory perspective, it is available plenty in the country. Because of the kind of system and the rules and approaches they have, they are not able to access those competencies within the private sector which is available. So I think this is a very major handicap which will be there for innovation and new work done, because it takes awfully long time. I'll just give you one or two examples to illustrate. See, if I have to do for a new drug a phase 1 clinical trial, I go to Netherlands, I need ethics committee clearance. If I go to US or Europe, a 30-day period. And if I don't hear, I go ahead and do phase clinical trial. Here it is 3 months, plus after 3 months they can raise questions, so it gets 6 months. Now in a new drug at every stage, there are so many stages of delay takes place you eat away of your patent life and you become non-competitive. So many of us chose to get it done outside India, even though we have capability to do here.
No, so that's an important illustration of how things can, make business easier. Ease of doing business can be improved. But then let me come back to my core question on CAPEX. So my question is on CAPEX. The ask is for Indian industry to invest more and invest more domestically. Will we see that cycle?
Yeah, I think so. CAPEX, in fact, as far as the pharmaceutical and chemical industry is concerned, the need for CAPEX is limited. But when it comes to chemical part of it or biological, the need for CAPEX is high because it's a fairly complex technology and facility. And I think people do invest significantly in CAPEX. But our industry, whatever may be reason, is not a kind of most industry where your capacity utilization is important. I think we work on keeping a fairly wide margin of capacity and the demand so that you meet your demand every time.
Yes, your perspective.
No, I'll just say, so when we talk about CAPEX, I think the important aspect, and I don't know about the other industries, but I think the key thing would be about even investing in the indigenization of the supply chain. Because a lot of things when we talk about, and let's face it, when we talk about manufacturing and the key ingredients still come in from China. There are a lot of things that, India still is dependent on a lot of other countries for the supply chain. And the important thing would be when you're talking about CAPEX, CAPEX will be very should be done, whether it's for automation, technology, or also indigenizing the supply chain. For example, I'll just give you a small example. We set up a flooring plant in Telangana. Our 80% of our supply chain was dependent on China. Today, I would say that it's reverse because we set up the entire ecosystem on the whole supply chain here because it is one of the it's the first time that a flooring plant of this size was set up in India. So I think for all of us, when you talk about CAPEX, I think it is relatable. I mean, it is related to what you need in your field. But I think fundamentally, whether it's technology or whether it's anything, indigenizing the supply chain will be a very key thing. And for that, I think the investments will have to be done. The other thing is about manpower as well. So when you talk about that intelligent manpower or whether that skilled manpower that the world is looking at, how are you investing in that would be also very key to what you do.
I think on the point of manpower, we have a huge opportunity here in the manufacturing sector, don't we, Mr. Rajesh?
Absolutely, and as what Dipali said, India as a country, if you look at the skillful talent available, there are more than 15 lakh engineers passing out every year in India. Now that is the talent pool that's available in the country, which can be used in-house, which can also be used for global servicing. Now when we talk about specifically coming back to your core question of CAPEX investment, see largely when people talk about CAPEX, we always talk about tangible assets, whether the factories are coming up, plant and machinery being invested or so on. If you look at semiconductor industry, if you take the top 5 players in semiconductor, 22% of their revenue is invested in R&D. That is CAPEX. That is the intangible that is getting invested for the future growth. And that is where the electronics industry, where the EMS industry and the semiconductor industry is certainly investing a lot of money in CAPEX through the intangible route, which also enhances the employability of the skillful talent that's available. So as I said earlier, 20% of the world's design workforce of semiconductor are Indians. So that is Indian talent and Indian investment going in there.
That's amazing. So if I were to ask you, and let me start with you, Rajesh, that when we're talking about building this path to Viksit Bharat and all of these components come in, we want more scale, we want to service the world, we want to create jobs internally. What are the 2 or 3 things that we need to do to move towards that from an industry perspective?
See, one is certainly the speed of delivery, which Dipali already talked about. The speed of delivery is very important. And the global logistics, the global supply chain has to coordinate with that very strongly so that the speed of delivery can be done. Innovation is another very important aspect because we can manufacture. The customer can give me any design, I can manufacture and supply. Unless we focus on ODM and do our own designs and OEM related activities in India. That is what is to contribute to the global needs, create the need for those products around the world. Today we are only copying the products that the world need. But if I can start creating the products that I can make world need, that is where the shift of global manufacturing to India will be.
I mean, when we have the next DeepSeek or the next manufacturing innovation, I think we're pretty much there in a lot of spaces, aren't we, Dipali ji? We're moving ahead with innovation as well. Like you said, thought leadership is where we need to take it forward.
Yeah, I think, so, you know, there's a lot more yet to be done, but I think the important aspect, and I'll take it from my industry and talk to you, like for us at Welspun, I think when I talk about thought leadership, this is what we look at. Whether it's the farmers who are the integral part of that entire supply chain, how are you looking at the traceability that comes in? When you have the MSMEs, because I'll tell you we work with more than 200 or 300 MSMEs in the whole ecosystem, how are they being supported in the, because they are the bedrock, whether it's in the credits or whether it's in the terms of technology upgradation. I think these are very critical part of what we need to really look at. And I think being the industry first in the terms of solution providing, I think could be a very key thing, what India can do. And I think that's what Welspun is maneuvering towards. And I think the important aspect of saying that being that thought leader, being that industry first, and it's not just an OM sitting out of India, it is a true manufacturing prowess who is industry's first or the world's first, and who can disrupt the world, as you gave an example of DeepSeek, is where it is a journey towards Viksit Bharat.
Amazing, amazing. Do we need to move towards being the cheapest in that case? That has always been the question, right? When we compare ourselves to large manufacturing hubs, and Dr. Khurakiwala, most efficient, cheapest. Is it time to change that rubric?
I think affordability is important. I'm not too sure being the cheapest. Because I think Indian drugs are very affordable worldwide. And in fact, 50% of Indian industry is export today. So we are no longer an India-based industry. It's a global industry, as I mentioned earlier also. But the challenge for the industry would be new science and new technologies absorption. Because that is changing quite dramatically the contour of the industry in the future. So one is moving towards 2 or 3 new sciences. One, I talked of biology as a new science. I think one would see more and more personalized medicine coming into as a new science with genomics and all these processes helped by the speed with which the IT and AI is accelerating the change and the progress.
How much of AI are you using right now?
In research, we are not using too much of AI at the moment, but other part of organization, one is using to some extent. And therefore, one has to see to what extent AI will help, but it accelerates the process. The real innovation, still you require people, because I don't think people have yet to replicate the uniqueness of our own mind and intelligence.
No, definitely not.
So a repetitive aspect, yes, AI can help you a lot extent, and a lower level of intelligence, not the very high level of intelligence you require for drug. The other area is the whole new science emerging in the stem cell area, stem cell research. And I think newer medicine will come out of that knowledge. Already a few drugs have started coming in. They're extremely expensive, but that is how the new science would move. Mainly because both genomic and stem cell acts very differently than the earlier existing treatment, because they can bind to a specific cell and treat a disease. So obviously this will all add up to a few more years we will live over the years.
So longevity. If India can be at the forefront of the longevity movement, then we've cracked that code.
That is right.
Yeah, amazing. Dipaliji, on the use of AI, and because I'm just wondering, that's going to be the one parameter we need to compete, right? Or do we? We have a large population.
Yeah. I think AI is a very important aspect, and there are these conversations about they're going to disrupt, the entire space in the terms of people and jobs. But I think, as Mr. Khurakiwala, Dr. Khurakiwala just pointed out, I think AI actually will facilitate a lot of things. I'll give you a small example, and it is, we've been talking about technology, but I'll give a small example in manufacturing. I have towel counting, and we do millions of towels every day. So, that towel counting leads to human fatigue. So we have AI installed there. So as a result, the human fatigue is not there, and my, index of right first time is over 98%. So, these are the things that actually help you to facilitate a lot of things. The ability to predict, the ability to see. I'll give you a small example what we leverage in India. Just quick, fast one. In India, in one of the catchment areas, suppose my ticket size of buying a towel or a sheet was around $2,000. We, after a lot of analytics, found out that no, the ticket size could go up to around $4,000 as well. So these are the things that can enable to actually speed up business or an opportunity. So everything will have to coexist together. I think the fear of letting go people, or fear of, but I think it's going to add on huge opportunities, what we can see.
Definitely. And in your sector, I suppose, more than ever, you will have to inculcate artificial intelligence.
Yeah. So certainly, yes, Tamansi, I look at it two ways. The AI being used in the manufacturing technology itself, but AI also being used in the product offering to the customer, because both are as critical. Now, if I talk of both the aspects, now when we look at these very large factories in China, Taiwan, etc., you have a single shop floor of 200,000 square feet, maybe 50 lines of SMT operating, being supervised by 1 or 2 engineers maximum. Oh. These are called dark factories or light out factories. They just stand in a corner and see what's operating. AI controls the manufacturer. They see whichever machine stops, they just go and address that machine. So that is the importance of AI in the manufacturing side. Now, when you look at AI on the product offering itself that's being made, a couple of spaces where Keynes has entered into. One is the smart metering solution. Right now, we're talking about smart energy meters on the electricity side, where it supports the government to ensure that there are no leakages, the revenues are recovered well in time, but also at the same time the opportunity that gives for the manufacturing side, not just for India but around the world. Second thing is we have seen about the safety requirement in the railways. So we have acquired a company based out of Europe, which is AI-based sensor technology is used for the railway safeties.
Okay.
So that certainly minimizes the incidence of accidents that can happen, the property leakages that can happen on the railways network that is in the place. Yeah. So AI is certainly very, very critical.
AI is definitely going to be included. As we wrap up this conversation, let's start with closing comments. And I'll come to you, Mr. Rajesh, on the thoughts of India as a manufacturing hub, manufacturing as the key push for Viksit Bharat. Is this a distant dream or a reality waiting to happen?
So I would make 3 statements for this. For me, it's very clear on India being a manufacturing hub. So the 3 statements are, one is, it's not why India, it's why not India. Second is, if India can become the manufacturing superpower, it's not if, it will how fast it can. And third is certainly India is not an alternative to China or manufacturing. It is going to be the global manufacturing leader.
That's amazing. A round of applause for that amazing statement. But Dr. Khurakiwala, your take.
I believe India is already a very important player in the world. And this is all driven by manufacturing. And one of the uniqueness of our industry is it is not a mass-produced activity, because you have so many drugs for so many disease treatment. And that gives us a very unique advantage vis-a-vis China or any large Western countries. We are not in a mass production like many items. We are on a small product, and therefore our ability and agility to deal with the complexity of changing and other things is not only it is driven by new technology of AI and other things where you can reduce your cost and operation, but our ability to supply a large number of products. And that advantage is a very significant advantage India has. And this is the one we should continue to capture, innovate in our technology, and this flexibility which it offers. And we are very good at that.
Excellent. Yes, ma'am. As we close, do you agree with that statement? It's a matter of not why India, but why not?
And I totally agree and endorse to that. Let me just give you one thing. I remember the time when we set up the first terry towel plant in India in 1993. They didn't believe that there could be a beautiful towel be made in India. To being the fifth towel in America today, every fifth towel made used in America is made by Welspun. I can tell you there'll be 100 more companies that will be here who will be making world-class products, whether it is going to be in the terms of textiles, apparel, fashion, and also being on that table to contribute towards, the thought leadership is what I can say. So I can definitely say India's era has begun, and it is that journey towards that Viksit Bharat we will see.
Wow, excellent. Thank you so much to all of you. Thank you so much to all of our panelists for speaking so clearly and eloquently and laying out the roadmap really of what we will see to Viksit Bharat 2047. With that, it's a wrap on this session. But before we exit, just request you for a quick photograph. Thank you.
In a sector that is going to be at the forefront of India's growth journey going forward. All right, don't leave the room. We've got lots lined up for you. We've spoken so far about the markets and the direction that they're heading. And I thought that the insights that you got from that first panel are quite encouraging. The turnaround is not in the offing, it is here. And it is underway. Don't miss the bus is the message that I took from that. Manufacturing, you heard from three very core participants in that manufacturing process in India. Certainly the pharmaceutical industry, of course, the textile industry, and the future, which is semiconductors, and hopefully we get more of the slice that you have that is currently concentrated in certain pockets in the world. It's going to be a very core leg of the manufacturing journey going forward. Now, what do you have lined up for the rest of the day? Of course, we're going to talk about certain insights that you can get from the mutual fund industry. We're going to talk a little more about how to open up the opportunity to invest to a lot more people. Currently, it's concentrated, if you think about it, in a very small part of the addressable market. So how do you widen that? We've got all of that lined up for you. But we've spoken about manufacturing. I do want to draw your attention to the fact that agriculture was a predominant contributor to India's GDP for a very long time. It has declined in the recent past, but it remains a very, very integral part of the Indian economy. And so it's therefore important to talk about India's farmers and providing guidance and insurance for their future, which is critical in keeping this sector on the growth path. May I now call upon the stage to deliver his keynote address, Mr. Nataraj Nukkala, who is the founder and chairman of Shema General Insurance. Sir, please.
Good afternoon, distinguished speakers, delegates, and esteemed guests. It's a privilege to stand before you today at this pivotal moment in India's journey towards becoming a developed nation. Viksit Bharat 2047 is not just a vision, it's a commitment, a collective responsibility, and an opportunity to shape a better future for India of tomorrow. As a founder of Shema, I'm deeply invested in this mission, not just as an entrepreneur, but as someone who has seen firsthand the transformative potential of financial power empowerment in rural India. So at Shema, we are pioneering technology-driven, affordable, and most importantly, hyper-local rural insurance. Our insurance models impact where it matters the most. By providing customizable insurance solutions, we are ensuring that rural communities can withstand income shocks. So Shema aligns very well with the Government of India's climate action goals like National Mission for Sustainable Agriculture, Biodiversity, and most importantly with our regulators' mission of Insurance for All by 2047. The Bima Vistar program of the IRDAI to minimize the protection gap is a critical step in this direction. So let us work together to build a Viksit Bharat where every business, every citizen, and every idea finds its place in a stronger and more resilient India. Thank you all.
Thank you, Mr. Nakula. As we all know, climate is the risk that has become, climate as a risk has become a specialized field. And our farmers, who are the frontline warriors, face its consequences first and foremost. They require tailored, innovative insurance solutions to navigate these challenges. To talk more on this, let's welcome in Mr. Rajesh Nani Dasari, Executive Director of Shema General Insurance. Joining him on stage is my colleague Tamanna Inamdar, who will be leading the discussion. Ladies and gentlemen, please join me in welcoming them on the stage.
Hi, Rajesh. Looking forward to this conversation. Okay. All right. Welcome back, everyone. I think the next conversation is one that is a crucial one, because India's path to Viksit Bharat, and we're talking about Viksit Bharat by 2047, is deeply linked with the prosperity of its rural economy and agricultural sector. How much ever we talk about urbanization, an economy around delivering everything in 10 minutes, the fact is over 60% of the population resides in rural areas, and agriculture contributes to the livelihood of millions. Sustainable growth in this sector is an economic necessity. A key challenge facing the agricultural sector right now is that, of course, of climate change. It's a reality we're all facing. We see it some parts every year, whether it's erratic monsoon, rising temperatures, droughts, extreme weather events, which threaten crop yields and farmer incomes. Now, these risks make resilience building more critical than ever. Expanding access to insurance cover for farmers then becomes a key pillar of this resilience to protect farmers from climate uncertainties. Government initiatives are there, of course, the Pradhan Mantri Fasal Bima Yojana. This has made strides in improving coverage to rural India, yet much more needs to be done. And this is our next conversation. I have with me Mr. Rajesh Nani Dasari, Executive Director at Shema General Insurance, that seeks to empower Indian farmers by protecting them from financial losses, especially those caused by climate change. Mr. Desari, thank you so much for speaking with us today.
Yeah.
Let me begin by asking you about the premise of agricultural insurance, because we are a nation that knows we have to pray to the rain gods.
Yeah.
How does that work for an insurer where uncertainty is a problem?
Yeah. As an insurance company, uncertainty is what we would want to cover, right? Because insurance company, it's all about ensuring that we cover the risks of the customers appropriately, right? And in this case, like you aptly said, one of the biggest unknown for the farmer is weather. That's the one thing that they just cannot control whatsoever, right? But they very well understand that that's something that they would want to mitigate, right? So we have a customer that understands the risk, that is looking for a solution, and they know that insurance is one of the ways in which that can happen, right? So that's how we thought, like, probably that's a place where we would want to play. Because today, if you see, the market is there, because there are about like 38 crores of acres of arable land in India, right? But only 30% of it is insured, right? And there aren't any companies that are focused specifically on providing customizable products to the farmers directly.
No, 1 minute. Let me go back to that.
Sure.
You're saying only 30% of agricultural land, or farmed land in India is insured.
Yes, as of now, correct.
So that shows you the extent of people whose livelihood depends on farming, completely dependent on vagaries of weather.
Absolutely, yes. And most of them are part of the Pay program, like you said, right? Because before that, the awareness of insurance among farmers, it's not as high. And definitely IRDA has, with all these programs, right, has raised that awareness considerably. But still, there is a lack of having customized products that a farmer should be able to opt in versus just having to go with the flow is lacking at this point in the industry. And that's where we are trying to make a play using technology as our key focus area.
So how do you go about this? How do you go about this mitigating risk? Because that is a big part of the insurance bucket, right? You have to insure premiums, you have to mitigate risks, and there is already a large government-run program. How do you segue and how do you dovetail rather into that?
Absolutely, very great question actually, right? So the government program definitely helps, right? But there are a lot of perils that are still very local, like what Nataj was saying, right? What we are looking at is providing customized products that are hyper-local, right? When I say hyper-local, the perils are not consistent across India, right? There are about 127 different climatic zones in India, and each climatic zone has its own kind of vagaries involved in there, right? And if you look at, say, coastal Andhra, cyclone is the major peril, whereas in Rajasthan, sandstorms are a big issue, right? And one of the perils that we cover is animal attack. Even within that, between, say, Haryana, where Nilgai is the biggest concern, whereas in Kerala, elephant is a bigger concern. So there is no one-size-fits-all product that's available for covering for all the farmers in India. And that's what we are focusing on, wherein we would want to provide customized solutions which would help the farmer to choose exactly what they want and be able to protect their livelihood.
No, so this is very interesting. Give me a little bit of detail and example. What would be the customized solution for an agriculturist, for a farmer who wants to protect themselves from a Nilgai attack?
Yeah.
You have no idea when the animal is going to come.
Absolutely.
Even they can put up a fence.
Yes.
So what exactly are you doing and how are you protecting them? How does the mechanics of that work?
Perfect, right? When we say protection, we are talking about the loss, right? We are not talking about protecting the farm from the animal attack.
My point exactly. This is a likelihood which is very high that this will happen. The chances of this happening are very, very high. A sandstorm in Rajasthan is a very, very high chance.
Yes, absolutely.
Likewise for a cyclone in Andhra Pradesh.
Perfect, right? That's a very good question. So that's where technology comes into picture, right? So the first thing that we do is we look at all the past data, right? Based off of which we develop our own machine language models, which is used for pricing all these products, right? If, like, say, for example, cyclone coverage in Andhra Pradesh would cost you more versus cyclone coverage in Rajasthan, because the likelihood of that happening there is less.
Similarly, Nilgai coverage in Haryana, the cost of that would be higher there versus Nilgai coverage in Kerala, because there is no risk there, right? So we have our own internal algorithms that we use to figure out where we want to focus, what kind of risk that we want to focus in, and how we would want to price it, to your point, right? That's the first aspect. The second aspect as an insurance company is for us to distribute the risk, right? We don't want to be focused in just one area of the country where, let's say, our complete revenue is coming, say, from Andhra Pradesh for cyclones, right? Just one hit of a cyclone, the insurance company would be at risk, right? So we would want to make sure we are covering customers across the different climatic zones so that we are distributing our risk and not one event is going to impact the company.
So let's come back to the point about the 30% that has agricultural insurance. One would presume a bulk of this is government push. Private would be a smaller portion, and if those details can also be shared. How do you go about customer acquisition in this case? Because think about it, there is a government-run program. What is the advantage you offer, and how do you convince farmers to go in for a product like this?
Yeah, initially that was a question that was raised to us when we were pitching this to the regulators as well as the other investors, right? But you'd be surprised, when we just did a registration drive, there are 10 lakh farmers who expressed interest in saying like, hey, we are interested in a product like this, right? And we did a number of market surveys internally within India and in collaboration with some of the external entities as well. Pretty much the customer is looking for a solution that works for them, that they can trust, and that pays in a timely manner, right? Because what we are trying to do with our product is essential, because we know exactly where the farm is located, because that's the first thing that we do is geo-reference the farm, right? Because all the perils, the crops that we present to the user is based on their specific location, right? And because we know exactly where they are at, and we can monitor exactly what's happening on this piece of land using the satellite imagery, right? Because we take images almost on a regular basis to see exactly what's happening on that piece of land, so that we can get estimate on what's potentially coming there, so that we can inform the customer and also start managing the risk from our perspective, right? And as and when claim happens, we use all this information along with the additional data. If it is a peril-based, we use the IMD and the local weather station data. We collate all this information and we try to process the claim within hours, if not a couple of days, right? Because that's where customer sees the value. Because farmer needs that money at that point in time when the loss happens, right? Not at a future date when after all the assessment happens, like after a month or two.
Yeah, so you are a faster provider of the comfort of that insurance payout. Very fascinating, because think of it this way. You cannot look at a Viksit Bharat leaving behind the agricultural sector. It has to be part of the driving force, and that comfort and cover is what is required. Thank you so much, Mr. Dasari, for speaking with us today.
Sure. Thanks, Tamanna.
Thank you.
Viksit Bharat 2047 is certainly not possible without rural upliftment being happening. Now, in a nation, where traditional investment avenues have long been the domain of, a select few, we stand at the cusp of a revolutionary transformation in India's investment landscape. As we progress towards our vision of Viksit Bharat, democratizing the access of investments has become not just an aspiration, but a necessity for, an inclusive growth. And today, we're privileged to explore this critical transformation with someone who's at the forefront of revolutionizing how Indians invest. Please join me in welcoming Mr. Ujjwal Jain, CEO of Share.Market by PhonePe, who has been instrumental in reshaping the investment ecosystem through technology and innovation. Leading this conversation is done by my co-host, Alex Matthew. Ladies and gentlemen, please put your hands together in welcoming them.
Hi. Very kind. Thank you so much. Okay, so I think to a certain extent the context has been set for us, Ujjwal, because in the first panel you heard one of the panelists, Rhythm, speak about the fact that while things have changed, a lot of things have stayed the same. because you have increased participation by a retail investor, and we cater to them. We speak to them every day. And the makeup of that retail investor has changed very dramatically. But if we're talking about the number of investors, we're still scratching at the surface when we're talking about the actual potential. And I don't think it's the individuals that are listening to us right now, Ujjwal, that we have to talk about. Because when do you really increase the breadth of investors in the Indian markets? When you go down to the smaller towns and cities, when you go beyond that. And the main question here is about democratizing access. How do you provide that?
Actually, if you look at last 10 years of Indian capital markets, I mean, I was actually building for global markets till 2016. And when I realized that access to markets in India is actually very, very underpenetrated. So it's people like us who can build for the Viksit Bharat should take the step. So we started building for it. And if you look at the last 10 years, I mean, access to market is one of the things that has been well served in terms of making sure that people have access to possibly if they want to invest in markets directly, they have access to a broking account, or if they want to set up an SIP in a mutual fund, they have an access to an SIP. Now, to put into perspective some numbers, for example, like we launched share of market like 1.5 years now, we are already have penetration in 99.99% pin codes of India. And that access to market is possible because of technology. I mean, and when I say technology, it's a very broad word, but if you go into the specifics, the ability to onboard a customer on a DIY basis, a very well drafted KYC regulations by SEBI ensured that tech-first platforms who actually understand how to make sure that ensuring the regulatory aspect of the market, integrity of the markets, how do you make sure somebody on a mobile phone or on a web can actually do their KYC in a flawless manner? And even if they are not very natively digital, they can still have great experiences. I think that's some of these things that we have cracked at scale. And that is why if you see the number of accounts that are growing, like for example, we have almost like 5 crore plus mutual fund, unique PANs who are doing mutual funds. And
for the industry.
Overall industry level. And the total folios are 20 crores. While demat accounts have actually crossed, unique families or unique PANs have crossed 10 crores. Total demat accounts are in the range of 20 odd crores. Now coming to the penetration part of it, like if we look at our numbers, I'll share some numbers from our platform itself. Like in mutual fund industry, for example, Jan 2025, 18% fresh AUM came from B30 cities. So AMFI has this category called top 30 cities
and
called
below
T30
30,
and below 30. Like 18% of the AUM came from, at the industry level, came from B30 cities. On our platform, for that matter, 2/3 of our AUM came from B30 cities.
Oh, that's significant.
So that's an area where we have realized that as a platform, we have been able to bring access to market to a different spectrum, which means that today, when we see that incremental AUM on our platform, 2/3 of that is coming from B30 and beyond, while overall industry is doing at 18%, we have already actually are scratching the surface where we can further penetrate and make sure that access goes.
Okay, so this is very interesting insight, and I intend to speak to the mutual fund leaders that are going to come through later in the evening as well. I'm going to ask them about this penetration, because when you're talking about particularly the mutual fund industry, Ujjwal, you're talking about a predominantly distribution-led model, and we're talking about mutual fund distributors that are spread across the length and the breadth of the country that are essentially doing this. You're trying to disrupt that, kind of.
We are doing it DIY. Yeah? We do more than 20 lakhs
exactly.
SIPs
so that's
a month.
The point.
Yeah.
Exactly. So you're trying to get people to go direct, which is not something that a lot of people are doing right now. That shift will happen. What I'm trying to get from you is, do you anticipate that the next major leg of growth is going to be through this and not through that? Or do you think that a combination has to happen?
See, I think it'll be a combination of both. See, wealth or overall, like access to markets, when you talk about it, it's India has been largely a distribution-based like country, right? Now, if you look at distribution purely as a enabler to give access to market, but if you look at distribution from a perspective that they bring awareness, I think there will be an hybrid. I think platforms like us actually have taken a longer approach to this problem statement, saying that while we solve for access to market, markets, and we are seeing the green shoots where typically you will expect a physical touch point to get into SIPs, but our platform, we are able to make that person trust the platform and do their KYC and set up the SIPs or open a broking account. Our next actually focus areas is actually how we take that wide space of providing access to knowledge and access to research at a massive scale. Because that's a problem statement industry has not solved. I'll talk about a very unique number that you see, right? 5 crore PANs doing 20 crore folios, which means access to fund manager brought a lot of confidence in people, so they continued to invest more in SIPs, right? But more than 12 crore PANs, 20 crore demat accounts, average active user on a yearly basis around less than 4 crore.
Yes.
So access to knowledge and access to research is still not there at a democratic level. I think that's a problem statement that technology, computer science and AI will solve. And that's also a problem statement we are solving while we are solving access.
It's a problem that we're also trying to solve through the shows that we do. Incidentally, we do a couple of shows that directly talk to the mutual fund investor, and we've gotten a lot of traction. We get a lot of traction, as Sanjay sir was pointing out earlier today, on the query shows that we do as well. So, and people calling from various parts of the country that you probably hadn't heard of before, right? So we get calls all the way up from Kashmir as well as down south, and a lot of calls down south as well. But having said that, what I'm trying to get next is, and you spoke about this, you spoke about access to information. Some part of that is what we're trying to do on an ongoing basis, but you need so much more than that. What you're trying to do is create a differentiation from what somebody else might do, in that you're providing information that is cutting edge, that is easily accessible, and that is insightful, right? What is the role that you think artificial intelligence will play there? Because this is a little bit of a developing area. We don't know where this is going yet.
So we have been using AI for a while. So we actually categorize AI across a couple of broader categories. So one is how AI enable access to markets, as we were talking on that aspect. The other is access to knowledge, which is an opportunity to solve, access to research, access to insightful information. And third is access to personalized experiences on a DIY basis. And those experiences not only is about providing contextual experiences, but also about providing trust and safety.
Yes.
So when it comes to access to market, if you know that on KYC, one of the biggest bottleneck was liveliness detection. Like a lot of innovation has happened on machine learning models to innovate on that, and that is why the entire KYC journey is largely foolproof because of the ML models that have been deployed for liveliness. So that I think will continue to improvise as an industry level. Regulators will further build confidence on those journeys. So I think access to markets will be benefited by AI. Then comes to access to knowledge and access to information. There, the interesting part is AI is a very natural extension to quant research. Now we have been building quant research platforms since 2016. To make it available to retail investors. Because institutionally, if you see, there are a lot of, globally also, it is well served by most of the institutions to affluent family offices and etc. But how do you make that available at retail level? Same, like institutionally, that quality of information, but because your reach is at a consumer internet scale, you can build a great business also while you provide that right information. I think that is where we are extending our quant stack to enable AI, because quant research uses time series data.
Yes.
So we ingest data across the board from all exchanges, etc. And when we look at the natural language, when it comes to social media, when it comes to exchange filings which are still in PDF formats or unstructured data formats, we have started able to ingest that into our systems and bring that into an actionable information form. So we just launched sentiment factor also on those analyst sentiments. So I think AI is helping us to actually even leverage unstructured data, refine it to a level. Right now we are using it under our research models. At some point, some of these will come on in our chat experiences and etc. So I think AI will help on the access information.
And from your perspective as a business, this is going to be that one factor that makes it remunerative for you as well, because you're providing this perhaps as an add-on, right?
Yeah.
And so to that extent, build on that for me. And the other aspect also is that a lot of players entering the space, and a lot of large players, traditional players making that pivot as well. Is the space big enough for everybody to play in? I certainly think it is, but give me your perspective.
See, I think when the first wave of like change or the status quo of capital markets got changed. See, I actually started in Bombay, now I'm in Bangalore.
Yeah.
So I see the challenging of status quo between Bombay and Bangalore itself, right? I think from a first principles, if you see, at some point somebody in last 10 years, the biggest status quo was challenged that the fact that if you build broking business or distribution business as a tech first DNA, and while you're still very affordable on pricing, which is what called discount broking in today's world, you can still build a great business and you can serve the customers, right, with the great experiences. I think the phase 2 of this is how do you, within the same affordability, can you give access to right information, research? I think that opportunity is big for us to build, and we are building it since 2016. I mean, as a group, we are really bullish to build for the long term. But at an industry level, I think a lot of these players are having their own nuanced view of demographics, and they're solving for that. I think there's a space for all, because at a customer level, it's a very heterogeneous segment. It is not like payments, right? Your UPI experience can be same for somebody in South Bombay or somebody in Kanyakumari, right? But in wealth, experiences can be democratic for all, but product differentiation happens. So I think different segments, you can create different product differentiation and can build a market for that.
Okay. So I'm always curious to speak to people like you, because you're ultimately you're catering to an audience that is essentially the same. We're trying to expand our audience as well. But paint a picture for me in terms of the conversations that you've had in your own boardrooms, right? What is the opportunity that you see? Because you're talking about, and you named you took a few numbers. 5 crore is the unique PANs that are in mutual funds right now. We're talking about 80 crore PANs that are currently available in India. So we're talking about a massive opportunity, but we've also established that this is a country that is growing. This is a country that's going to have significantly more earning members down the line, perhaps even in the next 5 years. We're talking about disposable income that perhaps next year, just by that tax break, is going up by 8 to 10%, even if you don't account for the increments that will come through. And I hope everybody's listening, right, for me as well. But having said that, what is the opportunity in the near term and over the next decade?
See, the near term itself, I think there is still a lot of growth to be there, purely from an access to markets point of view. I think while we have almost reached all PIN codes, but within each PIN code, if you map the entire demat account, total SIPs in the country on a heat map of the country, you will realize there's so much of under-penetration in some pockets and over-penetration in other pockets, right? So well-distributed access to market is still an opportunity to solve. And the other thing which I think even panelists before also talked about, the population is young, right? So this business is not about when customers come to your platform, investors or traders come to your platform, it is not about how they will become your paying customer in next quarters or so. It's a gradual cycle, right? So from an awareness building, the platforms were building with a long-term view at making sure these people engage, understand markets, and gradually build their trading portfolio or investing portfolio. So the number of people who are going to be employed, people moving out of college, per capita income increasing. So overall, both from like the number of people getting into markets and the existing people and the people who are already accessing markets, their ability to invest will also grow. So that is why you see the SIP numbers are growing, while number of PANs are still at 5-6 crore, but SIP overall numbers are growing very fast. So I think all of these adds up to the whole opportunity for building for markets. And obviously for the longest time, this sustained behavior change of like since post-COVID, that gold moving beyond traditional assets to financial assets, I think that has become a mainstream play. Like people have realized that if I invest with a long-term view in equities and in markets, I think I can have a better wealth creation probability.
And even in digital gold, you're talking about, and I'm talking about ETFs, right? People are buying into the idea of buying digital gold. The numbers speak for themselves. But let's talk about also the regulatory aspect, because in a lot of what you're building and your peers are building, this is a space that the regulators and the other stakeholders are also looking at in an ongoing basis. They're trying to fix problems as they occur. How important, in your opinion, is that collaboration in order to create the best possible outcome?
See, I think the child inside me is so has so much of fantasy to build things. But when you build for markets, regulation is your like first call of duty, right?
Yeah.
I think because you work with real people money. I think that way, that whole that principle to principle trust that SEBI has built with innovators, right, is brilliant. I mean, when we started in 2016, I started building this thing called curated portfolios on broking called Wealth Basket. I'll give you an example. And when we started thinking that right now when we look at research brokers provide is like buy, hold, underweight, overweight kind of individual stock research. Most of the Bombay is like you say so many research houses. Nobody is actually giving at a retail level taking a set of stocks, scientifically weighing these stocks like a PMS and putting out as a research report saying that, okay, if you want to invest in a pharma sector, these are the set of stocks. We have done research together and we think at with this weight you can build. Now, when we started saying that on the research analyst model, you can actually publish portfolios, right? We went till the SCRA Act and saw that a group of securities can be also clubbed together. But if you look at research analyst regulation, there was not something which was clearly documented. Yeah. But what we believed is that our intent is to enable, empower, and investors to actually have a better research in form of portfolios. If your intent is right, regulators will engage with you, work with you. And I think last update in the circular, the model portfolios have been added to research analyst regulation. So a part of the innovators and the builders of today in markets, I think we believe that if your intent is toward the end consumers, regulators work with you. That's a great place to be as a builder. The second part is that as we build, everybody see pockets of like problems come, for example, FNO, like futures and options for that matter. Now, you see FNO as an instrument is very, very important for the markets because it's a great leverage instrument to hedge, to speculate, as long as you know what you're doing. Right. But a lot of these retail investors and traders ended up coming to markets and started looking at option buying as a way to actually make
build
fast
wealth.
money.
Yeah.
And without understanding that it's a leverage instrument and what it means. Sure. Now, all the current regulation that SEBI is doing, and I've brought, and there are a bunch of them that's going to come in phases, I think it's great for the category to be protected because the instrument is great. The investor or the trader needs to know why they are getting into FNO. I think those hurdles are important for the long-lasting nature of the product, right? So that way, regulators coming at different points, identifying problem statements, taking a consultative approach to engage with stakeholders. I think we are doing great in that, in the way regulators are working. I think going forward, I think the balance between not knowing whether I am regulatory right, I think the first call of duty should be, are you working in the interest of the investors or traders? I think regulators work with you. So you can innovate and work with SEBI.
Fantastic. I've really enjoyed this conversation. Please put your hands together for Ujjwal. Fascinating. Thank you so much, Ujjwal, for taking the time. Pleasure speaking with you. Come, stand with me for a minute. Let them take a picture. You don't need to stop clapping, guys. I'm just saying. Thank you so much. Oh, it's me. Hold on. All right. As you can see, it's my time back behind this podium. But Mahima is going to put on her anchoring hat, and our next guest has redefined corporate dressing in India. And this is as innovation and AI are transforming the textile business. I'm pretty sure that you've not heard too much about this. It's time to bond with the best. Let's welcome Mr. Ajay Agarwal, who is the Group Chief Executive Officer, Reed & Taylor. Joining him, my colleague, Mahima.
Thank you so much, Alex. First of all, welcome to you, sir, and welcome to everybody who's present here today in this conclave. Today, we are diving deep into one of India's most storied and dynamic industries, that is textiles, with a rich legacy that dates back, in centuries. And India has been a global powerhouse in textile production. Yet, achieving dominance in the modern fashion and luxury market remains a challenge. And in the backdrop of Viksit Bharat 2047, we explore how the Indian textile sector is evolving, innovating, and positioning itself in the global leadership era. From policy incentives like PLI to sustainability, to AI-driven automation and the e-commerce boom. There's a lot to talk about when it comes to the textile space. And, nobody better than you, Mr. Ajay, can, talk to us through, what's happening in the entire textile space. So, we have the Bangladesh +1 strategy right now, which is, playing its role. India is, kind of getting advantage when it comes to, the kind of developments that have taken place in Bangladesh. To you, how is the textile space developing right now, and what does the future for textile look like?
Thank you, Mahima. I must say one thing. Bangladesh +1 strategy. That's a new phrase which you have put in my mouth. And exactly the same thing which I also wanted to tell people basically. See what has happened in the textile in last 3 months. I'll just give you a last 3 months example. Apparel exports in last 3 months of year 2024 have grown by 41%. Traditionally, they were growing at 6 to 7%.
Okay.
It's again Bangladesh one effect. Now, I don't want to, it's an aberration, no issues. But we need to make it a habit. And we can do it. See, today, the Indian market share in the global trade is roughly about 3%, 4%. We are just doing roughly about 16 billion of apparel exports. It can certainly go up to 50 billion by end of this decade.
Right.
All what we need is putting up facilities in India. See, we have got our total share of textile and apparel together is roughly about 38 billion of in the year 2024.
Right.
Out of which 16 billion was apparel, 21 billion was fabric. Now, if I were to do a value addition, see, there is a 2x value. If I am doing a 1 billion fabric export, if I convert that into apparel, it automatically becomes 2 billion.
Right.
So that's the value addition which we are talking about.
Right.
Now, if I were to convert this 21 billion of fabric into apparel, it automatically becomes 42 billion. And let me put it this way also, that globally, textile trade is 60 to 65% consists of apparels, 35 to 40% consists of fabric,
Okay.
in which all fabrics come in,
Right.
including home textile and everything.
Right.
So the biggest market, the opportunity I would call it, is the apparel export into the world. We can become clothiers to the world. So that's where I look at it as an opportunity which we have today in the textile business.
Right.
Currently, the government of India, under the leadership of our Prime Minister, Mr. Modi, has taken up a lot of initiatives, a lot of thrust. And just day before yesterday, Modi ji has given a new phrase, 5 Fs of textile, starting from farm, fiber, factory, fashion, and foreign.
Right.
So that's the 5 Fs. If we were to follow those 5 Fs,
Right.
I'm sure what we are targeting, roughly about 350 billion by end of this decade. As on today, we are at 185 billion.
Okay.
So that's just doubling in next 5 years' time. And that's very much possible.
Right.
And if I were to put his thought process, we can achieve this target earlier than 2030.
Interesting.
Now, of course, what we need to do, both as an industry and as a support from the government. As an industry, see, we are employing roughly about 45 million people
Right.
in India, which is almost 10% of the working population of India. It is the second largest sector which is giving employment in India. Now, being second largest, if we were to double our capacities, we have to double our trade, we have to double our manufacturing capacities.
Right.
What I would need is a trained workforce. The trained workforce will not come just overnight.
Right.
In that, I think the government needs to take up that objective very, very seriously and get this, and it will only not only generate employment,
Right.
it will generate employment in villages,
Correct.
in small towns, and putting up manufacturing capacities in terms of apparel manufacturing capacities.
You know, you rightly mentioned that, putting up manufacturing facilities and trained labor is something, that will really boost when it comes to the textile space. Product-linked incentive schemes, this is one of the things that has been a game changer for a lot of industries, including the textiles, right? I want to know as to, how it's been a game changer, first thing. And secondly, what more, policy changes that you have in mind can government actually, take into consideration that will boost, the textile sector overall, and we reach that 350 billion mark by 2030, earlier than 2030, like you rightly mentioned.
See, the PLI scheme has played a very crucial role or critical role in boosting productivity, capacity utilization, and at the same time putting up new facilities. See, what has happened in terms of technology upgradation, the existing units which are there, let me put it at my own end. In Reed and Taylor, we have basically doubled our capacity in last 2 years just by virtue of, with incentive of PLI, secondly, technology upgradation, and trying to rationalize processes with the help of AI, with the help of new technologies which are coming up. And that is what is the most game changer.
Right.
Secondly, recently government has come out 2-3 years back, that PM Mitra scheme. That has also is going to give us a results starting down the line 2 years, 3 years. And the last year, government came out with textile parks in various places. They have allocated some 10,000 crore for setting up these textile parks in various cities and other things. And I'm sure this is going to evolve a new manufacturing capacities coming up in the respective areas. Till now, let me also say one thing. We are having 23% of the world's share of cotton production.
Right.
We are the largest cotton producing country in the world.
Right.
And we are also largest cotton exporting country, either in the form of fiber or in the form of yarn. If that fiber and yarn is converted into the fabric and apparel in India itself, the delta is 3x. So that is where we need to concentrate on and need to move on.
Right. You very nicely mentioned that automation is kind of reshaping the way things are being manufactured. And not just being the manufacturing field. In fact, even when it comes to training people, things are changing. What has that change been like in the textile space, and also how is Reed and Taylor as a brand adopting those changes, and what are more changes that you look forward to when AI comes into picture?
See, when you look at AI, the AI has been majorly in textile industry been helpful for two aspects. One, the biggest contributor is CRM, the customer relationship management.
Right.
That is something which is very, very critical, and AI has helped a lot in customer relationship management in terms of looking at their behavioral purchases previously,
right.
Then augmented reality, virtual realities basically. Those things have, in fact, giving us a history. With their browsing history, I am able to understand what is my customer's preference, which area the customer is looking at. Now, let me put it this way. In last 1 year, what I have been seeing that the customer preferences in tier 2 and tier 3 cities has changed a lot. The brand appreciation has come. And that has been happened. We didn't know that. We were mainly concentrating on the tier 1 cities or the top 10 cities in the country. But now what I find that tier 2 and tier 3 cities are generating much more business than the tier 1 cities. And that is an area which we have been able to get is because of the majorly with AI-driven information which is being said. So that customer relationship management, customer preferences, customer likes and dislikes has led us to remodel our business and our product profile. So now when I know that X wants this, what is the customer preference? We convert that into our designing and fashion basically. So that, by virtue of that technology, we are able to get into more into design selection, design creation, and fashion creation. So that's something which AI has really done into. And thirdly, most importantly, and which is going to be again a very, very important tool for the textile industry to expand its base. See, e-commerce. E-commerce has come up very fast today. Just now one of my colleagues mentioned that we are getting orders from Nagaland to deliver the apparel. So that has been possible purely because of e-commerce. Now, that e-commerce, now today, what is happening? Previously, just 2 years back or 3 years back, there were a lot of issues regarding returns and this and that. Nowadays, the return ratio from 50% has come down to 20-25%. That has happened because now the customer, before he makes a purchase, is able to virtually wear that garment, see to it how it looks like on his body, and then take a call. So that is where this innovation, AI has really driven the textile industry in terms of fashion is concerned. See, Reed and Taylor basically is into premium category. They are basically, we are trying to give the premium fabric, premium apparel to the consumer. So when you have to be in premium category, the likes and dislikes change overnight, if I may put it in this. So that fast turnaround is possible through the technology.
Absolutely. Well, Mr. Agarwal, thank you so much for giving us those valuable insights on the entire textile space, and hopefully we cross that 350 billion mark as soon as possible, and hopefully before 2030. Ladies and gentlemen, please put your hands together for Mr. Ajay Agarwal. You just stand for the picture, sir. Thank you so much, sir.
Thank you so much, Mahima. Fascinating conversation as always, and I'm sure that you found it engaging as well. But we've got more lined up for you. I'm sure some of you are hungry, but then this is, I promise you, is going to be a fascinating conversation. So stay in the room with us. It's time to take this discussion on manufacturing and sustainability a step further. How can the beverage industry embrace sustainable practices while empowering local businesses, and how can governments collaborate with private players to expand choices for consumers while driving responsible growth?
Absolutely. And as we delve deeper into this topic of sustainable practices and local impact, let's hear from the industry leader who has been, at the forefront of these initiatives to discuss the pivotal role of business and sustainability in driving a developed India. I'm honored to invite on stage Mr. Prasanna Mohile, who is a National Head Corporate Affairs and Executive Board Member at Pernod Ricard, India. Joining him will be my colleague Nikunj Garg, who will help navigate the engaging discussion. Ladies and gentlemen, please put your hands together in welcoming them.
Mr. Mohile, once again, welcome to NDTV. You are a friend of NDTV. I welcome you on the platform once all over again.
Thank you so much. thank you for having me today in the NDTV Profit Conclave. And it's always the pleasure to be there with you, especially Nikunj. And I know after tiring journey from US with Mr. Modi, you've come especially here. Thank you for that.
Thank you, Mr. Mohile. This is the maiden conclave of NDTV Profit. They make their debut in the world of conclaves and thought leadership from this show. And I'm especially happy to welcome you here. But tell me something that your journey in this country, that is Pernod Ricard's journey in this country, has been almost a 3-decade-long journey. What have been your lessons in that journey? How do you see the company going forward? How do you see the entire industry of conviviality, since you are a major player in that industry? And as we have been hearing a lot, the premium segment of the economy growing, and that segment also grows in your industry and makes your company all the more an important player. How do you see the last 30 years and going forward, your journey in India?
Thank you, Nikunj. As we all know, Pernod Ricard, many might not be knowing, but my convivial folks, they know Seagram's more. So in last 30 years, I mean, our journey started in 1993, immediately after globalization and liberalization era. And it was founded in 93, and I think the production started in 94. And from there on, I think we take pride in saying that the premiumization was introduced in India by Pernod Ricard there. And we initially started from, say, a volume of 1 lakh cases to 65 million cases today, and leading the industry in India. So our journey, we have always partnered with the growth of this country. As the economy of this country consistently grew, we also grew with the economy of this country there.
So you are the one who made alcohol expensive for all of us, basically. You are the one, who brought expensive alcohol to this country.
So we introduced, as I said, premiumization was something which was introduced by Pernod Ricard to the Indian consumers to get that kind of a quality to our consumers, that experience. It was Pernod Ricard who initiated that. So with premiumization, there comes a cost.
Yes, I mean, jokes apart, premiumization and better quality and a global experience is something that the Indian consumer today demands. And almost every sector we have now companies which are global companies like yours, which Pernod Ricard is a global giant in the industry that you operate in.
Yes, so we've been a responsible company in this field. And we knew that there is a lot of scope in the country to grow in the premiumization segment. And year by year, if you see, there's been a lot of potential for the whole industry today in premiumization segment in India. And that is where, in a very planned way, we went ahead year by year. And this is where we are today.
And Mr. Mohile, I must ask you this question because yours is a sector which is seen more from the prism of revenue in this in various matrix. But the theme of this conclave today is Viksit Bharat, a blueprint for 2047. And our Prime Minister has been very insistent that by that time he wants to see this country as a developed country on all the global platforms. In fact, that reminds me that he recently went to France, met the French President, Mr. Macron, where your leadership was also present in those meetings. So how are you partnering, your sector, your company partnering to see a developed India's journey coming to fruition by 2047?
That's a nice question, Nikunj. I mean, recently, as you've seen, the Prime Minister had been to France. There had been certain bilateral discussions there. Our group CEO, Mr. Alexander Rika, was also present there as one of the speakers. And you would see that almost around 850 companies today are investing, French companies are in India. I would say that in terms of volume and scale, Pernod Ricard would be somewhere around first 3 or 4 companies in India who's invested so much here and being part of the growth story of this country. So we always have played a very, very important role in getting the French investments here. My Pernod Ricard India CEO and Managing Director, Jean Touboul, he is also the President of Indo-French Chamber of Commerce and Industries, who guides the French companies to come here in India and invest in various parts of the state. So we are doing our bit also in other sectors in guiding the other French investment coming in. So Pernod Ricard has been one of the very, very important, we have a very important role to play in the economic growth of this country today.
That's very nice that, not only your company has been driving the growth potential of the sector that they are in, but they are also inviting other French companies to invest in India, partner in our growth story. Now, let me also ask you, since we are talking of growth dynamics and since we are talking of growth potential in the country, what are the kind of revenue contributions and what are the kind of revenue projections that you see of the sector that you operate in? And how is it helping? Look, a large part of the state government's revenue is obviously dependent on your sector. So how is it contributing in the social aspect of job creation, education, and densification, so to say, of the work that you do in the various industries and fields?
Well, Nikunj, this sector plays a very important role in contributing to the economic growth, as I said. In terms of job creation, industry as a whole, I would say, direct, indirect, taking the induced economic theory into place with the complete value chain, we generate as an industry almost 50 lakh jobs. And
50 lakh jobs annually.
Annually. And Pernod Ricard contributes to that almost 9 lakh jobs. And out of those 9 lakh jobs, 6 lakh jobs are into the agriculture sector. If I talk about the revenue contribution, the industry contributes almost around 3 lakh crores.
Annually.
Annually. And Pernod Ricard directly contributes almost 23,000 plus crores. And to the GDP, it contributes almost 39,000 to 40,000 crores today. So that's the kind of contribution we do to the growth of this country. And when you asked about how we contribute, if you have seen the times of COVID, when the entire economy had collapsed, at that point in time, it was this Alcobev sector who stood by the government there. And this was the only source, I must say, for government for the revenues that time. And we stood by all the state governments in whatever bit we could do. So that is the kind of potential this sector has.
You were talking about agriculture job growth and 6 lakhs job annually being created in the agriculture sector. Look, at the bottom of the pie, and particularly as our previous speaker was also talking, in tier 2 and tier 3 cities, in smaller towns, job creation is a challenge. It is a challenge that Government of India also wants addressed. Various state governments also want that challenge addressed, and through multiple initiatives and schemes, all the governments have at all points in time tried to answer that crisis or try to sort of respond to that crisis. So do you think, Mr. Mohile, that your industry has been able to make a positive impact as far as the agriculture sector is concerned, because a lot of your raw material actually comes from the agriculture sector?
Yes, you are right, Nikunj. Basically, if you see, as I said, out of those 9 lakh jobs, 6 lakhs are into the agriculture sector. So my main byproduct is grain. And today, if I see that most of the job creations which are done are on the urban side, but on the rural side, there is not much investment which has been done. So Pernod Ricard now, as I put in some time, I was to tell you that we are also going to invest further here in India, especially in Nagpur, for the 200 million euros malt maturation plant in time to come. And if you see, we would be needing almost 5,000 tons barley per month there. That is 60,000 tons around annually. Our rough estimate says that it will contribute almost 80 to 90,000 farmers in the state of Vidarbha, where there is a lot of distress today in the farming sector, in the agriculture sector. So Pernod Ricard is one who basically believes that, unless the rural economy is not linked with the urban economy there, then the real sustainable development and the dream of Viksit Bharat will never come true. So there has to be a proper linkage between the rural economy and the urban economy mixed together, which will we will see the dream of Viksit Bharat coming true.
Well, that also is something that the policy makers have almost always spoken about, that if the country has to develop, the rural areas, the mofussil towns, the smaller towns have to develop fast. But I'm glad that you bring me to this part of the sustainability aspect of your industry, Mr. Mohile, because one of the criticism of your industry sometimes is that while you are making your own segments premium and a lofty urban picture is there, but in the end use where you are drawing your raw material from, the sustainable practices remain a challenge. Have you been able to, since you are such a giant in the industry, since you are you have such a legacy in the world, not only in India, have you been able to move your operations in the sustainable directions? And if yes, what all have you been able to achieve so far, and what are your future plans?
See, we've done a lot of initiatives in this. Sustainability is basically is a core value for Pernod Ricard today. It's in the heart of Pernod Ricard. We value our Mother Earth and the community at large. By eliminating our monocartons today, we have reduced the carbon emission by 7,310 tons annually. That means conserving almost 250,000 trees annually there. And by 2030, we aim to reduce our packaging emission by 75,000 by 2030. So we are very conscious about the environment. We are very conscious about the community around us. So we do a lot of initiatives in farmer upskilling, helping them for a sustainable farming there, on how best they can get their yield. We focus on women empowerment. We focus on digital educations. We've also had a tie-up with the Marycom Foundation to promote the rural sports. So Pernod Ricard has been very conscious about the role Pernod Ricard has to play for sustainability.
And when you talk of sustainability, one of the important parts is that you mentioned in brief, but I want you to discuss it a little more about it, about the farmer upskilling or the upskilling of your partners, as you call them, on the ground. So in terms of rural economy upskilling overall, are you investing there, or are you taking people out to get trained, or are you showing them new sustainable practices in the farmland? What is the approach that you're applying? I mean, how is it that you think that your practices, which largely draw from Mother Earth, become more sustainable in times to come? Because sustainability, as I said, is the way to go forward, and it will always remain one big initiative for a corporate giant like yours.
Yeah, of course. And as I said, we help them train the farmers that how best they can get their yield, how, the wastage of water should not be there, how it can be used optimally, and basically help them also get the right value for their produce today, which is a challenge in the farming sector, in the agriculture sector. So Pernod Ricard also plays a role in helping them develop a sustainable farming in this way.
Not wanting to take too much of your time, but let me ask you last one or two questions, Mr. Mohile. One of the questions is that you say that your industry contributes a large pool to the revenue side of the state governments, also to the various other activities that you undertake from social welfare, etc. But yours is a very highly regulated industry. Going forward, as the country moves towards a Viksit Bharat, the experience of the developed world in terms of dealing with this industry is something, I would say, completely different from what we have in this country now. Do you think, in your mind, as the industry leader, as an important player of the industry, do you think that experience should change your interface with the governments, your interface with the consumers? What kind of change that you would desire in coming years, and what is it that you will think in your mind that will change the contours of the industry?
A very good question, Nikunj. I'm happy you asked this. As I told you, the contribution of the alcohol sector to the Indian economy today. To further grow, I think today this sector needs an industry status. We are struggling to get that today. And if this sector comes into the mainstream sector, then you would see more investments coming in and the sector growing much more faster than what it is today. So we need government's focus basically to get this sector into the mainstream sector, give them the industry status which is required. This industry is a very, very heavily regulated industry. So I feel that government, rather than seeing it only a partner to earn revenue out of the alcohol sector, they should help in ease of doing business also, because today there are so many multiple regulatory hurdles we face across the country in various states. So if government helps us basically to grow, then they have to also look at doing ease of doing for this sector, which can promote further growth.
And you're right, because ease of doing business is something that every government, state government champions, Government of India champions, every state does its investor summits and says that, we are the most investor-friendly state. So probably they can also look or consider your demands, which can be logically or reasonably met. Now, let me ask you my last question, Mr. Prasanna Mohile, of the day. As I said, you are a friend of NDTV and we will keep asking you various questions. But you said that you are making a big investment in Maharashtra, Vidarbha, Nagpur, where you have made some 200 million euro investment already. So do you think that going forward, your bigger investment plans are around this region or other regions? Do you find something more attractive in the western region that makes it more investor friendly for you? Or do you think that you can expand this into various parts of the country, provided the governments become, as you said, more into ease of doing business?
Well, we've invested more here in Maharashtra. Maharashtra is a very progressive state. Like other states also today do have a very progressive policy. But then our initial investment of the manufacturing facility started here in Nasik. So after experiencing the success in one location there, our future plan of investment, we thought that should be in and around Maharashtra in the central part. And Nagpur was selected because it is locationally, we have that advantage of Nagpur being in the center of the map, and logistically also, it will definitely help us doing it. And the important factor always while we invest in any part is how progressive the government is. Because this industry does require a partnership with the bureaucracy there, with the administration, the government there, the policy makers. So today, when we see very recently our Honorable Chief Minister of Maharashtra, Mr. Devendra Fadnavis, had been to Davos, and there were almost 15,70,000 MOUs were signed for Maharashtra. That shows that, there is a lot of euphoria which is generated in and around Maharashtra today because kind of speed they are approving various projects. And similarly, basically it was this also that under his dynamic leadership of Mr. Devendra Fadnavis, we thought that our investment would be safe if we invest further in Maharashtra, and that too in Nagpur.
And you think other state governments are also kind of expanding that horizon where you can work in? My last question to you. And where you can expand your horizon, or do you think that there is a different kind of landscape that operates and that needs to improve?
No, as I said, all the state governments today, after 2014, once the ease of doing index started and it was monitored by Niti Aayog on various parameters, each state started competing with each other. So there was a very healthy competition between all the states there. So everybody tries to see that, how best I can compete on various incentive packages which we can offer to the industry. So there is quite healthy competition coming in. So I would say yes, Maharashtra, because we've experienced success in Maharashtra, we have come here. But other states also are not lagging behind. Everybody has good dynamic industrial policy in place today. And if you would have been to Davos, you could see all the pavilions of India were completely choco-blocked by various investors visiting them.
Shortly we will have a Davos in Bombay, and we will have it with NDTV. Why go to Davos all the time, Mr. Mohile?
Yes, I think if this dynamic leadership continues and the political will is there, I think Davos will definitely come here. 15,70,000 crores is not a small amount, Nikunj. So I hope it happens someday.
Thank you very much, Mr. Mohile. Thank you very much for joining NDTV.
Thank you, Nikunj. Thank you for having me once again. Thank you.
Is this on? Okay. So fascinating insight so far today, and there's a lot yet to come. In the manufacturing space, and specifically in the automotive space, there is one company that stands out that has touch points across the board. Whether you want insight on how rural India is doing, whether you want insight on urban consumption and urban demand, and now in the latest, the auto enthusiast, of course, you've always catered to the auto enthusiast, but the latest products that you've launched in the electric vehicle space has created waves across the board. We were watching from the studios on Friday. It was a different Valentine's Day experience. And I'm talking, of course, about Mahindra and Mahindra. So let me lay the context for this. From Make in India to make for the world, India's manufacturing sector is rewriting the rules of global competitiveness with new age technology, sustainability, and a strong industrial background, the country is positioning itself as a powerhouse of innovation.
Absolutely. And as we, reimagine India's industrial future, one company that stands as a testament to, our manufacturing evolution is Mahindra & Mahindra. And today I'm delighted to welcome Dr. Anish Shah, CEO and Managing Director of Mahindra & Mahindra, who is joining us. And this conversation will be led by none other than Neeraj Shah. Ladies and gentlemen, please put your hands together in welcoming both Dr. Neeraj Shah as well as Dr. Anish Shah as well as Neeraj Shah. Yes.
Honorary doctorate.
Honorary doctorate.
Thanks, Mahima. You've given me some food for thought. Okay, now, everybody, thanks so much for waiting by, and to the TV audience and the digital audience, thanks for tuning in. As I think we've stated that manufacturing will play a key role in a successful Viksit Bharat, and while the share of manufacturing may have come off in the last few years, the focus of the government as well as the private sector seems to be on enhancing the manufacturing prowess in India. And as we stated, one group present across key manufacturing industries and actually key service industries is Mahindra & Mahindra, and the architect of the group's current strategy has also a sharp mind on what the nation can do to enhance the manufacturing prowess. Dr. Anish Shah, absolute delight to be with him in this fireside conversation. Dr. Shah, thanks so much for coming by.
Thanks, Neeraj. It's a pleasure to be here.
Yeah. So I think the question on everybody's mind is that if there's so much of focus on manufacturing of the nation as a whole, policies for it, etc., how is it that the share of manufacturing in GDP isn't quite inching up at the pace that it should? If anything, it's maybe come off a little bit, but that may be because services have done really well. How do you view that enigma?
Neeraj, it takes time for that change to take place. And a number of efforts have been put in place already to make it easier to do business in India, to improve infrastructure, to reduce logistics costs, to have companies focus on innovation. And all of that starts coming together at some point. From a Mahindra Group standpoint, our leaders 20 years ago had a vision, and their vision was to create R&D in India, to ensure that India could create the best vehicles, and that was the birth of the Mahindra Research Valley in Chennai. As I said, it takes time, and it has taken us time as well to really be able to harness the strength of our research center. And what you've seen over the last 5 years is products that were put in place earlier, but we are delivering now. What you're seeing in the last 5 weeks are our electric vehicles that are also coming, which are entirely born in India and out of research and development here. But it takes time for that to happen. And today we feel very proud that our products are of a quality that can match up to any international standard and can really compete with anyone out there in the world.
Yeah, well, that showed in the way the bookings happened on Friday, and quite stunning really, Dr. Shah. So just trying to understand, I mean, you reckon that, and congratulations on that number, by the way, quite fascinating, though I must say that it didn't come as a surprise. I mean, the sneak peek that people got of the two vehicles that you kind of opened up, if I can use that term, it was partly anticipated because they just look so good. So great stuff there. I would love to understand, as you think of the group strategy, and you're a large group, you're the architect of that strategy, as you think of the group strategy over the course of the next 5, 10, 15 years, do you reckon the opportunity and the incentives for enhancing manufacturing are there for you and other groups to really enhance the Indian manufacturing prowess? Because without that, the goal of Viksit Bharat might not quite be achieved.
So we feel very confident about that, especially after what we've seen with our electric vehicles and what we've seen with our tractors. So India clearly has the ability to manufacture at scale, to manufacture at a lower cost. It does require a few more efforts for that to happen, but we've been able to show this with our products. And we've had many questions over the years around how will you compete with all the foreign companies coming into India. there have been many who've written us off at multiple times over the last 20, 25 years as well, saying that the entry of such and such company is going to be the death knell for us in either automobile or in farm. And our teams have been able to show that they can manufacture in India at strength and be able to compete with the global majors in a very significant way. Over the last year as well, on electric vehicles, there were a number of questions saying, how are you going to compete if such and such company comes into India? And our response has always been our products will speak for themselves. And that's what they're doing today. And this is a strength that not just us, but we see other Indian companies also bringing to the fore and essentially setting up the opportunity for India to be a manufacturing hub for the world. And that is what we aspire to, and that is what we feel confident we will be able to deliver in our path to Viksit Bharat.
Okay. And I'm going to make this equal parts manufacturing as well as services, because less Mahindra and Mahindra, I mean, yes, the dominant share is auto. There's lots beyond that, right? And would love to talk about that too. But just for a moment, because you mentioned that point, I can't not invoke that conversation, right? This whole talk of one Tesla coming in, the Chinese companies, BYD, etc., making their presence felt. Now, your numbers, booking numbers speak for themselves. But I'm still trying to understand, not just for Mahindra Group, but for others within the auto ecosystem. How would the industry face up to deep-pocketed global car companies or vehicle companies wanting to create their foothold in India? Just trying to understand.
Neeraj, that's a question we've been answering for the last 25 years. Because that's exactly the question that was there 25 years ago when various deep-pocketed global players came into India and Mahindra was written off as dead, saying you're not going to be able to compete with them. Right? That's happened on multiple occasions. Today, we have the products that speak for themselves. And in fact, we went to the extent where at our launch, at our test center in Chennai, we actually had some of the best vehicles in the world there along with our vehicles, and we invited the folks at the launch to drive all of them. And our vehicles stood up extremely well against some of the best vehicles, some of which were priced 3 times or 4 times our vehicle as well. So that confidence today comes from the people we have, from what they've done, from what they've developed. And therefore, we feel fairly good about the fact that we can compete with various folks. And I'm glad you were talking about services as well, because we do remind everyone we talk to that auto today is just 1/3 of what we do. Mahindra plays in 70% of India's growth over the next decade. And we are in multiple sectors, and some of those are growing very well and contributing very significantly to our businesses as well.
Yeah, most certainly, and I'll come to that. Just so, sorry, if my question came across that, oh, Indian companies will find it difficult to compete with global brands, no, because in some sense, Indian companies are global brands unto themselves. Your tractors in the US, I mean, making a mark, right? And Indian tech companies making a mark globally. So I didn't mean it that way. What I was just trying to understand, because a lot of these global brands are very famous per se, and there might be an allure for that. But I get the answer. You're saying that the products for you and for other companies will speak for themselves. Now, my question is the current economic momentum in India, which is maybe a bit slacking in Q2, picking up slightly in Q3, conducive for Indian companies to think big in the near term? Is this a passing phase, or is it difficult to say whether this intermediate slowdown that we have will get over in a hurry or not?
So there, Neeraj, we feel that the fundamentals in India are very strong. And they are further strengthened by some of the actions over the last few years. The digital stack today makes it much easier for us to do business across multiple sectors. Improvement in infrastructure is starting to bring logistics costs down. And a combination of all of these will enable the economy to grow even faster. We see this recent slowdown as a blip, and with some of the actions taken, we feel that we will be back on track. I personally do expect that we should be seeing growth north of 8% in the near future as well. And that's something that I think the Indian economy will be able to deliver, because we've grown at 6.3 to 6.5% over the last 30 years. And there are a number of positives that we have in place today that we didn't have over the last 30 years. So we should be able to see a faster growth rate. And we are investing in a significant manner across multiple industries. And we feel very bullish about the India story.
there's some bit of pivot that this budget has taken, if you will, right? That there is a focus on consumption being given. It may be a small portion of the overall economy size, but it has a multiplier effect, the moves taken in the budget, if you will. Do you reckon that this move towards 8% growth, and I heard you say near future, it may be 1 year, 2 years, 3 years, depending on where you believe. In fact, would love to know that as well, if you have a kind of time gauge in mind. But two, would consumption and manufacturing both play an equal part into this, or can it ride on the plank of manufacturing alone?
It has to be both, because consumption is what will drive further private sector capex. And there has been concern, and rightly so, that private sector capex hasn't quite kept up, and government capex is really what has taken the economy forward over the last 3 or 4 years. But private sector capex comes in when capacity utilization goes higher. That's driven by consumption. And therefore, we feel that this is the right path to take. And this consumption boost will enable private sector to put in even more capex, and that creates a virtuous cycle that allows the economy to grow faster.
It's been elusive, sir. I mean, this capex, and I'm not blaming the private sector, right? The private sector will put in capex. I'm not talking about you, but in general, the private sector will put in capex when they see the right kind of IRRs for the project. But private sector capex has been elusive. Do you believe that we will sooner rather than later see this? Again, I mean, is there some estimated timeline that you reckon, maybe in 2025, 2026, that there's a higher probability of private sector capex coming back with a bang?
So the one metric to look at is capacity utilization across sectors. Right. And that has been inching up. In a number of sectors, it's over 75%. In a few sectors, it's over 80%. So as it starts getting over 80%, that's the right time for companies to start thinking about capex and making sure that they have enough capacity to meet the demand going forward. As consumption increases and we see further growth, it only accelerates the need for private sector capex. And you're right, for us, we've tripled capacity in the auto business in the last 4 years. We've added significant capacity to farm, to a number of other industries as well. And that's because we've seen demand for our products, and that will drive further private sector capex. So again, we feel that India is well positioned right now. The actions that we've seen the government take have been for the long term and to create stimulus for the economy in the recent past around the short term for consumption as well. And that's the right set of actions that will enable private sector capex to come in and provide a further boost.
Okay, you are an industry captain, but a lot of our audience are investors. I would love to know. The worry seems to be that we are not getting out of this growth quagmire. I know I'm maybe repeating this question, but I'm just trying to understand. We've seen a bit of an uptick in quarter 3 numbers relative to quarter 2 numbers. The hope is that Q4 and then Q1 onwards, some of these moves that the government has taken will bring about an impact. Do you reckon, I know you mentioned that there's no reason why India can't grow at 8%, but I'm not going that far. I'm trying to understand, do you in your wisdom believe that, let's say quarter 1 FY26 or maybe quarter 2 or quarter 3 onwards, we will actually see meaningful growth come back? Is there some estimate around the timelines that you have?
So if you look at rural India, we've seen growth coming back already. Okay. So our estimate for the 4th quarter is that tractor sales will be 15% higher than the previous year from an industry standpoint. And that's a fairly significant level of growth for tractors. It's in a very good place at this point. We see some of that momentum continuing into next year as well, though it's a little early to call next year from a rural standpoint. There is a lot of positivity around that. We've seen some slowdown in urban, but there again we feel that's more of a blip right now. So we would feel very confident that by Q1 next year we're going to see the economy on a faster track from a growth standpoint.
Okay, does the budget kind of try to address the urban slowdown as well? Because in effect, a lot of the taxpayer savings that happen impact, I would presume, the urban consumer.
That's correct. The tax effect as well as the rate cut, a combination of both of those, will provide a stimulus from an economic standpoint. The key is to ensure that inflation does not come back, and that's a fine balance. And therefore, the RBI has its task cut out, but it's a balance I think they've handled very well in the past. And as they do that, I think we will be in a good place to see growth coming back.
Okay. I'm sorry if I'm putting you in a bit of a spot, but because you have US business interests as well, and I'm just trying to understand, what are your thoughts on the India-US meets that have happened? There is, I mean, the tariffs, reciprocal tariffs, what have you. Ridham Desai was here in the morning and his note suggests that the risk of a large impact of reciprocal tariffs is very less. Would love to understand, one, that from you. And two, somebody invoked this thought and asked me to ask you this. I mean, what if there were trade agreements which were nearly equal to a free trade agreement between India and the US, and if all of those moves were to happen, what are the impact for Indian industry per se? Any thoughts?
So the starting point is that the relationship between India and the US is very strong. And I think that's a very important factor. Each country is going to take actions based on what is required for that country at that point in time. And on a longer term, we want the world to be completely free from a trade standpoint. And that's positive. We've seen the benefits of globalization in doing that. But we've also seen each country, and whether that's the US or China or Japan or Thailand or India, take actions based on what makes sense for every industry at a particular point. And our sense is that will play out in some form. I don't see a world where there is no tariff at all across the board. Right. That doesn't make sense for multiple countries because it depends on their phase or their life cycle at that point. So I think we will come to a place where it makes sense for both countries. There will be some industries that are hurt more than others possibly, depending on what finally happens. But I do feel that it will be in a place where it makes sense because India has to protect manufacturing in a significant way as well, and that's an important lever for India's growth for the next decade.
Yeah, I mean, and which is why my concern was that could that have an impact? Because for the last 3 years or 4 years, we've been talking about the China Plus One benefits coming into other ASEAN countries. Some of them have come to India as well. Do some of these trade agreements or reciprocal tariffs impact that manufacturing ambition in a meaningful way? You don't think that?
Given the relationship that we have between both countries, we feel that India will be possibly in the net gainer category. But as with the world right now, everything is unpredictable, so we shall just have to be agile and ready to respond.
Okay, let's move beyond manufacturing, Dr. Shah. I mean, and beyond just tractors and autos, which are, of course, doing very well for you. And by the way, I mean, it was great to see some of the large companies like yours, very few in Q3, which delivered very strong numbers, right? What's your sense about, one, the overall console performance for your group in the times to come? Because in some sense, it will do slightly better than GDP growth, but it will be a mirror or a reflection of what the inherent growth is. You are constructive on growth picking up for the country. Would that be safe to assume, therefore, that you are constructive on growth looking better for M&M in FY26 over what you've done in FY25, which has been a commendable job already?
That's a problem with doing well. And we've had a discussion at our board as well, saying that just the fact that you've done well raises expectations significantly. So the one thing I will say is, if you look at a Q3 results, it's our businesses beyond auto and farm that have actually grown much faster, and that's really helped. And auto and farm have done very well also, so it's been a combination of all of that coming together. And we feel confident that we can continue this because from our standpoint, it's more about operational excellence and ensuring that we're delivering everything we can by having our teams perform well on the ground. We have signed up effectively for growth at 2x GDP, and that's something we feel confident we can continue to deliver over the years.
But this is a mix of a lot of businesses, or at least one key business which is also very global in nature, and therefore maybe not as aligned to the Indian GDP growth as maybe to the world GDP growth, right? In Tech Mahindra, etc. So when I look at the console, you reckon being 2x of GDP is a bit of a conservative estimate that you're putting right now? Under promise and over deliver?
Well, if 2x GDP is under promise, then I think we are in a good place.
No. I didn't mean it that way. But just by virtue of what you've done in the recent past, it seems that 2x is a bit of an under promise. Just that, nothing else. Okay. What about the GEM strategy? We spoke about that briefly while we were together in the World Economic Forum as well. But now that you've just completed your Q3 numbers, how did you feel the rest of the non-auto businesses are doing for the group? And if you can just extend that argument for whether you see growth in those respective industries for the sector as well. I mean, whatever brief 50,000 feet view that you may have.
So we are seeing them do very well, actually. So if you go beyond auto and farm, First, I'd start with Mahindra Finance and Tech Mahindra. Both are on a very good turnaround track, and in fact, now we are talking about going beyond the turnaround to achieve full potential. Both have underperformed in their markets, and that is where the growth really lies for us, to get to industry average first and then go beyond industry average to be one of the industry leaders. If you look at our growth gems beyond that, hospitality is one area that's growing very well in India. Logistics is a second one that has significant tailwinds, and especially as we think about manufacturing growing in India, logistics will logically extend that growth rate as well. Real estate continues to be on a very strong path, and that's benefited our business. Renewables continues to grow at a dramatic pace because generating power from renewables is much cheaper, in fact, than fossil fuel. So there's an economic argument for that, and from a company standpoint, we are moving from 26% of our power being renewables to over 60% in just this year, with our business Sustain setting up various solutions for us, and that 60 will quickly go to 80 or 90% as well. And that was a very easy decision because it's actually cheaper for us. We save money by going to renewables. So you'll see more of that happening in that space. And therefore, we see multiple businesses, multiple sectors now well poised for significant growth.
Interesting. Some people go as far as to say it's a very small part of a business maybe, but that the next couple of years might actually be years where logistics businesses do really well. I know it's a small part of a business, just trying to understand. Any thoughts out there? It's a very niche question, but still.
Yeah, and not just next couple of years. I'd look at that for the next even 10 or 20 years. As manufacturing grows, as infrastructure becomes better, we're going to see logistics businesses grow at a much more rapid pace.
Okay. Last couple of questions, Dr. Shah. One is for this goal of Viksit Bharat, and as you said, both consumption and manufacturing have to contribute. For manufacturing, the issue that some people have been citing is that there is a skill gap in that, yes, there are jobs, yes, there are people available, but the right matching of skills isn't happening, and that's a problem for corporate India. Is that a problem that you are facing as well, and if so, how to resolve that?
It's clearly something that needs a lot of attention. It's not a problem we are facing today, but we will if we don't give it the due attention. So our focus is to do a lot of work with ITIs. We've in fact partnered with a number of ITIs to develop skilling programs for various people. The Mahindra Group is also focused on skilling for women. And we've taken on a target to skill and provide jobs for 1 million women. We are not going to provide all the 1 million jobs. There will be various other companies that do that. But we're going to focus on skilling, and that is an important contribution to society. So this is clearly an important part. If there are any companies out there that want to hire women across the country in various areas, please reach out to us. We're setting up skilling centers, and we'll be happy to work with you on that front, because this is something that we feel is an important part that India needs to do.
Why are men being left out?
Because we need to get equality in the workplace, right? So from that perspective, we need to have a lot more skilling for women.
Lovely answer. No, I didn't expect anything less. Okay, final thoughts really, Dr. Shah. And one is for all that India is doing on manufacturing, making in India for India, in some sense making in India for the world as well. Do you reckon that pie will grow larger as the decade rolls by? India's share of manufacturing for the world. Any thoughts there?
Yes, that has to grow larger because that is really the growth area for India. As we look at the goals for Viksit Bharat, manufacturing has to grow 16 times over the next 22 years. And I would say that companies in India are ready for that.
All right. Well, great. Lovely talking to you, Dr. Shah. Energizing conversation as always. Thank you so much for taking the time out and being with us.
Thank you.
Check. Loud round of applause for Dr. Anish Shah and, of course, Honorary Dr. Neeraj Shah. Gentlemen, if you can stand for a picture, then we can get both the doctors in the frame.
One, this was a delightful opportunity, but we also had a wonderful opportunity to hear Dr. Mohan Yadav, Honorable Chief Minister of Madhya Pradesh, on the Invest MP, the forum to raise investments, opportunities for that state by bringing all the main stakeholders on one platform. As we wrap up this conversation, let's listen into that piece as well.
गुवाहाटी से हमारा महाराष्ट्र से लेके गुजरात तक का सारा नदियों का क्षेत्र, सब तरफ से पानी है, सड़कें है, 5,500 किलोमीटर का राजमार्ग का अगर नेटवर्क है तो मध्य प्रदेश के पास कोई राज्य इतना बड़ा नेटवर्क लेके नहीं, जहां NH हमारे 5,500 किलोमीटर के, 550 ट्रेन हमारे यहाँ चल रही है, 6 एयरपोर्ट हमारे यहाँ चल रहे हैं और बाकी पाइपलाइन में बहुत सारे अलग अलग है। सभी प्रकार के सेक्टर में आगे बढ़ने के लिए टूरिज्म में आओ, टूरिज्म में भी किसी प्रकार के भी है। और क्या क्या इंसेंटिव देते हैं रेडीमेड गारमेंट्स में तो 200% में तो मेरा दिमागी काम नहीं करता, जोड़ बाकी करते करते कि 200% का इन्वेस्टमेंट को इन्वेस्टर को अगर इंसेंटिव दे रहे हो तो वाकई अब बचा क्या है। तो ये आपने सही कहा कि 50,000 करोड़ लगवाए और साल 2 साल में 25,000 करोड़ वापस देने की गारंटी दिला रहे हो, गलत थोड़ी कह रहे हो आप, क्योंकि ये तो हमारे लिए केवल सेक्टर को समझ करके डालने की जरूरत और निकालने की जरूरत। और मैं मान के चलता हूं गलत नहीं है, हम अल्टीमेटली कुल मिलाकर के हमारे सबके माध्यम से 21वीं शताब्दी भारत की होगी। माननीय प्रधानमंत्री के नेतृत्व में तीसरी आर्थिक अगर शक्ति बनाना है तो इस प्रकार के प्रयोग करने की जरूरत भी है और इस प्रकार के आमंत्रण की जरूरत भी है। और ऐसा माना जाता है कि अगर हृदय मजबूत है तो शरीर मजबूत है, हार्ट अगर है तो हार्ट की भूमिका में भी तो आना पड़ेगा। सारे कचरे वाले, कार्बन डाइऑक्साइड वाले खून को निकालते हुए ऑक्सीजन युक्त से ही शरीर चलता है। ये हमारा जो परमात्मा की दया से जूलॉजिकल सिस्टम है, ये अच्छा चलेगा। मैं उम्मीद करता हूं कि ये जो आज की समिट हमारी हुई है और आप यहाँ के माध्यम से मैं आप सबको निमंत्रण दे रहा हूं, आइए हम सब मिलकर के भोपाल की 24 और 25 तारीख को अमर करें।
ज्यादा ही आते हैं। अब मास्टर्स के लिए विदेश जाने वाली लड़कियों पहले तो अधिकतर लड़कियां छोटा मोटा बिजनेस करती थी, लेकिन अब बड़ा बड़ा बिजनेस करती हैं। नारी शक्ति दुनिया बदल रही है
और नारी शक्ति को और भी मजबूत करने उनके साथ खड़ा है SBI।
Since 1975, Pernod Ricard has been the driving force that brings people together worldwide. We are a convivial, responsible and successful global wine and spirits group with 240 plus premium brands available in over 160 countries. India, one of our largest markets, ranks second in global sales. Over 97% of what we sell in India proudly bears the tag Made in India, reflecting our commitment to the Make in India initiative. The Seagram whiskies crafted here are now savored in more than 50 countries worldwide, putting India on the global supply chain map. We are Pernod Ricard India.
Who do you call a man on a mission? The one who is full of josh and driven by action, who dares to dream big, who reaches out for the stars, who is bahadur and nidar, kuch kar dikhane ka rakhta hai jigar. Challenges kitne bhi aaye, who refuses to compromise. A man who never goes out of fashion and he deserves only to wear the best. I am Vicky Kaushal, man on a mission. Are you? Reed and Taylor.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Stand by for an iconic experience. For a quarter of a century, Lakshya Media Group has stood as a towering titan in the industry. We are the game changers for all things brand. Young, hungry, always ready. We make a mark with out of home, experiential, digital, tech, innovation, powered by more than 410 minds across 22 strategic offices in 8 award-winning verticals. Idea, execution, data, results. We do it all. Over 10,000 exciting campaigns across 1,200 plus cities and towns. We create impact across sectors. You can't take your eyes off us on the road, ground, and by the sky. Loved by the best and the biggest. We are the powerhouse behind brands that make noise. We are the powerhouse of innovation. We are the Lakshya Media Group.
पढ़ाई में लड़कियों के नंबर अक्सर ज्यादा ही आते हैं। अब मास्टर्स के लिए विदेश जाने वाली लड़कियों का नंबर भी ज्यादा है। पहले तो अधिकतर लड़कियां छोटा मोटा बिजनेस करती थी, लेकिन अब बड़ा बड़ा बिजनेस करती हैं। नारी शक्ति दुनिया बदल रही है
और नारी शक्ति को और भी मजबूत करने उनके साथ खड़ा है SBI।
Since 1975, Pernod Ricard has been the driving force that brings people together worldwide. We are a convivial, responsible and successful global wine and spirits group with 240 plus premium brands available in over 160 countries. India, one of our largest markets, ranks second in global sales. Over 97% of what we sell in India proudly bears the tag Made in India, reflecting our commitment to the Make in India initiative. The Seagram whiskies crafted here are now savored in more than 50 countries worldwide, putting India on the global supply chain map. We are Pernod Ricard India.
Who do you call a man on a mission? The one who is full of josh and driven by action. Who dares to dream big, who reaches out for the stars. Who is bahadur and nidar, kuch kar dikhane ka rakhta hai jigar. Challenges kitne bhi aaye, but refuses to compromise. A man who never goes out of fashion, and he deserves only to wear the best. I am Vicky Kaushal, man on a mission. Are you? Reed and Taylor.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Stand by for an iconic experience. For a quarter of a century, Lakshya Media Group has stood as a towering titan in the industry. We are the game changers for all things brand. Young, hungry, always ready. We make a mark with out of home, experiential, digital, tech, innovation, powered by more than 410 minds across 22 strategic offices in 8 award-winning verticals. Idea, execution, data, results. We do it all. Over 10,000 exciting campaigns across 1,200 plus cities and towns. We create impact across sectors. You can't take your eyes off us on the road, ground, and by the sky. Loved by the best and the biggest. We are the powerhouse behind brands that make noise. We are the powerhouse of innovation. We are the Lakshya Media Group.
Content Investments has sold close to 5.1 crore shares, worth around
Hello and welcome back. You're watching India Market Close. Now, one stock in focus today is...
पढ़ाई में लड़कियों के नंबर अक्सर अब मास्टर्स के लिए विदेश जाने वाली लड़कियों का नंबर भी ज्यादा है। पहले तो अधिकतर लड़कियां छोटा मोटा बिजनेस करती थी, लेकिन अब बड़ा बड़ा बिजनेस करती हैं। नारी शक्ति दुनिया बदल रही है
और नारी शक्ति को और भी मजबूत करने उनके साथ खड़ा है SBI।
Since 1975, Pernod Ricard has been the driving force that brings people together worldwide. We are a convivial, responsible and successful global wine and spirits group with 240 plus premium brands available in over 160 countries. India, one of our largest markets, ranks second in global sales.
Can you hear me? Audio is fine? Okay, super. I can.
Commitment to the Make in India initiative. The Seagram whiskies crafted here are now savored in more than 50 countries worldwide, putting India on the global supply chain map. We are Pernod Ricard India.
Who do you call a man on a mission? The one who is full of josh and driven by action, who dares to dream big, who reaches out for the stars, who is bahadur and nidar, kuch kar dikhane ka rakhta hai jigar. Challenges kitne bhi aaye, but refuses to compromise. A man who never goes out of fashion, and he deserves only to wear the best. I am Vicky Kaushal, man on a mission. Are you? Reed and Taylor.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Stand by for an iconic experience. For a quarter of a century, Lakshya Media Group has stood as a towering titan in the industry. We are the game changers for all things brand. Young, hungry, always ready. We make a mark with out of home, experiential, digital, tech, innovation, powered by more than 410 minds across 22 strategic offices in 8 award-winning verticals. Idea, execution, data, results. We do it all. Over 10,000 exciting campaigns across 1,200 plus cities and towns. We create impact across sectors. You can't take your eyes off us on the road, ground, and by the sky. Loved by the best and the biggest. We are the powerhouse behind brands that make noise. We are the powerhouse of innovation. We are the Lakshya Media Group.
For SBI. The setup is for SBI right now. It too. Yes. It's a swap. Piyush first and then. He's come late, everyone's come. You guys had lunch? I went up and had finally. You guys are doing a great job. No, it's not a pocket. It's a pre-draped sari. And it was actually with a Indian blouse, and Somalia got this with a skirt. So I said, let's just mix it and see what happens. Yeah. So we just made this up this morning. Yeah. She's like, as long as you'll carry it off. I said, I don't care.
So that's
Let's
fine.
try something
Or thoda
new.
loose karo. Yeah, everything is fine. I'm just my talk back is perfect. Thank you.
इसके लिए सिर्फ पीयूष सर तो डाउन द लाइन, तो एक चेयर आपको हटा देना पड़ेगा. मैं वहां बैठूंगी. ओके. I think they're just getting him to sit now, Piyush.
But he's very fickle, so I'm just hoping he sits at 8.
But if I'm sitting there, then I don't have the prompter for the read.
I can
So
hear
my
you.
look will be completely off if I'm trying to look there.
Is he mic'd up and ready?
मैंने नहीं कहा.
Mr. Goyal.
I
Goyal.
don't know. There was.
Yes,
I
I'm
don't know
aware,
why.
but is Mr. Goyal ready? Yeah. Okay.
Hi. It's too late. फटाफट 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 बस इसको नहीं नहीं जस्ट हाँ ओके चलो चलो तुम जाओ करिश्मा या स्टार्टिंग Tawfiq, you cannot come now.
Huh?
Can I do an audio check or can sir hear us? You can hear? Okay. Okay.
Yeah, very well.
Hello, sir. How are you?
Very good. Thank you.
Sir, thank you so much for your time. आपको सुनने के लिए यहाँ audience बैठी है. Everyone's very excited to hear from you. And all morning, everyone's been talking about the one topic that I think सबको आपसे ही जानना है.
मैं स्वयं आता मुंबई और महत्वपूर्ण विषय है विकसित भारत 2047 हम सबके लिए प्रेरणा भी देता है, सबका सामूहिक संकल्प भी है. लेकिन आज कतार के अमीर यहाँ पर हैं, तो हम सब उसमें व्यस्त हैं दिल्ली में.
Of course, sir. Of course. We are going to start in another 10 seconds.
Which language are we doing it in?
Sir, we'll do it in English.
All right. But since you asked me all this in Hindi, I thought maybe it's a Hindi show.
No, not at all, sir. But however you're comfortable, we can always mix so we reach a wider audience. You are proficient and excellent in both.
No, not at all.
What is this audio? This audio. Yeah. Yeah. Welcome. You're watching the NDTV Profit Conclave, the Blueprint for Viksit Bharat at 2047. India today stands at a defining moment in its economic trajectory. As one of the largest and fastest growing economies, we're not just aiming for higher GDP figures. We're laying the foundation for an Atmanirbhar Bharat. At the center of this is the crucial public-private partnership, and who better to discuss this than the man at the center of it all. Union Minister of Commerce and Industry, Piyush Goyal, is a visionary who has been instrumental in steering India's journey towards Viksit Bharat. Under his leadership, India's commerce and trade landscape has witnessed unprecedented growth, with India clocking its highest ever exports of about $776 billion in 2022-23, which is further poised to touch a record $800 billion this year. Mr. Goyal has also been pivotal in fortifying India's international trade relations. In 2022, he led the signing of an FTA with the United Arab Emirates, which he recognized as the fastest negotiated FTA globally. Mr. Goyal's visionary thinking is also evident in domestic initiatives designed to transform India into a global manufacturing hub. It was under his leadership that the production-linked incentive schemes, which now form the cornerstone of the Make in India initiative, were first launched. Today, as we delve into his vision of Viksit Bharat, we are privileged to gain insight from a leader who is one of the biggest driving forces behind India's transformation. Please join me in welcoming Shri Piyush Goyal. Sir, I'm going to start with And of course, the theme of today is Viksit Bharat, but I'm going to start by talking about the hot button topic. Since you are the master negotiator, have we started our preparations for the biggest negotiation right now, which is with the United States? Everyone since morning is talking about how India will swing the bilateral, which will be a model maybe for every nation in the world.
Madam, I think there can be no better negotiation than the Prime Minister. In fact, as one of the foreign newspapers mentioned, one can take a master class from Prime Minister Modi in negotiation. He was amongst the first international leaders of a large country to be invited to the White House just about 20 days into the new administration. He also shares a very strong relationship with President Trump. And that relationship over the years has only grown bigger and better. They both are leaders with a nationalist outlook. When American president talks about making America great again, and when Prime Minister Modi talks about Viksit Bharat, in a way is talking about making India great again. And that's why he termed it a mega partnership for prosperity. MAGA plus MEGA equaling mega partnership. And therefore, you will appreciate that this is a relationship between two friendly nations. It's a relationship between two trusted partners. And it's a relationship which is on the bedrock of two powerful democracies. Therefore, we don't compete as much as we complement each other. We collaborate for world good, for world and human good. And I personally think that we will have a good and even better relationship with the US. Obviously, we have started working on different ideas, engaging with different stakeholders within and outside the government, preparing ourselves for discussions which we hope will start soon. The bottom line is that this is an opportunity for India to expand trade with the US. In fact, we've set a very ambitious target of $500 billion by 2030. And we look at this opportunity as a way to make India more competitive, come out with quality products, look at mutual concessions and attractive trading conditions which will support growth both in America and in India for the shared prosperity of the people of both countries.
Sir, the point you made about MAGA and MEGA, something that the Prime Minister said, comes together to form a mega combination between India and the United States. Now, having said that, the fact still remains that there will be a negotiation. President Trump also believes in negotiation, and you're right, Prime Minister Modi is a master negotiator. When we talk about reciprocal tariffs, is that something that we in India will try to avoid and find a solution that works for both sides? What's the blueprint there?
Our biggest concern, due to which one would say India does have slightly higher than many other countries, has been the non-market economies. Economies which do not have transparent trading systems, economies which do not give equal access to India when we are trading with them. And therefore, to protect domestic industry, we have often had to resort to higher tariffs. The American problem is pretty much similar, where they have a reverse situation. They have lower tariffs, but because of which these non-market economies are flooding the market with a lot of goods which hurt domestic manufacturing. So in a way, the problem of America is the same as the problem of India. And what we are working on is for mutual benefit, for resolving these issues for both our countries, for businesses in both our countries. Our situation with America is pretty much different than many other countries. And therefore, as I said earlier, we complement each other. We can give mutual concessions to each other, tariff reductions, make it easier to import and export both between the two countries. We've already taken a significant number of measures to strengthen the US-India relationship. We have both strategic, bilateral, multilateral engagements. We have defense ties. We have strong ties in education and people-to-people ties. So together, we are working on several initiatives. Trade will supplement our efforts to do much greater good for the people of US and India.
So what is your message for industry? A lot of viewers who are watching this in our universe, this is an NDTV Profit Conclave, would be businesses who are wondering that if India lowers tariffs, do we get hurt? If India does not lower tariffs and we're exporting, do we get hurt? Market investors right now, one thing in the back of the mind is also tariffs. What is your message for them?
Well, they would be better advised to be bold, to believe in the India growth story, to have the confidence that India is competitive in the products that we make, and that they have a government which is a listening government, a leader who cares for every person in India, whether manufacturer, whether service provider, person in small industry, in big industry. And therefore, I don't think there is any cause for concern. My own feeling is we should enter into this negotiation from a position of strength, boldly, be willing to compete with the US. Madam, tell me, can there be any product where we cannot compete with an economy where the per capita income is $80,000 per person? We are at $3,000 per person. If there's any product where we can't compete with the United States with such a large differential on the labor costs, I don't see any cause for concern really. So I think Indian industry is better advised to be bold, to be confident. We can assure them that this is a golden opportunity to expand business. It'll open up a floodgate of new business opportunities. And my sense is those who are panicking today will regret tomorrow.
Said so. Well said. Those who are panicking today will regret tomorrow. Let me come to the question of Viksit Bharat, which is our theme. And this, I think the moment we are in right now with negotiations, etc., our place in the world on global trade is a milestone on the way of what we think is Viksit Bharat. I'm very keen to know, sir, your vision of Viksit Bharat by 2047. There is one definition which is per capita income, but what is India's vision of Viksit Bharat?
I think Prime Minister Narendra Modi has laid out a very nice roadmap as we go along this journey in the Amrit Kal. In the first 10 years, his focus was to make sure that 140 crore Indians, every person in India, is assured of good quality housing, food, clothing, education, healthcare, electric connection, cooking gas connection, digital connectivity, access through roads, railways, air connectivity. If you recall, roti, kapda, makan, bijli, sadak, pani, swasth, shiksha, these were the issues which grapple the lives of almost a large part of India for decades. Generations would pass with people still struggling to build a home of their own. Prime Minister Modi in 10 years, through his very laser focus on public welfare and development, has taken 140 crores lives to a better level of living, better quality of life. He has ensured everybody has a bank account of their own. Almost 4 crore families have got a free home in the first years. Another 3 crore will get it in the next 5 years. Every home has a toilet of its own, cooking gas connection, electricity, digital connectivity, road leading up to their village and their home. Now, water is going to every home through a tap. Basic needs of life are all being taken care of. This is leading to young Indians, and our average age is only 28.4 years. Each of these young person connected with the internet, either through a smartphone or a television or a laptop, is today aspiring for a better quality of life, wants all the good things in life which the rest of the world enjoys. And given India's purchasing power parity, the fact that our costs are lower, our living standards are better at lower costs, we are in a situation that as the economy grows from about 4 trillion to 35 trillion by 2047, we will have a per capita income of nearly $20,000 plus. And that will make sure that every citizen in this country has a good quality of life with a good job or a good business, a good startup or entrepreneurial work, maybe running his own service center, providing professional services as we see more and more service sector growth, engage with tourism, engage with infrastructure development. So the opportunities in the next 20 years, 25 years are going to be massive in every field. And in the twin pillars of growth, investment-led growth and consumption-led growth, I can see a very, very rapid transformation of the Indian economy, resting on calibrated reforms to support not only ease of doing business and cost of doing business, but also ease of living. And a life which is comfortable, a life which is satisfying, a life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat. If you recall, Deen Dayal Upadhyay had explained it as integral humanism. Every aspect of a person's life. It could be your family life. It could be your life amongst friends. It could be the society you live in. The entire human requirements, spiritual, material, cultural, all of them put together, the quotient of happiness, everything makes for a good, satisfied life and Viksit Bharat at 2047.
Well put, sir. Thank you so much, Shri Piyush Goyal, laying out that excellent and very detailed vision, which is also about quality of life, not just a number of per capita GDP. Thank you so much for your time, sir. We here at the NDTV network really appreciate it and appreciate you laying out your vision. And of course, we're all waiting to see what the outcome of these bilateral negotiations are. We're sure India will come out on top. Thank you.
Thank you. Namaste.
Right. What a fascinating conversation, and I think that sets the stage for the rest of the day as well. It echoes some of what you've already heard through the day so far in the sessions and the speakers that have come to this conclave, and the next session proves to be very, very promising. Because a nation's economic strength is built on the foundation of a robust and inclusive banking system. As India moves towards the vision of Viksit Bharat, the role of banking becomes even more critical, driving financial inclusion, powering industries, and enabling growth at every level.
Absolutely. And ladies and gentlemen, in an era where digital innovation meets traditional banking strength, our financial institutions are reshaping how India saves, spends, and grows. And who better to discuss this than Mr. C.S. Sethi, a leader at the helm of India's largest bank, SBI. Sir, may I please welcome you on the stage, and to take this conversation ahead, we are joined by Tamanna as well as Vishwanath Nair. Ladies and gentlemen, please put your hands together for this.
Thank you so much, Professor. Sir, you are here. Yes. Okay.
All right. Thank you so much for taking time out, sir. Now, from funding infra and industry to enabling financial inclusion at the grassroots level, now banks have served as a catalyst for national progress. A strong and inclusive banking system is the backbone of India's vision for Viksit Bharat. Now, over the years, India's banking system has undergone a remarkable transformation with stronger profitability, digital banking, fintech innovations, and government-led initiatives bringing millions into the formal financial system. India's largest lender, State Bank of India, has been at the forefront of this change. To discuss how the banking system can accelerate India's journey to Viksit Bharat, ensuring both financial inclusion and economic resilience, we are joined by now Mr. C.S. Sethi, the Chairman of State Bank of India. Welcome, sir.
So, sorry, just before we start, I wanted to make the point, sir, that we analysts every day who look at your sector as an investment. And over the years, what I have noticed is that from private sector banks, every analyst worth their salt is now talking about public sector banks, led by SBI, being the best investment because of clean balance sheet, because of faith of depositors and investors. So we should start by talking about this huge turnaround in the perception of banks and, of course, SBI leading from the forefront.
Thank you. Thanks for giving me this opportunity. I think the trust element was always there, right? We, public sector banks generally carried the great amount of trust of the depositors. What has changed in the last few years, particularly post-asset quality review in 2015, that the recognition, recapitalization, and the reforms, which have really worked well for the public sector banks. Today, the balance sheet, as you mentioned, are cleaner. And more importantly, I think from the last cycle, we have learned our lessons in terms of how to use the great amount of data which is available now for underwriting the loans. There's also a mix of advances, loans which have happened. Most of the public sector banks were wholesale lenders. Now, in the last decade, we have moved to a judicious mix of retail and retail agriculture, MSME, corporate. I think the books are much more balanced in terms of the loans.
So when you're talking about this Viksit Bharat idea, the idea that you're in about 22 years from now, you're going to have a developed nation. Obviously, banks will form a core part of it because financing is the necessity. But if you can tell us a little bit more in detail as to what, say, State Bank of India and the broader banking system can and will do in these coming 20 odd years, what can we look forward to?
So I think you called it Blueprint for Viksit Bharat, right? One of the critical elements for this blueprint to work is the capital. And today, much of the debt capital actually comes from the bank loans. Earlier also I mentioned that the nature of savings is undergoing a change. There is a shift in the depositors' behavior or the savers' behavior, that an asset allocation is being adopted across the segments of the savers. So if we really have to contribute to the capital which is required for our goals of $35 trillion economy by 2047, this capital may not come purely from the banking system. It has to come from where the savings are going to. Even today there is an immense need in terms of getting this capital, particularly debt capital from the mutual fund industry, insurance industry, pension funds. So there is a requirement of deepening the bond market, the bank loans alone will not be sufficient. If the savings are getting allocated, I think the debt capital also come from these segments. I think this is one point which, going forward, we will have to see more depth in the market. While the banks continue to play an important role because the 35-36% household savings, what we have, one of the largest household savings in the world, they predominantly go to the banking sector currently. So that role will continue to be played, but I think significant contribution has to come from the other sectors also.
Do you see that changing, sir? The shift in saving patterns? Because, you know, the rate of deposit growth and difficulty in deposit growth, which a lot of financial institutions now face. Do you see that as a change in pattern which has now begun and will only deepen? I'm wondering, as a veteran banker, how do you see it when maybe relatively more households want to invest, say, in a mutual fund and not put their money in an FD?
So that shift is kind of irreversible despite whatever is happening in the markets. I believe that as I mentioned, people would like to allocate their savings. It is just not that, you just put in your bank account and not do anything about it. It is not only in terms of it is going to the investments outside the banking system. Within the bank also we see that the ease of doing transaction has contributed to a significant term deposits. So if somebody had 50,000 rupees in the past, and if they had to make this 50,000 rupees into a fixed deposit, going to the branch, filling up the form, people didn't bother about actually moving that funds to fixed deposit. Now in 2 clicks, 3 clicks, you can shift your, and there's no click also required if you are actually putting the sweep. So which means that there will be a shift in terms of, I think we should be okay with as long as it is moving from savings to fixed deposit.
But it's there.
But if it is going out into the market, which is inevitable, I think that is what point which I'm making is, for Viksit Bharat, the capital has to come from domestic capital, from the banking system, and also the sectors where the savings are being acted upon. And also we need foreign capital to come in. I think that is also another thing what FDI, role of FDI in the development of infrastructure, other corporate, capex programs is extremely important.
I want to jump to the asset side of the story. Now, as the largest lender in the economy, obviously you're a barometer for this entire ecosystem, right? One thing that seems to be a constant sort of question from the media and from people outside is when is the private sector going to actually start spending on this, on their growth, on their capex? I wanted to get your view. Are you seeing green shoots, or are we well past the green shoot stage? A, and B, what can you do more so that the private sector does feel more comfortable to come out and spend and thereby help the growth?
The private capital expenditure, from where I sit, I see that private capital expenditure is happening. Maybe, we are kind of an outlier because we are the largest player in the project financing. So obviously, whatever projects there in the market will come to us. So if you see our pipeline, I mentioned in my analyst meet also that we have both in terms of the capital expenditure by the public sector as well as private sector is almost about 2.5 lakh crores, which is a very good visibility. And I also mentioned that the sectors which are not actually spending is the core sectors like steel. And it's not about that they don't have the domestic consumption or demand, but I think everybody is watching what is the external sector is going to be. You did mention something about tariffs, right, to the Commerce Minister. But it's a fact that all of these core sectors are waiting, particularly steel is waiting, that how these tariffs, not in India, but in other countries, how is it going to play, whether it is going to lead to any dumping. Yeah. So this is something what everybody is watching. But otherwise, I see the sectors like, renewables continue to be doing well across the segments within the renewables. Roads are doing well and data centers are doing well. So if we measure the private capital expenditure only by way of steel, cement and these things, I think we need to wait for some more time for the dust to settle down in the West and then things become clearer.
Well put, sir. So in that sense, the big boost for the economy broadly for the last, I would say 2 years or so, has been a huge push in government expenditure and public expenditure. That the fear is, and when I say fear, I temper it with maybe what equity participants are seeing broadly, that is there going to be now slowdown in government capex? Because there is only that much that the central government can spend and actually go out and spend, even if you budget. What is the sort of trend that you would observe? Is that now a cycle which has bottomed out and will peak again?
No, the government is committed. I think FM during her visit, post-budget also made it very clear that the government, central government's commitment to the capital expenditure will continue to be there. And what we have seen is that we need to look at the capital expenditure from the government side. Three components. One is the central government commitment, almost about 11.1 lakh crore for the capital expenditure. And the capital expenditure programs of the public sector entities, that is almost 4 lakh crores. Yeah. Our assessment, of course, FM mentioned something about maybe 1 lakh crore from the state governments, but we see that through the grants given by the central government, there is a capital programs about 4 lakh crores from the state governments, which add up to a significant number of 19 lakh crores. So I don't think central government or any of the governments, it is a fact that most of the state governments in the last 1 year, because of the elections and so many commitments, were not able to spend as much on the capital expenditure program. We are seeing that even the state governments are coming out with their capex programs, which means that the commitment towards capital expenditure is definitely there.
I want to touch upon, we've talked about private expenditure and government expenditure, but private consumption and thereby banks' role in providing that retail loan boost. Over the last 1 year or so, banks have, a little over a 1 year period, banks have slowed down that piece. One outcome of that is that people are not now spending as much as they used to spend 18 months ago even. To your mind, are we done with that period where that caution was warranted? And maybe now things are starting to look up a little bit on the retail consumption side.
No, on the retail personal side, the home loans are doing very well. I think the concern is mainly in terms of unsecured personal loans. I believe that it is bottomed out. From here, there would be growth in the unsecured personal loans. The degrowth or deceleration which has happened mainly several factors. Is not only about the regulatory action in terms of increasing the risk weights. It is also a fact that many of us looked at the individual leverage and we realized that the small value loans, particularly 50,000 to 1 lakh rupees for the new to credit customers, there's been a building up of the leverage, and that made many people to relook at their models of underwriting. And one of the important systemic development which I keep talking about is the frequency of bureau data refresh, which is now currently happening every 15 days. That means there is a greater visibility of the leverage at the individual and the family level. So obviously that will prevent multiple borrowings and eventual defaults on the new to credit segment.
So, sir, just a very interesting thing. Of course, you were here in Mumbai, finance minister as well, and you've launched the SIP for 250 rupees under the aegis of State Bank of India. When we talk about, and the reason I mention is when we talk about Viksit Bharat, it can go nowhere without financial inclusion. And I can't think of a larger entity or a better poised entity than State Bank to actually take that further, not just physically being present in every corner of the country. What is the role of financial inclusion and allowing and really giving way to such kind of savings? Letting people access these kind of savings. How crucial does that become when the big urge is now to spend on something that you probably cannot buy now, pay later, but to really encourage this kind of saving?
See, this is also another element of blueprint for your Viksit Bharat, You can't truly become a developed nation unless we take every segment of the society in our economic development journey. And when we talk about financial inclusion, the financial aspect of it had element of savings, credit, and insurance, right? Investment, the fourth piece. The savings had element of, having a bank account, and we have done phenomenally well in terms of Prime Minister Jan Dhan accounts. We take pride in the SBI. We maintain almost more than 15 crore Prime Minister Jan Dhan accounts, which all of them have started with zero balance a few years ago. But today, they're all funded. Less than 1% of these accounts are zero balance, which means that people have caught up with the savings habit, right? That is one part. The second segment in terms of the insurance, which with the support of the Government of India, the Jan Suraksha program has been extremely popular. And we have almost 40% market share, and millions of people are now covered under the accident insurance, life insurance, and the pension schemes of the Government of India. So the piece which was, in our view, was missing is in terms of how do we make them start a little bit of investment. If we think that the capital market has helped, or the mutual fund industry through the capital market has helped to create the wealth, if not the wealth, at least increase their, the potential from their savings, is the background of, this Chota SIP, what we call, 250 rupees. And this is completely digital journey. Again, we will achieve the twin objective of making them digitally savvy, which they are. And the second thing is that, and this 250 rupees is not a monthly SIP. I think a lot of people think that 250 rupees mein kya hoga? How long you'll have to save? But we notice that a lot of people in the rural and semi-urban areas do a daily savings. Wow. So this SIP, initially we are starting with fortnightly and monthly, but we would like to have a daily SIP. At the end of the day, if somebody has got 250 rupees, can I put in this? I think this is, in our view, is a great step towards financial inclusion in the investment side.
Excellent. Just sticking to this financial inclusion theme a little bit, as SBI, banker to every third Indian, I mean, you pretty much hit the financial inclusion goal. What is it that that you, as a bank, I'm not talking about as the SBI group, but as a bank, what more do you think that you can do for the broader population at this point?
In terms of financial inclusion, I think the credit is still a challenge for them. We have done a very successful program through the Prime Minister's Swanidhi, which a lot of people don't understand that SBI is capable of giving 10,000 rupees loan to a 10,000 crore rupee loan. And this is the range, right? But I think a large number of people are still out of the formal segment. We need to bring them, and how easily the access to this credit is made available. And it is not only access, the quality of credit that, need to assess their requirement and make it available at affordable rates and at the time which they need. I think these are some of the elements I still believe in the financial inclusion we need to work on. And MFIs, NBFCs have done a great job. I think we must give credit to them that in terms of the financial inclusion, last mile connectivity for the mainstream banks have been provided by them. I think that journey will continue.
Thank you so much, sir, for speaking with us. Truly inspiring to hear your vision for the banker to the nation, really. And the way also this bank has modernized and digitized as well. Thank you. Please give it up for Mr. Sethi.
We just take a photo.
We'll need to take one picture. We'll need to take a picture. Come, Rishi.
Thank you so much, Mr. Sethi. Big round of applause, ladies and gentlemen.
Well, Alex, now, I have a question for you. Some say AI is coming for our jobs, but some say that AI might create more jobs than ever. I think the answer lies somewhere in between. Won't you agree?
Remind me to ask you later whether you're going to take my job. Yeah, she doesn't have a response yet. But, you know, the thing about it is that it is a talking point. I'll tell you my own instance, right? I was thinking at some point that I should look at voiceovers as an opportunity, and you hear about Scarlett Johansson's voice being used. It's pretty easy nowadays, right? You have an artificial intelligence language that is capable of generating content. You have a lot of the stuff that we do that can either be enhanced or replaced, depends on what you think. And speaking of that, I write a newsletter every week, and I've had so many people in the newsroom say, hey, you know what, why don't you feed a few of the talking points that you have into this language model, and they'll throw your newsletter out for you.
Absolutely.
What have I said?
You've always said no.
I've said no because...
Considering that, you know, your creativity cannot be replaced by AI.
Exactly. Because the voice that you have, and I'm hoping that that is true for anchors as well. I was told a short while back that anchors will not be replaced by artificial intelligence, and I fervently hope that that is the truth. But the reality and the way that I see it is that human connect is not something that is going to be taken by artificial intelligence. But at the same time, you have so much that you can do that can be enhanced, Mahima, by artificial intelligence, not least of which something that we spoke about earlier today. We're talking about the broking industry, looking at how they can look at vast pools of information and make it simpler for a wider audience of people and remove that asymmetry of information that currently exists.
Absolutely. And I think for your everyday tasks as well, you know, which you repeatedly do, I think AI makes that easier for you. Maybe that human touch might be missing, but something like, you know, like you just did, right? You just you asked Siri to remind you that, you know, please remind me to ask this question again. Simple tasks like that, you know, is something that AI will make easy for you. And I'm sure that going ahead, you know, AI will probably, you know, enhance in terms of, you know, the quality of output that it is giving, and productivity for us, you know, will improve in terms of AI. And for us, we can, you know, use that time, you know, into something better, a better, you know, work that we can do when it comes to, you know, using a human brain and not AI.
Yeah. So everybody listening in at home, and perhaps even in this room, perhaps you can tell us how you think artificial intelligence can enhance the work that you do. My biggest fear is that I will forget the language that I know if I get somebody to write it for me, even an artificial intelligence language model. But that's a conversation for another day. The bottom line, of course, is what this panel is going to be talking about. And why don't you set it up for us?
Absolutely. So basically, you know, today we're going to be discussing, you know, different models of AI, and of course how AI is shaping up things, and, you know, as to how AI will, you know, contribute to Viksit Bharat 2047. And, you know, we're going to be joined by, you know, a great panel, and to set the stage right, you know, at the forefront of AI are, you know, Mr. Puneet Chandok, President, Microsoft India and South Asia, Mr. Manu Chopra, co-founder and CEO of Karya AI, Dr. Pratyush Kumar, co-founder at Sarvam AI, and Mr. Ronnie Screwwala, co-founder and chairperson at Upgrade, who is joining us now. And joining them, our colleague Vishnu Som is going to welcome them. Ladies and gentlemen, please put your hands together in welcoming all of these gentlemen on the stage.
All of you. Good to see you. Come.
We've already introduced you, sir.
So right on cue, you know, you walked in and...
Big round of applause, please. Ladies and gentlemen.
Come, please. Come, please. Well, that entry was AI perfect, wasn't it? Like right on cue, the doors opened, the session intro was given, and they're all here. Thank you all so much for making it. I look forward to this conversation because it's something we keep talking about. So let me put this in context. Welcome all of you, and welcome all of you over here listening in. Today we are diving into a topic that's shaping our future, artificial intelligence in India. With the country's tech scene exploding, we ask, what does the future hold for AI here? From Bengaluru's burgeoning startups to government initiatives like Digital India, AI is not just on the horizon. It's already transforming sectors from healthcare to agriculture. But what about the challenges? Will India lead the AI revolution, or will we face hurdles in privacy, in job displacement, and in the ethical use of artificial intelligence? Now, experts predict that AI could boost our GDP by billions. But the question remains, how will we manage the ethical implications and ensure inclusivity? Will our education system rise to train the needed talent? And crucially, can we craft policies that balance innovation with responsibility? Join us as we explore these exciting but, I dare say, daunting questions about India's AI journey. We've got super panelists, real experts on this. Puneet Chandok, President, Microsoft India and South Asia. Thanks, Puneet, very much for being with us. Manu Chopra, co-founder and CEO, Cardia AI. Dr. Pratyush Kumar, co-founder of Sarvam AI, and Ronnie Screwvala, familiar face, somebody we've all grown up with, co-founder and chairperson of Upgrad. Thank you, Ronnie, very much for being with us. So, I could talk about policy, we could talk about ethics, we could talk about jobs, we will. But I think for a larger audience, the question which everybody wants to know is that how is AI going to look like for us as users, let's say 5 years down the road? It's evolving so fast. So let me ask all of you that question. Would you like to start, Puneet?
AI in the next few years will be a guardian angel. It'll be a coach, it'll be a companion to all of us. It'll have a lot of intelligence, it'll have a lot of empathy, it'll have a lot of agency. I think it'll make all of us a lot more efficient and effective at what we do.
Empathy. So how smart is that? Because if you're getting into a very exciting theme already. Empathy.
I think technology, for the sake of, technology, of course, matters, but what matters is how technology feels, right? And I think where these agents and where this AI is headed is a lot more personality, a lot more context on who you are. And I genuinely believe in the next 5 years, it'll be Puneet plus Puneet's AI. So if somebody hires me, if I'm on LinkedIn as an example, I'll say it's Puneet plus Puneet's AI. It'll be you plus your AI.
All right.
And I think that's the world we're getting into.
Ronnie? 5 years from now.
I mean, if intelligence meets artificial intelligence, it has to be a 2 plus 2 is equal to 22. And I think that's what it will be, because it's going to be a combination of both. And I think for all of us, we need to take it that it's going to be in that manner, rather than actually looking at it as going to be a threat. I think today everyone's looking at it much more from a threatening perspective. And again, as my favorite saying goes, overall, we need to take this on as more as an evolution, more than an sort of an apocalyptic event where we'll always keep dreading it. And if you differentiate between the two, I think it's going to evolve. I think 5-year statements today will be almost impossible. We'll need to be better than astrologers to actually talk about where that takes it.
So, Manu, the reason I thought I'd start this conversation is because I'm hooked on to Grok. No advertising contract, not yet at least, but I use it because it generates pictures for me. And so I decided to, I'm Bengali, parochial one at that. So I asked it to draw Newmarket in the 1920s, in the rainfall, with women street vendors, with a few old cars. And it came up with something absolutely incredible. And it gave me 3 or 4 options. I regenerated and it gave me something better. It suggested twilight, so I clicked twilight, and it had it in twilight as well, in the rain. Now, this is absolutely incredible, which is why I asked the question, in 5 years from now, what more can AI do for us?
I mean, it's a very, it's not a good thing to be making predictions right now. Because I'll be like, 5 years from now, this will happen, and it happens tomorrow.
But is that the problem? Is it moving so fast now that we really can't look 5 years ahead?
I think, look, one of my favorite quotes about technology, if we step back, is from Kintaro Toyama. He says, technology is an excellent amplifier of human intent and capacity.
Yeah.
I think of AI the way Puneet is talking about it, in terms of amplifying our intents and our capacities, right? So we've been playing around with deep research. It's absolutely phenomenal, right? The kind of things it can do, it accelerates the pace at which my team works. It allows us to do so much more for our communities. And I really believe, look, AI technologies that we are building, the kind of work that Pratyush is doing at Sarvam, This is really important because it just accelerates earning and learning opportunities for not just people like us on the stage, but for low-income communities all across the country, right? And I think it's our responsibility to make sure AI productivity is equitable, right? But I think the fact that it'll dramatically accelerate productivity, in my mind, is a given, right?
Ronnie had a point?
I just want to add that I think one thing for sure in 5 years is we won't be as wowed as we are right now. And the reason I say that is because right now I think it's all tough. I come from the storytelling world in my previous avatar, and I think when the wow with which you explained that I fed it in and gave me these 3 fascinating stories, I think a lot of that will evolve. It'll become part of us. And I think that's something if we harness. So one of the things I definitely think in 5 years is we won't be that wowed with it in a good way, not in a bad way.
Right. But I am wowed for the moment. I mean, it can design music for me. You know, I can ask it, I can describe a certain type of music that I want, and it can do it for me. A few years back, I would say even a few months back, if we wanted information, the phrase we would use is, let me Google it. That's already obsolete. You no longer Google it necessarily. You can grok it, you can chat GPT it, you can deep seek it, whatever it is. Again, in your mind, 5 years from now, what's exciting which is coming up?
So one thing that is surprising about this area is that the surprises don't stop. Right. So I do not know if 5 years later you won't be wowed, right? And as a practitioner of the technology, so the technology is still very early in the evolution of any technology, just few years into it, right? What you are echoing is a sentiment of the user, but as a builder, there don't appear clear limitations on why this does not improve further, right? That's a scary and exciting thought simultaneously, right? But for me, what is most interesting is what Manu said, which is that this technology becomes a common denominator for everybody, right? Because at the bottom line, some of us are creating images, some of us are doing deep research, right, and improving productivity. But the 1.4 billion Indians being able to access healthcare, education, whenever they needed advice, mental advice even, I think making it common denominator, just like, for example, today the per capita consumption of data, India is a leader. The per capita consumption of generative AI, I would see India being the leader in 5 years, and it's because this technology will make everybody so much more capable and enjoy a better quality of life.
Let me ask one more basic question before we get into specifics. Johnny, this one is to you. Education. If there's AI, then, you know, the way you and I studied in school and in college and did our research, you don't need to do that anymore, right? I mean, that's the pessimist in me speaking. Because I can quite easily tell you, and this is the truth. I promise you, this is the truth. I've got about 8 or 9 questions. I looked up AI and I got them, right? How do you learn if you've got a machine doing those functions for you?
No, I think that's a little too far-fetched. I think it's also then destructive. So I think it's going to have to be coupled. You're looking there and you're looking at this as an add-on, but there is a lot of the other part of the day where you're doing a lot of your own logical self. So I think you just need to look at it from that perspective. I think we need conviction, actually. Right now you're talking about everything else from a caution point of view. True. If you just look at it with conviction, I don't think you're going to displace the schooling system. If you see what's happened in the last 50, 60, 70 years and overall in learning, there's a certain base camp that you would have to necessarily go to. So I'm not a subscriber where this is going to be completely replacive, and the next generation, of course, every generation is getting wired in a different way in which they consume things. But some things I think will remain constant. I think the coupling of it rather than the decoupling is what's going to be important.
Puneet, the other, of course, common question is jobs. And I think it's, again, in a sense, a worry that people have addressed and have moved on. Will it take jobs is perhaps no longer the relevant question. It's how do jobs change given the reality of AI? And that has to do with skilling. So we'll keep skilling out for the moment, but to the basic fear that people have, AI is around, I'm going to get canned. How would you respond?
I think just sticking to Ronnie's framework of kind of just thinking about the positives of this technology, right? To me, I think this has the ability to reduce the chord between knowledge and agency. And let me explain to you, right, which is, my favorite example is you go to any hospital in this country, the first year doctors are out of work, the 20th year doctors are out of time. Because everybody wants to go to the 20th year doctor. Same for teachers, same for lawyers, same for technologists. And if we can create a co-pilot, if we can create an AI agent which brings as much information, as much expertise, as much judgment to the first-year doctor and the first-year teacher and the first-year lawyer, imagine the work they can do. So it reduces the floor, it raises the ceiling, right? I think specifically on jobs, it'll both create new jobs and it'll change the nature of our jobs. And on creating new jobs, nobody better than Manu to talk about this because he's genuinely creating these jobs. I can talk about it, but he should talk about it. And then I think changing the nature of jobs, right? I think we're used to defining jobs as a title. Like, you're the chief editor of this thing, I'm the CEO of this organization. All our jobs are a collection of tasks. And I think this is time for us to reflect on, going back to your piece around saying these questions and the research work and the grunt work, that can be taken away. Now that frees you up to do so much more, right? So I think that to me is exciting. New jobs, changing the nature of jobs, and then cutting the cord between knowledge and agency, and especially for a country like India, getting people started much faster, much better to do a lot more work and a lot more amplification, as Manu said.
Manu, I'm coming to you on that, but in terms of specifics, I do know that specifically we are working on agriculture and AI already presently in the country. We are looking at AI being able to decipher fairly complicated medical reports and then advise people. We are looking at AI interpreting legal documents and then advising people as well. How is this fundamentally changing our lives in India right now?
Look, for our communities, information asymmetry is still a problem, right? And it goes back to what everyone is talking about, right? Like access to this information, that is still a challenge, right? We thought that internet would change that, right? It made a huge difference. It certainly changed all of our lives, right? But with access to these technologies, to this information in your language, through voice, the kind of work that so many people do is really critical, right? Question, I think, look, the reason optimism is like, it's hard to demonstrate with the mic, but I'm going to try. Think of this as like past. A certain subset of this is the work that AI can do for us, right? Which is the work like coming up with questions. But because that's happened, now the kind of work we can do with AI is so much larger, right? One of my favorite thinkers on this topic is Eric Brynjolfsson, who says that no work, but then there would be no NDTV Profit, there would be no vaccines, there would be no, several other things that we did because of the technologies that were created, right? So, given that these basic needs will be taken care of, right? Access to healthcare, access to information is taken care of. The question very quickly becomes for us is how do we make sure the vast majority of our communities are able to use these tools to become more productive, right? To use them to actually make more money, to learn more stuff, to go ahead in their lives, to thrive, right? To just have full, complete, holistic lives. And I think there we are very excited about the kind of new jobs AI is creating. In general, it requires work. It requires us to create almost a just transition between what people were doing earlier and the new kind of stuff that we have to do. But I think of the opportunities here across ending information asymmetry, connecting people to what they need this like very quickly. I was flying into Bombay this morning and I saw these incredible mountains I'd never seen before. I took a photo and the first thing that I did was ask my GPT, what is this? And it told me exactly the wildlife. Information discovery, and I really like what Puneet said about reducing the gap between knowledge and agency.
No, note to self, I'll do that next time. You had a point, Ronnie?
No, I wanted to calm down the temperature and the way we kind of look at that, right? Because I go a lot by my gut feeling. I think I pride myself that I'm a culmination of the choices I make. You make judgment calls. So if you look at all of that, then you look at the practical of how this is going to augment and not necessarily replace. You will just look at everything in a very different way. I think we're in that hyper mode today where we're going, oh my God, what is this going to do for all of us? Versus how much is it going to actually augment us? How much is it going to segregate and take a few things off the plate so that we can actually become even more smarter or being able to do what we want to do. And I think for India, it's an incredible opportunity. I mean, your central theme today is one of 2047. I think this is one of the most powerful. It's a level start. I think those are the ones that I think should be more exciting for all of us to really look at.
You know, we're talking about 2047, and thanks for bringing me back onto the theme because I am tremendously excited at the prospects. we have our model of Made in India, Atmanirbharta, which is all very well, but what India building for the world? Is that something that's possible? Because there are those who, for example, look at large language models, LLMs, and say, it might work for some, it may not necessarily work. In terms of AI, what, in your opinion, should it be?
See, I think it is a mindset change, right? We have been an arbitrage economy for a fair period of time. We do have 600 million people that are in rural India, have changed. We have evolved in terms of ambitions and for us to be able to take this. So I think our next road is to create more intellectual property, to be at the higher end of it. And I think that possibility is very, very much there. And the main part is if we start looking at only the top of the pyramid, we won't go very far. We'll miss the opportunity. And the bottom of the pyramid is not something we can really tackle right now. But that 400, 500 million people, which is larger than the population of most of the developed countries, if you can harness them with basic knowledge, evolved knowledge, see, because otherwise we just think AI is for coders and for engineers, but it's actually for everybody. So the minute we build that into our horizontal versus the vertical, I think the mindset will change.
I'll come to that in a moment. Pratyush, in as much as we talk about applications and the software changing, there is a very important aspect of all of this is the hardware, the computational abilities which exist in India, the supercomputers, the available 2047 decides to experiment with different models. How capable are we at having that hardware backend?
I'll just take a minute to talk about jobs because I feel that it's moving so fast that I don't think anybody is optimistic. I think we'll land in a better place given where we are and where our per capita income is. But what I want to also highlight is that no one knows, right? So this is a big social experiment we are going with as a globe. 2 degrees faster than other technologies, and it seems to have an impact on certain sections of the economy which are typically thought of as defensible, right? So I just wanted to put that out there.
Sure.
I think we need more dialogue that is grounded in policy, technology, economics that understands this and actually lands us in a place that we'll do well, right? About hardware, the way I see it is it's a set of raw materials that to build applications on top of the models that make it usable across the country. If you have these two things, the most important hardware right now is the NVIDIA chips, which I think the United States is now controlling how it gets diffused across the world. Chips as well. And the layer below that is actually power. Right? So these will be the key raw materials, the talent to build the models and to use the models, and then the hardware that can accelerate these models and the power that is required to power these to actually run the models at scale. And we will have to build at all 4 layers, right? And India has to build chips going ahead. We were really behind in the last generation of semiconductor revolution. Even in power, we have actually one of the few countries to have a unified grid. But you need to have nuclear reactors. This is a well-established factor. There's enough money going into the US for that. So these are the second, third degree investments we'll have to make. And all of them are infrastructure. But now is the time when we go out, build these models. And I think in the next year or 2, we should be making India one of the largest consumers of this technology. So we stand up and are given notice in the global scheme of things.
Just one more point on this. We've seen the Chinese DeepSeek model come up recently. It's fascinating in terms of its ability, and it's also interesting because it resulted in a crash in the markets of NVIDIA and other chip makers. Because apparently the Chinese and this particular company is able to achieve realistic results on the basis of far less computing power. Optimization of hardware going forward, is that perhaps the best way to maximize the potential of the technology?
Yes, there are 2 parts to that. By the way, it was very interesting to see how much the DeepSeek moment got caught up in day-to-day parlance. There were people who are asking about DeepSeek. so interesting. But there are two parts to it. One is the cost of training the model, and the second is the cost of sort of serving the model or using the model. That's somewhat debatable, but that's not where most of the money goes. Most of will be in running these models at scale,
right.
And using smaller models which can be served cheaply, fastly, etc. And I think that's where more cheaper. And in fact, that is the number one problem for India, which is to massify this technology. We need to bring down the cost of serving these models at scale.
Right. Skilling. And the need, again, based on what a lot of you have actually said, that, you know, it's not a certain group of individuals who need to be reskilled or upskilled. How do we maximize AI by upskilling?
See, firstly, I think leadership needs to harness it. Right now, it's sitting on an HR desk. I think it needs to sit on leadership desks.
Right.
Firstly, I think if that mandate comes in, it's different. Second, most people are looking at it again as a tick box, and therefore completion of a course is becoming actually now the absorption and the outcome of that is going to be. Because I think in the workforce today, you're not looking now at the bottom 10% and figuring out how to weed them out. You're actually looking at the top 40, 50%, and the rest of them are getting less relevant. So I think if you figure that mandate out, and everyone realizes that it's proactive and you need to be there, I think it's a leadership mandate that has to come in and not an HR starting point with.
Puneet, how will AI in India?
Listen, there's a beautiful quote by somebody a long time back: intelligence is a beautiful property bestowed on human beings. I don't think that's true anymore. It's not just human beings now who've got intelligence, right? So we are, in a way, starting to manufacture intelligence. Now, to your point around how does that disrupt or create opportunities for companies? And I call this a numerator-denominator problem, which is there are massive opportunities on the numerator side, which is create products and markets that you couldn't earlier. Like if you go to e-commerce websites today, if you want to go to Goa, in the previous world, you would say, I want to buy shorts and I want to buy a shirt and I want to buy slippers. Now you just say, I want to go to Goa, and it gives you the entire, and suddenly you're buying more. Right. So I think, so there's a bit of a top line opportunity for companies in India to sell more and build products and serve markets that they couldn't serve earlier. And there's a denominator opportunity around efficiency and productivity, everything that we've been speaking about, like GitHub Copilot, right? Of code written by AI, not human beings, and human beings are quality checking it and amplifying it. But how do you drive productivity? How do you drive it's already happening. Look at Apollo hospitals, they're building co-pilots for doctors. Bajaj Finance, they're looking at customer service in a completely different way. RailTel is looking at public sector and saying, listen, how do we really embed AI pretty much across the public sector in India? So I think it just creates massive opportunities for companies in India to leapfrog. And as India becomes AI first, like our companies should become AI first and build not just for India, but for the world.
Well, I'd like to thank you all very much for being with us. We could keep talking for the next 2 or 3 hours, but then we've got other panelists and others. From all of our panelists is that the technology has to be embraced. We can be pessimistic, we can be questioning about it. Forward as we work towards 2047 Viksit Bharat. Thank you all very much for being with us.
Thank you so much, gentlemen. All right. As India charts its course towards becoming a developed nation by 2047, the democratization of wealth creation stands as a crucial pillar of this transformation, and mutual funds have emerged as a cornerstone of this financial revolution, also as catalysts for nation building. For long, mutual funds are believed to be sahi for investor wealth creation, and why not? I mean, the key question is, do mutual funds do a lot more than just Bharat, that just creating wealth of retail investors? Well, what will the future of AMC of India look like? And to explore this as a journey and what the future holds, we have with us today an extraordinary panel of industry leaders. Ladies and gentlemen, please put your hands together welcoming Mr. Navneet Munot, MD and CEO of HDFC AMC, Radhika Gupta, MD and CEO of Edelweiss Mutual Fund, Mr. Swarup Mohanty, Vice Chairman and CEO of Mirae Asset Investment Managers India, and Mr. Nilesh Shah, who's the MD of Kotak Mahindra AMC, and leading this conversation will be my colleague Alex Matthew. Over to you, Alex, and ladies and gentlemen, please put your hands together in welcoming them.
That way. Hi. Hi. Yeah. Hi. Nilesh bhai. Okay. All right. I've been looking forward to this conversation all day. And we are a little scrunched for time, so I'm going to jump straight into it. The topic is mutual funds and how they play a role in building towards Viksit Bharat. So let me throw a few numbers out there just to set the context for this. At the end of January, you had the mutual fund industry that had assets under management of over 67 lakh crore rupees. 30 lakh crore rupees were under actively managed equity mutual fund schemes. If you add hybrids to that, that's another about 8 lakh crore rupees. It's a very substantial amount of money. But if you think about it, there are about 5 crore unique investors that are putting money into equity mutual fund schemes. So, as I said at the start of the day today, the industry is just about scratching the surface. Where does it go from here, and what does that picture hold? Not just for the industry, but of course, for the individual investor and for the country at large. Joining me on this panel, a very august gathering, and I would go so far as to say that they control a very We've got Mr. Navneet Munot, who is Managing Director and Chief Executive Officer of HDFC AMC and the Chairman of AMFI. We've got Radhika Gupta, who is Managing Director and Chief Executive Officer of Edelweiss. Swarup Mohanty, who is Vice Chairman, Chief Executive Officer of Mirae Asset, and Nilesh Shah, who is the Managing Director of Kotak Mahindra AMC. I didn't really need to introduce you, but I had to, if you think about it. Let me start, Radhika, with you. Mutual Fund Sahi Hai is a campaign that was incredibly successful, and it's got us to this point. The question is, what next? Because
So, thank you, Alex, for having us. I think, the fact that you're having a panel as NDTV Profit on Viksit Bharat, and you're talking to eminent leaders from corporate India about CapEx, about AI, about so many important things. And mutual fund is a part of that, and our role in Viksit Bharat itself is a sign of victory for this industry. So I'm very happy that this agenda is there. And, I'm wearing a Mutual Fund Sahi Hai brooch right now, but I really do think Mutual Fund Sahi Hai doesn't get enough credit as a landmark campaign, because in which industry, in which part of the world, do you have people who compete ferociously for business coming back together to collaborate and pool money, assets, probably about 600 crores that goes to AMFI, and then what we spend in our individual capacity for industry growth. So I think the campaign is a case study in the making. You said 5 crore investors. I said this in another context. I think when we talk about Viksit Bharat, we should dream of a world with 75 crore investors. We should dream of a world where 40 to 50% of India's population then is a beneficiary of the mutual fund story. So it's from mutual fund sahi hai to mutual fund sabke liye hai. And I think one of the greatest victories of mutual fund is from a 100 rupee investor, now 250 rupee SIP, to a 250 crore investment. We treat everyone the same. So I think the aspirations of the industry are now getting larger and larger. And as we look at Viksit Bharat, we should really talk about 75 crore investors. Our team did some interesting analysis. So if you look at households in India, our penetration in upper income is about 50%. In middle income is about 40%. In lower income is 20%. And of course, in super lower income is much lower. In every strata of the household, we actually have substantial room to grow. And I always say that 75 crore looks like a large number, but it's not. Because you have 50 crore people who are paying 100 rupees a month to Netflix and Amazon Prime today. Why can't they start a 250 rupee SIP?
It's a good question. Navneet, as the chairperson of AMFI, I'm coming to you next. Of course, you had these conversations and probably around the 250 rupee SIP as well. Is that the next big flagship?
So as Radhika mentioned that after all the hard work of Mutual Fund Sahi that you talked about, delivering a track record over 30 years, the technology, the way we have leveraged, the amount of efforts we are putting on making this industry as transparent as possible, making the products as simple and accessible as possible, still there are 53 million, 5.3 crore investors, and we have a long, long way to go. And I think that's where I think reduction in the minimum amount where a person can access a product which is so affordable, so accessible, and so simple to participate in the growth story of India. So when India becomes a Viksit Bharat, a developed country by 2047, the endeavor at our end is to ensure that fruits of this growth reach every single household of the country, every single household of the country. And all of us in MFI have been working very hard over the last several years. In fact, you use the word that the Mutual Fund Sahi Hai campaign, I would say Mutual Fund Sahi Hai commitment. It is not only a campaign, it's a commitment from all of us to ensure that this is really a Sahi product for every investor in the country. At the same time, because your title is the Blueprint for Viksit Bharat 2047, we all talk about how are we going to ensure that growth is inclusive and we reach out to many people through the SIP. But the other side of the role that we are playing, I think that gets lesser attention. I mean, since April 2021 till January, mutual funds have invested more than 9 lakh crore rupees in the market, both across primary and secondary. Now imagine the amount of capital the role we are playing in the capital formation. Look at the participation we have across all asset classes, across all products. So right from the overnight repo market, Nilesh Bhai and I have been a bond trader. So right from an overnight market to a commercial paper to certificate of deposit to short-term bonds to long-term bonds to REITs to InvITs to the equity market, everywhere the participation we have, which is aiding to the growth of the country. I think that's a much bigger role. The job creation that we do, I think that also needs to be talked about.
That was going to be my second point. I wanted to, but let me quickly get your view very quickly on the next leg, right? Because I'm trying to understand as an industry as a whole, ultimately you're trying to capture or bring more people into the fold. Right now you have several investors that have come to the fold already, and there are few very large investors. Quick answers, where do you both think the next leg of growth for the industry will come from? And I do want to talk next about what you've just spoken about, Navneet. I'll come back to that.
So Alex, I disagree that we have got big fishes and we have got a lot of money. In FY21 to FY23, 3 years, people have put more money in currency notes than what they have invested in mutual fund. I still have to convince Alex that Alex bhai, आप जो पैसा currency note घर पे रखे हैं,
सर मेरे पास कुछ नहीं है।
झाड़ सर आपको पता नहीं, एक बार घर में जाके देखिए फिर पता चलेगा। ये डिमोनेटाइजेशन के टाइम पे कितने लोगों को घर से पैसे निकले। तो आई हैव टू स्टिल कन्विंस एलेक्स भाई कि भैया जो पैसे आपने करेंसी नोट्स घर पे रखे उसके झाड़ नहीं उगेंगे, म्यूचुअल फंड में डाल दो, हो सकता है थोड़े दिनों के लिए नुकसान सहन करना पड़ेगा, बट यहीं पे पैसा बनेगा। I still have to go and convince investors who are buying lottery. Well, the day when lottery buyer starts making money, the business of lottery will shut down.
Yeah.
But in India's most intelligent state, most educated state, people are buying lotteries hand over fist.
True.
The total equity assets in that state has barely touched their annual lottery buying.
You're
After
talking
so
about the
many
state that
years.
I'm from. I understand what you're saying. so,
Alex bhai, I still have to forget your state. Let's talk about my own state, Maharashtra. I still have to go to Mira Road and convince people that Tours is not the best place to invest.
Right.
You have to invest with mutual fund because mutual fund sahi hai. So we have a long way to go. I haven't yet reached the surface.
Okay. So you're saying that the mutual fund Sahi Hai campaign itself has a long way to go, Swaroop?
Absolutely.
But I think, that's the background. But let's look at how it's changed. When I started my career in the late 90s, 70-75% of the AUM used to be owned by institutions and corporates. Today, 65% of our AUM is being owned by individual investors. So there's been a dramatic change. Before COVID, we were 2.3 crore folios. Last year, and I think 2024 is the turning point for us as an industry, because last year we added 1 crore folios. The financialization of assets is beginning to happen. And let's face a very interesting phase in our country right now. This is the first time in my career of 30 years that I'm seeing 3 generations investing together.
Yes.
Typically, it was 2 generations. My father, me, and my son are investing together. And my son's population happens to be far more than my father and me put together. When you look at 1 crore being added 1 year, and our industry now hitting 30 years of track record, me being a late entrant into an industry, 16 years track record. All this is adding up.
Okay.
And the ease of transaction, all of you talking about this product now at a different level, I think the story is beginning to happen.
So, and that perfectly sets the context for what Naveed already mentioned. And since you've already talked about the numbers, let me go to the next part. And I'll start with you, Nilesh bhai, which is the role of the mutual fund industry and mutual funds in particular will change a little bit in terms of having more to say at the boardroom level, not necessarily at the boardroom level, but certainly at the AGM level and in the conversations with the boards of various companies, because you are ultimately going to be very large investors. A lot of primary issuances have happened over the course of the last year simply because you are the largest investors, right? And they've sailed through. So how do you see that role moving, and everybody weigh in?
So over a period of time, we think we'll become the conscience keeper of governance in the country. We have to work very, very hard to ensure that minority shareholder interests are protected and the gains of business are shared equitably. Corporate India has done a lot on governance, but there is still a long journey. And as mutual fund investor, today we are investing only in good management and good companies and avoiding bad companies. But a day will come when we'll invest in bad companies and make them good. The regulators have empowered us, and with those empowerment will ensure that the fruits or the benefits of business is shared equitably, whether you are majority shareholder or a minority shareholder. The activism shareholding or the activist shareholders, that phase will begin in India. Today it is below the radar.
Yeah.
Tomorrow it will be right on the face.
Sooner rather than later, anybody wants to jump in here?
So I'm a strong believer. I've been a proponent of ESG, but I have another definition of ESG in India's context, that by E for engagement and S for stewardship, exactly what Nilesh bhai mentioned, that by engagement and stewardship, we take the company's journey from a good to great company. And we have played a big role over the last several years. I think probably India is the first country in the world to move towards 100% voting by the mutual funds on all resolutions. Till few years, I mean, even Europe wasn't there. We were the earlier ones to move to 100% voting. We put our votes in public domain, how we have voted after every quarter. So the kind of work that has been done on the stewardship, the kind of work that has been done to enhance the governance and the, let's say, the efficiency of the corporate India has been underappreciated.
Radhika, I'll come back to you, Swaroop.
You know, I think governance is a journey, but I think as mutual funds, all of us are getting more stringent about our demands from governance. So in our own process, and I know this is true of many, many AMCs, forensic analysis, for instance, is an increasing part of how we view companies. So that can include treatment to minority shareholders, related party transactions, how you hire auditors, what you pay auditors. All these questions our industry is beginning to ask. And I do believe that, and I agree with Nilesh Bhai, while corporate India has done a good job, when you have someone, a party who has a large amount of growing stable capital, and they are asking you more questions, you will produce better outcomes. And I think we have a lot to do. So I remember, you know, my CIO was telling me that if you went back 15 years, not all mid-cap and small-cap companies even did management calls. Today, every management wants to engage. I also think a point will come, and it's starting to come, when managements will start engaging with mutual funds as shareholders just on thinking about building businesses. So we'll be just the way people, unlisted companies and startups engage with private equity guys. I think listed managements are already starting to engage with us. So I think as we ask tougher questions, as we demand more disclosure beyond even resolutions, I think our engagement with management, our disclosure standards, our questions are already pushing the boundaries of governance.
Swaroop?
Yeah, I think, Alex, I'll deviate a bit from the topic because, you know, in this whole thing, there are us playing this incredible role of the fiduciary nature of the business. I firmly believe we would have done something good in our previous birth to have been sitting on these chairs of owning investors' trust. While we will continue to do our job on the points mentioned right now, it's also the duty of the investors to also check us on our duty.
Yeah.
That we uphold our fiduciary nature to the hilt is something which I think people in this mad rush of return chasing fail to sort of recognize. And people who do that should also be rewarded in that extent, is my simple take. It is a triangular relationship between the money we get from them, and because of that we demand these from the companies that we invest in.
Yeah.
But from the investor's perspective, they should also put a big onus on people who uphold this fiduciary responsibility. Simple.
And I'm glad you spoke about that, Swaroop, because it brings me to the next leg of this question, which is, or this conversation, which is, and I'm not going to get into specifics, but there has been a huge conversation over the last couple of weeks about investments in the broader end of the spectrum, right? How much of this is managing expectations? Because Nilesh Bhai, I saw a post on social media that you put out, and you spoke about the fact that it's not necessarily a question about the amount of products, because ultimately if you liken it to the restaurant industry, then restaurants keep introducing new dishes. You don't necessarily go out and try every one. But the reality is that you are creating a financial a number of financial products, and you are maybe, because of the performance of these schemes, driving investors to certain products. There are over 200 sectoral and thematic funds currently. So purely on the basis of the number of options available in a single category, are you maybe paralyzing choice? You want to take that first?
No, I don't think so. In fact, Nilesh Bhai wrote it very rightly today, and maybe he can respond more to that in that manner. But otherwise, I think this is the most simplest product, right? Isn't it? Just because we have more number of products doesn't make the product more complex. Again, going back to that point of like several places where India has been a world leader, there's no country in the world which has got the classification of schemes the way we have got.
Yes.
So you have, let's say every AMC can only have one large cap fund.
Yes.
What is a large cap? Is the top 100 stocks. What is a mid cap? Next next 150. This kind of definition is not there anywhere else in the world. You can have variety of funds which call themselves a mid cap and a small cap. In US, somebody will call a small cap as 1 billion, somebody will call 5 billion, somebody will call a 10 billion. Universe will be very different. You see several kinds of products in US. Everybody uses S&P 500 as a benchmark. It doesn't happen in India. Benchmarks are like, they are uniform, they are comparable. The amount of regulation that we have, and we take pride. I mean, some people might say that we have excessive regulation, but that has really helped us in making this industry the most transparent in the world.
I'm being told that I have to wrap, but I would have loved to ask you about your thoughts on managing expectations, because ultimately that is what it is.
1 minute, I'll give you one example. Just launching product doesn't mean that the way we are marketing, we are very, very particular about that. And I said it's commitment. We launched India's first defense fund, I think 2.5 years back. And we could clearly see that the way stocks have run, the expectations may get set where investors may have challenges going forward. We said we'll only take SIP, and then we completely stopped even the SIPs because investors were saying that fund has delivered whatever 80%. Next year it will deliver a fraction, even then it's okay. We said no, not really. You've got returns which have got kind of like front loaded. There would be some disappointment. We closed the fund completely. So we are very responsible. That fund probably would have got the most amount of new SIPs at our end, but we completely stopped it. Absolutely.
And that is
and this is what everybody in the industry does.
That is the case in several instances in the industry. You know what? We're going to have to set this conversation up again on NDTV Profit and invite all of you into the studios, and perhaps we can take this conversation forward there, because there's so much more that we would like to talk to you about this subject as well. It's been an absolute pleasure having you at our event. Thank you so much for taking the time.
Thank you.
Thank you. Thank you so much, everybody. Thank you. मुझे वही पूछना था, but I didn't get a chance.
Thank you so much, everyone. You know what fascinates me more about India's journey to 2047? It's not just about building bridges and highways. It's about building bridges to prosperity, and this is for millions of Indians. In a country where farmer in Madhya Pradesh can now trade stocks on his phone, and a small shop owner in Kohima can access credit at the click of a button, we're witnessing what I call a great Indian financial revolution. But here's the real question. In this complex maze of opportunities, from infrastructure boom to digital transformation, how do we separate the signal from this noise? Which sectors and stocks will benefit from Viksit Bharat? For all of these insights, we turn to someone who has mastered this art over decades. Please welcome Mr. Ramdev Agrawal, joining us in conversation with Tamanna Inamdar. Tamanna, the stage is all yours.
Come, sir. I'm very excited to speak with Mr. Agrawal today because I think there are few people. Do you know you're a viral star on all social media platforms? आपको पता है?
I'm not in any of the social medias.
सब stars ऐसे ही बोलते हैं. But anyway, let's start off formally. As India charts its course towards becoming a Viksit country, Viksit Bharat by 2047, one of the most critical aspects of this transformation is the creation of new wealth opportunities for its citizens. As Indian markets continue to evolve, new sectors are emerging, the investment landscape is changing, and the opportunities for wealth creation are vast, and the average Indian investor is at the center of it. Just to give you a sense of the rise in India's retail investors, in 2024, the number of demat accounts rose by 46 million, marking an average addition of 3.8 million accounts per month. When you compare this number from 5 years ago, in 2019, demat accounts have more than quadrupled from 39.3 million. SIPs, which have consistently been the backbone of retail participation in mutual funds, have also witnessed increased transactions. According to the Economic Survey 2025, over 10 crore SIP accounts have been created, with cumulative inflows reaching 10.9 lakh crore rupees since its inception. So the question right now is, how does investment in stock markets really fit in with our concept of Viksit Bharat? The fact is that it does. Let me start with this, and please welcome the legendary Mr. Ramdev Agarwal. So, till a few years ago, investing in equity markets was limited, I think, to a small part of the population. जो करते आए हैं वो करते थे. The revolution that you've seen in the last 4 to 5 years, let's start with that, because I think that's the watermark, in a sense, when you look back at the Indian equity markets.
Yeah. See, I started my career in stock market in 1980. So I have seen 45 years of the market, and it was extremely primitive in 80s, and I was also not knowing much about the markets, and started building research prowess and slowly build the company and all. But it was going on till about 2020. And somewhere in 90s, this KYC trouble came for introduction of the clients. And it became so notorious that it was taking 8-10 days to open an account. And it went on like this till 2020. By 2020, what happened was digital infrastructure was ready for the payment, for trading. Everything was ready, digital infrastructure was ready, but still KYC was physical. And in 2020, thanks to COVID, what they did, they removed the physical verification. You started getting, instead of 3 lakh customers, we started getting 3 million customers per month.
Wow.
You just said in last 12 months you did 3.8 million customers per month. And it is cumulative in character. It's not a flow. It's an accumulation. It's like a dam. So number of customers, it's not that 3 million came and some other 3 million came next month. It is all 185, 190 million customers are participating in the market every day. In Mahakumbh, on the best of the day, maybe 50 million people will take a dip. Here, on an average day, there will be more than 50 million people who are taking dip. So this is Mahakumbh. And this is just about the start. When we go to, in 3 years' time, to 300 million, right now we are in 190. And see, there are some duplications, some 40-50% there must be duplication. Still we'll go to 300 million, and my sense is by turn of the decade, we might be at 500 million. So this is a relentless expansion of the capital market. This kind of thing happens once in a lifetime. These are life-changing things. This will change the trajectory of corporate history of India, I'm telling you. It is just about begun. And that's why you must have seen hottest IPO market in the world. So a lot of things will happen as we go along, but right now there was too much of demand. Between 2020 and 2024, there was excessive demand for the stocks. And so incidentally, FIs, they turned negative at some point of time as the valuation became a little expensive, but they have only large caps. So when they started saying large caps, the entire momentum shifted to mid and small, where there was no play. There was only one way. And the stock went to the roof. 50p, 70p, 100p, people are justifying. From 100 it went to 125. From 125 it went to 175.
No, so we'll come to the question of what's happening in the markets right now. Hum us par aate hain. But I want to come back to something interesting you said. When you called this bigger than a Mahakumbh, investment ka Mahakumbh. Yes. Let's come down to the fundamentals of it just for a second, and then for market P, valuations, corporate results, सब बातें करेंगे. जनता equity में पैसा क्यों डाल रही है? Because this India is not satisfied with 6% in FD. This India is in a hurry. They want to create wealth. Is the stock market still the best way to do it? We are in an overheated market. FII is heading for the exit door. Is that faith? Because we talked about Mahakumbh. This is also faith. The Indian investor has faith. Is that faith well-deserved or misplaced?
देखिए आगे क्या होगा मुझे नहीं मालूम. फ्यूचर इज अनसर्टेन. दैट्स द एक्साइटमेंट ऑफ फ्यूचर ऑल्सो. मैंने 45 साल देखा बाजार का. मैंने बहुत अच्छे टाइम देखे ऑफ द इकोनॉमी एंड मार्केट बोथ. वी हैव सीन वर्स्ट ऑफ द टाइम्स एंड येट वी हैव सीन 9/11, वी हैव सीन Bharat Pakistan war and all, everything we have seen. But can I have some water?
Yes, of course, please.
So,
can we get some water, please?
So I would judge the future by what we have seen in the past. And we have made money at about 15% compounded at index level. People like Rakesh Jhunjhunwala and all, they must have done at least 2x, so 28-30% minimum. I would have done maybe 22-25%. So if you do compounding at that rate, let me give you just what is the power of compounding. Warren Buffett started with say $10,000 or $20,000 65 years back. Today he's a trillionaire, 1 trillion and counting. That is the only company in the top 10 in the world of digital era who has made money. So the compounded, see, India and US, there are only two compounded countries where money is being made at a steady pace in both the countries. And India, I have seen 45, there is no reason for me to believe the next 10, 15, 20 years is going to be any different. I don't have any other logic. You know, so when your nominal GDP grows at about 10.5%, 11%, corporate India grows at about 12, 13, 14%. And that chosen stocks, which are nifty, that grows at about 15%. And that's what you make. So at 15%, you double your money in 5 years. You go to bank, SBI, safe, you make 5%. How many years it takes to double? 15 years. The logic is very clear. Whether you want to double your money in 5 years or 15 years. And we are not talking about the entire portfolio. You put 10%, 5%, 20% depending on your risk appetite. So that revolution was not happening. That has started happening from 2020.
Yeah. Now the question really is that revolution a one-way revolution? Let's come to what is happening in the markets right now and the context of it. So yes, we have had a downtick in key indices. FIIs have been selling at record levels. We've had maybe 2 consecutive, I would say 3 or 4 consecutive quarters of corporate results which have not been up to the mark. But the retail investor or the Indian investor has continuously shown faith. They've very famously been called the shock absorbers for the capital markets. So my question to you is, if you are speaking to these shock absorbers right now, what is your message to them? How do they make sure that they sail through this storm?
See, it's painful. I mean, when markets go down, I don't like it, nobody likes it. Whosoever is invested, they would like to see higher price. But for every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market. In last 45 years, I have understood that. I also don't like the corrective phase. But it is almost like a part of the life. Reversion to mean is part of the life. So last year, in 2024, the index went up by 10%. But everybody's portfolio did anywhere between 30 to 40%, 50%, or maybe 70%. Lower the size of the stock, higher was the return. Okay? Now, in the current year, index actually will go down by 10, 12% or 15%. But the portfolio will go down by much larger amount.
So, 1 minute. You think that the index in the current year could go down by 10, 12% and
already it has gone down.
Even further? Is more pain
I don't
there?
know.
We don't know. Okay.
I don't know about that. I'm just saying, I'm just making a broad this thing that in calendar 24, when the index went up by 10, 12%, you have no business to make 40%. That 30% जो है ना, वो मतलब क्या बोलूँ मैं? It's a stolen money. वो जाएगा आपका. क्यों जाएगा? कैसे जाएगा मुझे नहीं मालूम. दो चार बदमाश लोग या अच्छे लोग जो हैं, वो बचा लेंगे. बाकी broader market से निकल जाएगा वो. That's how it works. The reversion must like that.
क्या यही हो रहा है इस वक्त? Is that what we're seeing right now? Because I'm asking about, so a very prominent person recently talked about stopping SIPs in small and mid-cap stocks. Said that small and mid-cap stocks right now, you should exit, lock, stock and barrel. Was the exact quote. ना कोइंसिडेंस हो सकता है कि तब से त्राही मची हुई है, कोइंसिडेंस हो सकता है, लेकिन ये सवाल तो है कि ये क्या है जो बाकियों को नहीं दिख रहा है.
The very concept of SIP, systematic investment plan. So आप जो है डॉलर कॉस्ट एवरेजिंग, तो आप जब बहुत ऊंचा रहता है तब भी आप एक रुपए का खरीदते हैं, और जब बहुत नीचे रहता है तो भी आप 1 रुपया खरीदते हैं. So that averaging out will market do it. You should not break your SIP. You should not break your SIP. In fact, longer the SIP, maybe the SIP might be required to be longer than 35, 40 months, you know. If you stay a little longer, there will be deep correction, you will buy very cheap, and then again the smooth curve will happen. It's not that once the mid cap or small cap, they correct, they will never come back. All the good companies, they'll come back.
Understood. But is there a fundamental issue with the way small and mid-cap companies have been valued and the pace at which they have grown? Is there a fundamental concern, which is why the correction right now is what we are seeing?
But see, you just not started the SIP like yesterday.
Yeah.
Say a year back also you started. So first you had a 40% up. For the first 12 months you had 40% growth. Now you'll pay some portion of that you'll give away. And then in 25 you'll give away. In 26 again you'll start making it. So SIP is all about averages.
Yeah, no, of course.
Yeah, so it is, you must understand the very idea of SIP. You know, it is for taking, you should not bother about where the market is.
सर सिप को एक बार छोड़ दीजिए, आप स्मॉल मिड कैप स्टॉक्स के बारे में बताइए.
हाँ, क्या बोल रहे थे?
ओवरहीटेड, ओवरवैल्यूड, जो हो रहा है वो बराबर है?
जो हो रहा है वो बराबर है. ओके, अभी और कितना होगा मेरे नहीं मालूम. See, as I told you right in the beginning that there was excessive flow. See, आप देखिए जैसे म्यूचुअल फंड फ्लो है. म्यूचुअल फ्लो, how the stack is. Your entire, say, 400 lakh crores. As of today, I think it is about 405 lakh crores or 410 lakh crores is the total market cap. Say 2 or 3 years back, the breakup was about 75 to 80% was large cap, that is top 100 companies or 150 companies, and mid cap would be about 15-16%, and 7-8%, 9% would be small cap. Now, how the flow is? See, flow should also be matching. But flow was different. Flow is like 15% is going to small cap, and 30-35% is going to mid cap. And large cap is getting again 35%. So 65% of the market cap is getting 35% flow, and 20% of the market cap is getting 35%. So what is going to happen? You're pushing too much of money in a much smaller market. And then you see the firework.
Okay. Today, if I were to ask you, sir, that we're talking about Viksit Bharat 2047. In 2047, आज अगर 2047 के लिए पोर्टफोलियो बनाना हो तो, ट्रिक क्वेश्चन, 2047 के लिए पोर्टफोलियो बनाना है, I'm giving you a long horizon. What does it look like?
Yeah, see, Viksit Bharat and all, they are all very ambitious political agenda. You know, I'm not saying it's bad, it's nice. To have a goal, long-term goal for a country is the best way to go.
Sir, but every investor has been also told have a long-term goal.
Next quarter नहीं मालूम आप 47 की बात कर रहे हो यार. So let's be practical, you know. I mean, आप बोल रहे हो कि भाई बाजार कितना घटेगा, कितना बढ़ेगा, ये सब अब एक क्वार्टर की बात करो, दिन की बात कर रहे हो, वीक की बात कर रहे हो, और फिर 47 की बात करते हो सीधा. तो क्या है, we should have a right perspective. See, generally जैसे मैं शुरू से मतलब 20, 25, 30 साल से I try to reach a situation where I should double my money in 3 years.
Okay, तो 3 साल का बताओ, even better. How to double your money in 3 years, Mr. Rathore?
No, that's how. See, but ideas तो मिलने चाहिए ना. ये मेरा ऑब्जेक्टिव है. Okay.
Sir, अगर आपके पास आइडिया नहीं है तो किसके पास आइडिया है? If you don't have the idea, I really.
No. So we have ideas.
Okay. Okay. So let me put it this way: for someone watching right now, how do I pick well in this market right now? 2 ways of looking at it. One is that there's a sale लगी हुई है. One way is that protect your capital and somehow duck for cover. What is the way? What is the methodology to pick the right idea right now?
देखिए, एक तो 2 बात है. जब हम लोग चालू किए थे, म्यूचुअल फंड इंडस्ट्री था नहीं. So we had to do actual stock picking. Mutual fund came only in this century. I mean, 2001-2 के बाद चालू हुआ आने का. So we grew up in an environment where individual stock picking was necessary to be in the market. And hence we got into this game. अब जो है, for this 190 million people, they don't have to bother about all this. They have to pick the managers. They have to pick the schemes. And they just have to go about SIP, which again takes away the market risk and all. So actually investing is very simple. that way. If you want to make, say, 15% index does, you are very ambitious and you want to do 1 or 2, 3% higher. So if you go from 15 plus 3, that makes it 18, that makes it 4 years doubler, which is a lot of money. 5 year gives you 5-year doubler, 18% gives you 4-year doubler. I think for a common man to realize that should be the biggest objective. Now, if you want to become a stock picker, then you are the manager yourself. Every individual will have a different style. My saying doesn't help. The way I do it, nobody can do it. The way anybody else can do it. They can keep writing autobiography and this is how I do it, this is my formula. Kuch nahi aata usme. You can never practice my formula. You can come and sit with me full day. Still you can't pick up what I'll say in the evening. So, जो हमने QGLP फार्मूला वा जितना रिसर्च है तो हम लिख के भेजते ही ना हमको मालूम है रिसर्च का फायदा हमको ही होने वाला बस because it is everybody has to fend for themselves particularly when they are picking stocks okay because how to judge the quality of business how to judge the quality of management
okay what are the 1 or 2 parameters that you look at
pardon
what are the 1 or 2 conditions you look at how to judge the quality
I'm telling
of
you
a business
QGLP I have a only very simple formula top quality business top quality management long way for growth and quality and very reasonable price. Actually, I can make it even simpler. Top quality business, top quality management and reasonable price. The problem is to get the third one right.
Reasonable price. Yeah. Right now, are the prices reasonable after the correction that we've seen?
It is more reasonable than what it was, say, 2-3 months back.
Not on your parameter till now.
No, some stocks are clearly there. Yeah, they're clearly there.
Okay. What, according to you, is the reason that FIIs are, I think, relentlessly selling? Is it because they are seeing an issue with, say, corporate performance in India? Is it a concern with slowdown, or is there some other story going on?
No, one is that, first thing is that, see, they look at a lot more macro, in the sense that they have opportunity to go to all 150 countries. Okay. So they have, say, 2 buckets, developed and developing. So right now, America is in full employment, blasting through, last year is 30% return, strong dollar. Who wants to go anywhere else? Okay, so that is one reason. Second is, emerging market led by China, it is destroyed. That asset is destroyed. Okay, so if you want to get allocation in emerging market, India is very prominent and it can get allocation. The issue is, do we have blistering growth? What else can you ask for? My currency is weak. You know, so the only story can be a top-class corporate earnings growth. So that is not happening.
What is your assessment of corporate earnings right now? Because this is data that you look at very, very closely. Yeah. Is it as bad as the street is making it out to be?
It's quite bad.
Yeah?
In aggregate, it is bad. Individual companies are okay, but I mean, we started with a nifty earnings estimate at the beginning of the year was about 1100 plus actually, 1150 types. Then he started cutting it. And now we have reached to 1050. So if you keep cutting, then you don't know how long they'll keep cutting. Last year was 1000. This year we started with the expectation of 1150. Now we are at third quarter over. We are talking about 1050, 1055. Hopefully, if it pans out the way they are thinking, we'll end up about 1050, 1060. Then again, next year he's saying it will be 1200. And then again they will start cutting. So, still, see, then we want the earnings uptick. You know, the researcher should be surprised by the earnings. He says next year...
No, sir, researcher is surprised. After every earnings,
yeah, so they're surprised, but
it's shock.
Positive or negative. So right now they're negatively surprised. So that cycle of upgradation of the earnings is yet not started. Hopefully, my sense is that Q1 24, 25, 25, 26, we should see some uptick.
Okay.
When all the 3 forces of fiscal, monetary, and government capex, all 3 should be in full swing in first quarter of 25-26.
Okay. One last question, because I know I'm over time. Your advice for the investor who maybe came in after COVID and so far has just seen their portfolio going up, and right now they're not understanding what is happening. What is Ramdev Agarwal's advice for that investor?
You got to bring patience. You know, that's the biggest investment in investing. And if you don't have patience, then you don't belong to this game. Because ultimately, you will see wealth creation through equity markets is a long-term process. It's not a short-term process. You will make money, you'll double your money in, if you're very smart, you'll double your money in 4 years. Very smart, 3 years. Middle smart, 4 years. And you don't need any brains to double your money in 5 years. That's how it is.
Okay,
Yeah.
so that's the best case scenario. Thank you so much, Mr. Ramdev Agarwal, for your time. Always a pleasure
Thank
to
you.
speak with you. Wait, I think we'll take a picture.
Check. Okay. So everybody in the audience, if you've doubled your money in 3 years, you know what you are. You're incredibly smart based on what Mr. Ramdev Agarwal has just said. All right. Let's talk about the next session, right? Because you're talking about Viksit Bharat 2047, and ultimately, of course, you have a lot of individuals that are going to be part of this journey, but you're going to have large companies that will also take us there. Now, building a great company is one thing. Building a brand that lasts generations and expands across borders, that's an art. Few Indian companies have mastered this as well as Godrej. Today, we have with us Nadir Godrej, a leader who has not only carried forward a remarkable legacy, but has also propelled India Inc. onto the global stage. Let's explore what it takes to build brands that endure and expand. Sir, please join us on the stage. Big round of applause. Joining him on stage is Mr. Vishnu Som.
So the mic is for you. Great. All right, can we have that up, please? No, the opener, please. No, keep going. All right, ladies and gentlemen, thank you very much for being with us. There are few groups that exist in India which have made more of a mark than the Godrej Group. The Godrej Group have had a profound impact right from pre-independence times to certainly our independence movement. And today it is a group that continues to diversify. It is a group which continues to expand in different areas with a very clear vision of what it is to be Viksit in 2047, Viksit now ideally. The journey of the Godrej Group, right up between now and 2047, has seen the group take strategic decisions to actually demerge a gigantic company into, I would say, two gigantic companies. But be that as it may, the role of the Godrej Group in India and our success story going forward is truly, truly remarkable. Nadir Godrej needs absolutely no introduction, quite besides being one of the finest business leaders in the country. He's got a real vision of what the future of a developed India needs to be. Thank you very much, sir, for being with us.
Thank you.
The Godrej Group does everything from aerospace to agriculture. Is it sometimes bad news to diversify too much?
Obviously, when you try a lot of new things, one or two of them fail. And we had a few failures in the past, like once we were in the tea business, which we gave up. But most of our businesses have been very successful. And nowadays, we are very careful to try and go into businesses where our brand is useful. That's one reason we went into real estate, because we thought a good brand would be very useful in that kind of business where trust levels were low, and trust is very important for the business. So we went into real estate, and recently we have set up Godrej Capital, which is a non-banking finance corporation. Here again, trust is important. And we have values of sustainability, both environmental and social, which we think are very useful for a business in today's environment. And we'd like to go into businesses where this is important.
When you decided to sort of split the group into two large halves, it was a very amicable process. It was a process looking into the future of not just the lakhs who are employed in the company, but also about how Godrej sees itself in the future. Was that a very difficult decision to take, or was it utterly pragmatic?
In some ways, it was difficult because there is an advantage of having everything under one umbrella, but it was also a practical decision to take. In our group, the management had been different for years, for 70 years or so. The two parts of the group were managed differently. The ownership was common. So it was not that difficult to take the decision. And we tried to be very fair about it, both sides, and therefore it was done quite amicably.
What are your core values?
Core values are, first of all, sustainability, and that includes social sustainability and environmental sustainability, inclusiveness. It's a very important core value for us. We have now a DEI lab which looks into all kinds of inclusion. We don't think growth without inclusion serves any useful purpose. And the way climate change is going, if we are not serious about it, we won't have a planet, leave alone a business.
We'll talk about that in a moment. But have the core values of the Godrej Group evolved over a period of time?
No, I think core values have always stayed the same. Honesty has been a very important value. The interest of employees, the interest of customers. And if you really put customers ahead, you have to put employees even ahead of customers because they are the ones who look after customers. So those are all important core values. And sometimes it looks like these values are a cost, but actually they build social capital. And when you look at it that way, it makes eminent business sense to have these values.
Brand heritage versus a modern appeal to, let us say, a native audience of digitally empowered people. Is that a challenge?
No, it's not a challenge because your core values can be sustained anywhere. And you obviously have to modernize without affecting your core values. The only challenge is that the world is moving at a faster and faster pace. So whatever you used to doing in the past has to change. It can change while maintaining the core values, but it can be a challenge to change to this faster pace when you're used to a slower pace.
I'll go back to my first or second question on diversification and put it as a versus question. Diversification versus brand consistency. Is that a challenge?
That can be a challenge, and therefore the diversification must make sense for the brand. And the brand must make sense for the new business. In which case, it is not a challenge. And most of our diversification was specifically done, as I mentioned, in the case of properties and capital, to utilize the brand, or they were in adjacent businesses where it was very easy for us to go into.
How is sustainability something which is not just a core value, it's just common sense?
It's common sense for multiple reasons. First of all, as I said, if we want to save our businesses, we need to save our planet. And it's sad that America is withdrawing from the Paris Protocol. I'm convinced that even if the American government takes this kind of stand, many Americans will realize that we all need to work together to solve the planetary problems. And it's easier to solve the problems than to adapt to the problems. We saw the Los Angeles fires, we saw the floods in Pakistan, we ourselves have had multiple climate crises, and the cost of adaptation is greater than the cost of prevention, just as the cost of curing disease is higher than the cost of preventing disease. yet we all seem to want to fall into diseases. We all want to live with climate change. It's totally stupid. The challenge is that to solve climate change, we all have to work together. Without a level playing field, none of us is incentivized to solve the climate change problem. With a level playing field, the cost is very small. So we need to find that level playing field, and we can only do that with cooperation or with very, very advanced technology. And that's why I think it's a great regret that we are not solving this problem faster. And I don't believe we can be a Viksit Bharat if we don't solve this problem.
I will talk about sustainability with you at length. But since you mentioned America in your last answer, tariffs are very much on the cards. Does that impact you?
It won't impact our business much because although we do export to America, they're not a very large percentage of our business. It will certainly impact other Indian businesses. But sometimes it looks like Donald Trump talks a lot and then quickly withdraws. He's delayed his tariffs on Canada and Mexico, of course, only for a month. Let's see what happens at the end of the month. Probably look for some other quick transaction and then he'll let them get off the hook. I hope that's what's going to happen. But we also need to stand up to this kind of tactics and find good strategies. I know that India has been preemptive. I believe that the import duty on bourbon was reduced from 150% to 50%, and to other countries it was reduced to 100%, but for America we made a special exemption and made it to 50%.
We've got our priorities absolutely right.
I don't know if it's enough to buy us peace, but let's see. But there are many other things like that we can do to solve this problem.
When one speaks about sustainability, we need to link sustainability in business practice with environmental consciousness.
Yes.
We have a profound problem of air pollution across North India that's closely linked to agricultural stubble burning. The data is fairly clear. What is the way out, given the fact that we are overburdened in the Punjab and in Haryana in terms of the crops that are sown? There is not enough crop diversification.
Right. That is a problem. And the very short period between the Kharif crop and the Rabi crop incentivizes farmers to burn because they can't find any other quick solution to harvest and then plant again in a short time. We need to find solutions for that. Crop diversification is one. But even somehow or the other, using the stubble in a different way, using it as a biofuel or plowing it under the ground might solve the problem. And it is imperative to solve the problem because millions of people are being killed by air pollution or suffering from asthma and other terrible lung diseases. And it absolutely makes no sense. And I commend you for your excellent work in trying to find out what exactly is happening and sensitizing people so that we solve this problem. And it won't cost much to solve this problem. All these problems can be solved at low cost. And I also want to stress that for business, at first, trying to be sustainable may seem like a cost. But at the end of the day, if you think it out carefully, you save a lot of money. In India, we have another option. We are supposed to spend 2% of our profits on corporate social responsibility, and we can often use those spends to make ourselves more sustainable. For instance, in our group, we do watershed developments. These help farmers get livelihoods. Trees are grown in those areas, so carbon gets sequestered. And as a result of these projects, all done by CSR money, as a group, we are 6 or 7 times water positive. And we have greatly reduced our carbon emissions. We use a lot of green energy, not always solar. We use a lot of biomass because biomass works round the clock. We have plants that run round the clock. We need both steam and electricity. And biomass cogeneration is an excellent solution for that. So doing sustainability in a sensible way actually reduces costs. So I would urge everyone, all you have to do is spend time thinking of good solutions.
why can't we have biomass plants which take agricultural rubble and convert it into energy?
I think we should work on that. And we ourselves on our sustainable journey, we use a lot of soybean meal, and we are trying to work out a system where the most unsustainable part of using soybeans is the soybean stubble.
Mm-hmm.
And we are trying to find solutions for using soybean stubble so that our Scope 3 emissions would be reduced. And I urge all businesses that are buying agricultural produce to make their own efforts to solve these problems.
But in terms of Haryana and Punjab and the potential setting up of large-scale biomass plants which process biomass, is that something your group would be interested in potentially?
Yes, I think all of us should
feed
be
into the
interested
energy
in that.
grid.
And I recall that CII had a project to do it. I haven't followed up what they did with that, but it would be good to have an industry-wide initiative to solve some of these problems if the government is not capable of doing it.
Ultimately, do you believe one of the key aspects of what we are talking about, air pollution, we are of course talking about its impact on human lives, we need to also consider its economic impact. It is countless, billions of dollars, possibly every year, lost in terms of growth because of people in the prime of their lives being impacted or because of ailments, right? So it hits us economically. Viksit Bharat may not happen quite as fast as we wanted without this being resolved.
And all kinds of challenges like that. With climate change, we may have more mosquito infestation. As part of our CSR, we have a program called Embed, which tries to control the spread of malaria and dengue, and it's been very successful. Diseases such as diabetes, heart attacks, hypertension can all be stopped by preventive action. And we need to do all these things in our own personal lives, through business. And prevention is better than cure. It's well established, whether it's climate change or health. So let's prevent.
When one talks about artificial intelligence, there is often a sense that, that applies to sectors of the economy which aren't necessarily agriculture. But in fact, you and in our conversations, at the World Economic Forum, explained to me that AI has to be linked massively with agriculture.
Yes.
Why and how?
Right. The problem with Indian agriculture has always been that the size of the farms was very small. So we were losing out on scale in the days when it was a scale economy. But now it's a network economy. And the solution to India's agriculture problem is to network. And how do you network? We have a business, the oil palm business, where our farmers, the smallholder farmers, they grow the oil palm tree. Mm-hmm. We provide them with the planting material, we pick up the fruit, and we give them advice. And that advice can be made much more efficient with artificial intelligence. Similarly, FPOs who buy produce from farmers of one particular kind can give advice to those farmers. So if we link up all the farmers, then we in effect have one huge farm to whom the correct advice can be given, and they can become more efficient and they can become more sustainable. Because if you do regenerative agriculture, you're much more sustainable. But if you allow the soil to deteriorate and you throw in more fertilizer than you need, you not only cause pollution, but you waste a lot of money.
As we look at 2047, I would suggest that our biggest potential lies in our population itself, our demographic dividend. The fact that we've got young Indians and the fact that we've got a large number of women. So two questions which arise out of this. Let's talk about the role of women first. How critical is bringing in women into the mainstream workforce, where they are statistically accounted for as contributors, critical as we try and get to 2047?
It's very critical, because how can you take advantage of your demographic dividend if you only use half your population? So obviously we have to bring women into the picture. And the biggest barrier probably is education. Of course, more and more women are being educated in India than ever before. And where this started early, like in Tamil Nadu, there are multiple benefits. I believe that about 40% of the working women in India are in Tamil Nadu.
Right.
Not only is there this direct benefit because of the education of women, their families are healthier, more successful. The men in Tamil Nadu are more successful because the women are well educated. So there is this double benefit. So the women is very important, but inclusion should be for all kinds of communities that have not been included in the past, whether it is caste, whether it is religion, whether it is the disabled. All of them need to be included. All of them need to be given specific training, either to overcome their shortcomings or even more important, to enable them to use their full potential.
Reskilling is a crucial part, obviously. Skilling and reskilling and upskilling, call it what you want. Again, how is that critical to use our demographic dividend, to maximize the use of a demographic dividend?
It's absolutely important. The skills we learn today in school are going to be irrelevant very fast. The whole emphasis on memorizing and people who cannot memorize successfully committing suicide is absolutely ridiculous. All we have to do is teach people how to learn. People can teach themselves. That is the skill we need to teach in our schools and universities, and we should give up on memorizing. I think that's very, very important. And then, of course, they have to constantly relearn, either on their own or with a tutor. There are artificial intelligence tutors now available that can do an excellent job. But most of the time, I think people can educate themselves.
One final or two final questions. As a veteran business leader, you've spent your lifetime doing this. How do you engage an entirely new young generation of Indians who have a different value system, different interests, perhaps than yours, and yet are such an important part of your company?
I've always tried to move forward, and I don't think my thinking is that different from my young generation. I have 3 sons who are from 28 to 32, and they help to keep me very young. And I always believe that they know a lot of things that we don't know, and we have a lot of experiences that they haven't had, and you can have an excellent exchange. And in our group, we've always believed in mentoring and reverse mentoring at the same time. It should be a two-way exchange with which both of us can benefit. And I think that's the best way to handle that, and that's the best way to move forward, because the younger generation can teach you about the future.
And a final question to you, and a tough one. The leadership and the identity of the entire group is linked to the name Godrej, as it should be. I mean, your family formed the company. But what about those in the group? How do they rise if they aren't necessarily with that last name Godrej?
Oh, very few people in our group have the last name Godrej. And we believe that there should be an excellent partnership between family working members and professionals running the business. Very few of us today are CEOs in our group. At one time or the other we were, but now we often have an overarching position. And I think it's very important for professional managers and family business managers to work together. They bring very different skills, and they're complementary. We tend to look long-term. We tend to be more interested in preserving values. They tend to look more short-term. They're more profit-oriented. We are sustainability-oriented. And I think you need both to get the business to proceed, and the two should work hand in hand.
Mr. Nadir Godrej, you're inspirational to so many across this country, and your group is so much a part of the Viksit Bharat story going forward. It's been an honor and pleasure speaking to you. Thank you very much for being with us.
Thank you for inviting me.
Thank you. Come, sir, please. Come. Shall we get a photograph?
Sure.
Thank you so much, Mr. Godrej. All right, some businesses follow trends, others create them. India's disruptors are not just changing industries. They're reshaping the way we live, shop, pay, and consume. From digital payments to mobility, from e-commerce to entertainment, these visionaries have changed the Indian consumer forever.
Well, the Indian consumer has evolved, and so have the businesses serving them. And today, we're joined by disruptors who changed the Indian consumer landscape forever. Please join us in welcoming Arvind Sanka, co-founder at Rapido, Piyush Shah, co-founder at InMobilen, and Mr. Shashank ND, co-founder and CEO of Practo. Also welcoming on stage my colleague Hira Dadia, who will take the conversation ahead. Ladies and gentlemen, please put your hands together in welcoming them.
Right. As we all know, they have not done it alone, though. It's rapid economic growth, urbanization, as well as homegrown technological advancements that have actually made the difference. Whether you want to hail a cab or a bike taxi to get to work, whether you want to consult a doctor from the comfort of your home, or if you want to use or make your business actually reach millions of Indians in the crowded sector who are actually jostling for attention, the one aspect that actually marries all of them is technology. Today, almost every Indian has a mobile phone. I think 78 to 80% is the kind of penetration that we have in India. And more Indians are actually getting connected to the World Wide Web through smartphones that are easily available on EMIs. And with India's internet penetration rapidly expanding, it speaks to the future of the most populous nation in the world. Today, we have the privilege of hosting some of these trailblazing disruptors, visionaries who have actually redefined customer experience, convenience, and accessibility. It's my pleasure to introduce Arvind Sanka, co-founder at Rapido, Piyush Shah, co-founder at InMobi, and Shashank NT, co-founder and CEO of Practo. Welcome to the show, gentlemen, and a pleasure to speak to you about the disruptions that you've already made so far. And I think with the use of technology, what is your path going to be with regards to our Prime Minister, the vision with regards to Viksit Bharat at 2024? Let's start with the first question that I have, Arvind, for you. I mean, in fact, more than Arvind, I will go to InMobi because I think you're the older brother of the three in terms of the companies. Founded in 2007. We just spoke offline as well. You've had multiple, disruptions that have come in the form of negatives and positives. The first pivot that happened was from 2007 to 2008, where, from an SMS-based search engine, you actually pivoted to a mobile advertising and rebranded yourself, right? Now, and 2011 was another pivotal year for you, I think, with the first unicorn in terms of the Indian markets. What was that shift that you took? Why that shift? And what were the key challenges that you faced?
Yeah, 2007 and 2009 right now feels like history, but the pain is still there. I'd say the big shift at that time, 2007-8, was feature phones were becoming smartphones. The App Store was coming in. Apple had just launched the iPhone. And the world over, I think Google had taken a lot on the search and advertising side. But there was no player in the world looking at mobile in a big way. And I think the only big right thing we did at that time was relinquish and kill the SMS-based model and bet big on mobile. bet big on the fact that consumers will spend a lot of time on mobile, billions of users will have this on the thing, consumption will change, and advertising will follow. And if you can actually build a world-class engine on mobile and do this from India, globally, we could be a very large player. So I think that's the big bet we took at that time. I think the second big shift was at 2011 when Masa had the first investment in India on our side and really gave us the big, I would say, momentum and push to think absolutely global, not just think India and Asia, but look at the US, look at Europe, look at Japan, China, Korea. I think going global was a big shift.
Who were you competing with at that point in time?
You know, frankly, no one. We did this before Google launched their mobile advertising business or Facebook at that time. And then slowly all these biggies realized the value of mobile advertising, and then they all came in the flow, including Amazon now. But the interesting piece was how we caught on to each wave, mobile, and then the big rise of video, the big rise of programmatic advertising, going global, and then eventually just sheer the way brands want to measure more on mobile. All of that we kept innovating on.
Absolutely, an absolute disruption coming in from an advertising perspective. The other aspect, Shashank, I'll come to you with is, you actually made Doctor on Call a reality, right, with Practo. How has the adoption been? Because it's been long that you've launched. And with doctors, it's more about trust, right? So how has that disruption actually helped you to evolve out of this?
Thank you for having me over. We today just talking about the evolution of doctors. Practo, the name, evolved by getting the doctor's practice online. Practice online, that's how Practo, the name, came to be. And in 2008, we started when I remember going to doctors the USB stick because the doctors didn't have internet. I just felt very compelled by the fact that if doctors were online, imagine what all they can do for patients like us. Today, when you go and meet two doctors, the difference in the two doctors could mean life and death. Now imagine if you could have the access to doctors online and you could sort by the best ones across the country or across your city so that you absolutely get the best. And that's the vision which we started. And today we have close to 5 lakh doctors in India on our platform, the largest by far. 2.5 lakh hospitals and clinics on our platform. We've extended this to now the Middle East, and I'm sure we'll take it to more geographies. The adoption has been very good. We've crossed $400 million in GMV. The largest hospital chain in India does about $3 billion, and in about 15 years we've gotten to about 400 million. Different because the hospital GMV is accounted for in the hospital, whereas we are a platform GMV. But I think in this short while of 15 years, we've gained a lot of trust of consumers. We've gotten 150 million users coming to us each year, and this is only growing. And I believe that with COVID and the focus on health that's coming back in the society and the amount of consumer awareness about health rising, this penetration that we have will only grow. Out of the $100 billion that's spent in healthcare delivery, we today account for 400 million. It's a long way to go, but I think we're well on that journey to make sure that every Indian leverages the power of computer science, data science in making the healthcare choices.
Okay, when you say that, how affordable, I mean, how big is affordability as a factor?
You know, just to be very honest with you, I think the India that we have has people with various income levels. The ones that we serve and today are in the top 10 cities, top 15 cities, these are the majority users of Practo. And for these users, what we have seen is that between convenience, between pricing and quality, in healthcare, quality always trumps. It's quality all the way over. So the main job that platforms like us have to do is make a difference in the health outcomes. How does a Practo or any other digital platform improve the health outcomes for the users of it? Along with that comes, how do you make sure that these health outcomes can happen conveniently and at a good affordable price? But it has to be quality and quality all over.
Absolutely. So I think quality is the prima facie that you see when it comes to healthcare. Arvind, talking to you as well, I think a product that you have launched is something which is a necessity now for everyone, right? Initially, for years, you had the Ubers and the Olas, which dominated with a duopoly. You had Rapido, which did come in. And in no time, we've seen in terms of market share, if I believe, you've overtaken both of them overall. What has been that one secret formula that actually worked for you? Because the number of years that Uber and Ola took to garner this kind of market share, you've done it in probably less than a year if you have to consider all of it.
Yeah, thank you for having me. I mean, it definitely looks like everything has happened overnight in the last 1-2 years, but definitely we are a 10-year-old company trying to solve for customers and captains at scale. But one of the secret sauce which still works for us is thinking about captains in a lot more real terms, where what does it matter for the captains and why are they coming to these platforms and how can we improve their earnings, as the core philosophy is what Rapido runs after. If you look at the various changes that we have done over time, in our business model change, in launch of any categories that we have done, everything is keeping the captain at the center or the driver at the center. So that is a big part of what we do. If you look at the platform, we have 2 million drivers who work on our platform every month. And it is larger than any other organization which can give us a livelihood for so many people, right? So our core focus is how do we give value for the captains. At the same time, the customers also see the same value. So giving value to the both side of marketplace by taking less value as a platform among all the three is the core philosophy which we have built all the categories over time.
Right. But when it comes to garnering the kind of market share, you need that quantum of drivers to come on board, right? So in terms of your business model, how is it different to the ones who are already present?
Yeah, so compared to a traditional commission-led model, we have changed our business model to a SaaS model where the driver pay a daily login fee onto the platform. We don't take any commission per ride. So that is the biggest change where we have done so that the drivers earn the most from the platform, and it made more drivers to come online because there is a real true value if the driver comes online because we can optimize for their earnings and we can maximize for their earnings as well. So, and that is what the business model has changed. So now, as a platform, in all the categories like two-wheeler and three-wheeler and four-wheeler, we have the maximum number of drivers and we are converting more offline drivers to online by reducing the barriers from a commission point of view. So the big change that we have done is we have moved away from a commission model to changing to completely a SaaS-based model for our drivers.
Interesting. So it's the subscription model which works in terms of for you garnering market share as well as from a consumer perspective because the rides get much cheaper, right? And as Sashank mentioned, it's more about trust and in terms of quality that matters. Piyush, coming to you when you have to look at the consumer behavior, we've got two different aspects with two different businesses. When it comes to advertising, is it more about affordability, convenience, visibility, or what is that one secret sauce that you think you should have from an advertising perspective?
I think there's a big part about, I'd say, how to even segment users right and be able to look at people differently. I mean, the classic sense of saying, hey, this person has these interests, like a Texas mom who does this and that is changed a lot. A lot of ability for us to say, these users have these emotions. They're right now in the mood for something which is linked to shopping, right now in this mood for something inspirational, right now in the mood for some gaming. I think ability for to map the consumer emotion and graph in a more dynamic fashion is what has changed the way how advertisers can function.
So I'll interrupt over here. Is it true that mobile phones are listening to us?
Sorry?
Is it true that mobile phones are listening to us then?
No. They may be by a bunch of other players who work on that. But I'd say the more important part that I feel has changed for us, and it's important for entrepreneurs in general, the world of consumer behavior is getting very, very universally same. That is why WhatsApp that got done in India works in the same way in Brazil or otherwise. That is why a TikTok that is built in China had wonders in US and rest of the world. And that is why things we have done here, starting from India, with let's just say a glance, is as applicable from a consumer behavior standpoint in Brazil or Japan. So I think consumer behavior, the primal emotions, if you touch those primal emotions of greed, fear, envy, vanity, whatever, and aspiration, I think you can hit a global consumer play. And those emotions are fairly universal in nature. Doesn't matter if you're in Japan, US, or sitting in Baroda, for that matter. That has been the biggest takeaway for us, and very big and important thing for any entrepreneur who's looking at a global play.
Like one emotion that you hit on me is right now ambiguity. To understand from Shashank and Arvind, how important is digital marketing for you with companies like InMobi? Because clearly, a lot of times, I'm sure everyone will agree, the moment you're talking about something, or I'm thinking of even booking a ride, or just about to type something, I keep seeing a lot of advertisements or pop-ups that will come up with regards to Ubers, Olas, maybe a Rapido, or for that matter, even if I'm looking at a Practo, there will be peers or a pathology or Healthians or something will start coming up, right? So how have you paved your way in terms of advertising with digital marketing or with, mobile marketing with what Piyush is doing right now?
Yeah, I mean, given we operate throughout the country in multiple cities, so right now Rapido is present in closer to 200 cities. So the easier way to reach to masses is definitely digital, because, and we spend majorly on awareness. So we want people to know, because as a concept of bike taxi is pretty new in this country, even though the bikes has been there through the ages in the country, but bikes are not used as a taxis. So how do we make people aware about the concept of bike taxi? So that's our biggest investment. So we do multiple video campaigns and then static campaigns, making sure. But what we do big is in terms of vernacular, because a consumer from Bangalore is very different from consumer from, let's say, Mysore or Tumkur. So to make sure that the consumers in that city understand the language and the concept, so we do changes according to the user behavior. But the big part of what we do is digital to make sure that people understand the concept of bike taxis. And then when they need it, the name comes in. So that's how we use digital as a big way of marketing.
And Shashank, for you, how important is this aspect of business in terms of marketing?
Marketing is important, but in healthcare, it has a different connotation. Unfortunately, it's not the hospital that markets the most or costs the cheapest or is always in front of your eyes that you visit. So it's a trust you need to earn. So the main focus that we have is how do we grow our organic. So 90% plus of our consumers who come to Practo, or 95% plus of the consumers who come to Practo are all organic users. They come to us because they believe that we've been able to solve their problems, and that's how they reach us. We've seen that whenever pricing or the conventional e-commerce discounting or the conventional subsidizing to gain consumers happens, that really hasn't played out well, because healthcare is an earned one. And just like good wine, it gets better over time. Like a doctor, a doctor who has the most experience is the one who is able to gain the most amount of followership. So we have done 17 years. I think the more number of years we put in, I think the less marketing and dependency that we'll have. Having said that, I was just talking to him outside and telling him that whenever we launch in a new geography, be it in Dubai or Abu Dhabi or Sharjah or in other geographies, the first level of interactions we have with consumers happens through platforms like InMobi, Google, Meta. And after that, it really has to be the product that really carries the day for you, and 90% plus of your users coming organically.
Right. So with this, everything said and done, from here on, how important is adoption of AI? I mean, technology you've already adopted, right? Adoption of AI going to lead the path for Practo?
I was telling one of your colleagues before this event that, when AI came, they said, you know what? You can now pursue your dreams. You'll have more free time. I have not seen any of that. The only thing I have seen is my time has been taken over even more. I'm working harder than ever before, and I'm sure everyone is, because AI has made so many new possibilities that the first movers are going to have a bigger advantage. So I'm still waiting on that person who told me that AI is going to make life easier. I don't see that right now. The way we are using AI is quite phenomenal. So till 2008 onwards, all the data that we have been able to capture has been digitally stored with us. So 17 years of health data, anonymized, and that intelligence is with us. So we have been able to create for consumers healthcare assistants for both for doctors and for consumers that can help them instantly. To give you an example, the biggest challenges consumers have is I can only get 5 minutes with my doctor. And then I'm shoved off because the doctor is busy. I can only speak with the language the doctor understands. The cost is a barrier. The distance is a barrier. With AI, you have everything at the tip of your finger. So imagine a person in a rural place, language no longer being a barrier. The doctors, going to the hinterlands of maybe Maharashtra may not know the dialect of that particular place, but AI can talk in that language and can talk for hours together for free. And this will be the best healthcare advice that they can get. Maybe not for complex cases, but for the simpler ones. So I think it's a revolution. We are seeing it in front of our eyes. We are seeing that doctors are now depending on AI to do I'll give one last example, where we built an AI for doctors, where doctors, while consulting the patient, can actually get a sense whether the patient is trusting the doctor or not, and will eventually follow the medication that he or she will prescribe to the patient. Many times we get a prescription home and we say, oh, you know what, I'm not going to take that, I'm going to go to somebody else. Because in some place the connection has not happened. So we understand this, we understand what has led to this, and then we are able to guide the doctor while doing the consultation that maybe you should tell this one sentence, or maybe this is the smaller EQ aspects, the softer aspects that if you were to communicate will make the adoption better, will make the adoption of medicines better.
It's AI doing your mood check as well. Probably, I thought probably only advertisers used AI and the phones were listening, but I think healthcare is also adopting to something like that. But Piyush, your adoption in terms of AI, I'm sure you're already at it right now, but what is that disruption you think that AI can lead to in a business like yours?
So I'll talk about how this is happening on the glance side. We are launching and revolutionizing AI-powered commerce and shopping now. You're saying that shopping has been broken. A lot of the inspiration you and I get for shopping or fashion, 10 years ago used to be looking at that celebrity wearing it. 5 years ago it used to be the creator or influencer talking about it. But we are saying, what if you are the hero of that story? What if you are the model and you are able to imagine yourself, discover yourself in the bestest clothes out there or the beauty options out there, where you are the hero of that whole piece. An ability for users to actually use AI, where we as an AI shopping agent is able to understand your styles, your preferences, and help you discover that through a try-on through a selfie. Just one selfie on your lock screen 10 times a day allows this to be a best form of inspiration possible, best form of vanity possible, where you look at yourself wearing that nice new jacket, and each time you thought, hey, why does Amazon keep showing me more and more blues? I never thought I could look good in brown. And imagine you liking that brown on yourself and wanting to buy. So we are doing a big piece on our next wave of glance worldwide, which will be AI-based commerce, and shopping in a big way. And that's something that we are pretty proud about, because it just changes how shopping is done in the world. And gone are the days when this is far beyond doing it on Amazon, when you're intent, or doing it on Meta, where you had some sort of inspiration. This is when you are the inspiration of the story, and you could never imagine yourself wearing that jacket or wearing that hoodie or even traveling in Paris with your family. So that's the big thing we are doing, and super excited about launching it soon.
Interesting. I think we'll wait and watch and see how it pans out as well from here on. Arvind, coming to you, we are talking about disruption through AI, but apart from that, Rapido itself is looking at disruption with regards to giving away to society. If you could talk to us about the same. And with this, how important do you think is it to collaborate with policymakers to make an ecosystem work in this fashion?
Yeah, I mean, so if you look at what we do, as I talked about, the big part of what we do is how do you create employment at scale. When you're creating employment at scale, the biggest part of it is how do you work with the government to make sure the policies are in the favor of the people who have been the part of this policy making. So what we do is, given there are the categories, we keep launching new categories, and some of these categories are new to this country. We kind of work closely with the government to make sure that they are aware about this concept of how it's happening outside and how this policy can go deeper into the consumers, especially in our drivers in this case. So I think that is what we work closely with the government, because we come from a driver on the consumer side, what is needed, and the policymakers come from much more than the consumer side in terms of how is it good for the society, etc. So I think that's where the match happens, because what we realized is when we are going deeper into the market, especially at tier 2, tier 3 markets, the more and more we work closely with the local bodies there, the more the trust on the platform increases. So that's where we partner with multiple local players, right from police to traffic, to make sure we spread awareness about the traffic, about the policy, and about the safety. We do a lot of activities for the safety point of view in terms of how do we make sure that people wear helmets. So our driver comes with 2 helmets, one for the customer and one for himself, to make sure we are spreading awareness about the safety as well. So right from safety to creating employment, we work with the policymakers to make sure that they are upping up and growing much faster than catching up from the business point of view, because we come from a business side.
Right. So Piyush, collaboration with policymakers is what we're talking about, is something which is needed across businesses. But to that, when you talk about companies which are leading, and I wouldn't say startups in terms of the size, but companies which are starting off and disrupting new businesses, right? The other aspect which is absolutely important is the amount of money that you need. Yes, you can be bootstrapped, but to achieve that next leg of growth, the funding aspect comes at play. How important, according to you, is funding or raising money, and the timing of raising money?
I mean, it depends on the entrepreneur's ambition. There are very successful entrepreneurs in this country and global who have completely bootstrapped and done a great job. Hats off to them. But there have been many more examples of absolutely middle-class founders who had that ambition and resilience in them, and you could dream big. I think an ability for them to raise money beyond their own imagination and be able to capture the market very, very rapidly and learn very fast and fail very fast and then build something very phenomenal, these 130 odd unicorns in the country, I think came because of access to funding. So I'd say given the big potential out there that is out there for us in India and globally, if I was a founder, I would definitely take that route. Capital is available. The real thing is talent is not, and ideas are not. So funding is important. Timing-wise, I think it is important to really cross some product market fit stage. I think it's been already talked about a lot. I will say that given the pace of the market, if you feel you have a winner in your hands, it's time to double, triple down very, very rapidly, because it is a land grab in that sense. As long as unit economics have worked out for you, depending on of course, the product it is. So I think it's an absolutely important avenue, debt or equity, whatever possible. Look at what's happening in Shark Tank. Look at what's happening in Shark Tank. It's just crazy, because these things, these opportunities do not come before, and this is a once-in-a-lifetime timing for us.
My last question, Shashank, to you, on the point that Piyush made, valuation versus fundraise. What would you give up?
I think if I had to pick between the two, it's always going to be the I'm assuming that valuation versus fundraise would be fundraise with a good partner, and it'll always be the partner. Valuation is a time and point assessment of a company, but when you are choosing a partner in the form of an investor or in the form of a VC or in the form of a PE, that relationship is going to go a long way. And that relationship will go through a lot of ups and a lot of downs. And so it's very important that you pick the right partner you want to work with. And valuation comes second to that. But between the two, I would say there's one more thing that's more important, which is the fact that, if you're passionate for your idea and you're passionate for the problem that you're solving, then neither becomes a bottleneck. And it's very important to also make sure that, funding or a valuation should not be a bottleneck to solving the problem, because that's why the company was first set up. And the rest will follow. It will be a matter of time. There'll be some ups, there'll be some downs, there'll be some new partners, some old partners, but hopefully you'll not leave the problem unsolved.
Absolutely. So I think disruption with regards to solving the problem is the key. Everything else will follow. Thank you, gentlemen. Thank you, Shashank. Thank you, Piyush. Thank you, Arvind, so much for joining us on the show. It was a pleasure to have you on this panel and create further disruption with the use of AI from here on. Thank you, everyone.
Thank you. Thank you.
Thank you all. Well, shifting focus to the banking space, banking isn't just about transactions anymore. It's about transformation. As technology, customer expectations and economy evolve, how do banks stay ahead? And more importantly, how do they drive India's journey towards financial empowerment? To explore this, we have with us today Mr. Ashok Vashwani, a global banking leader now shaping the future of Kotak Mahindra Bank. Joining him on stage are my colleagues Vishwanath Nair and Harsh Saita. Ladies and gentlemen, please put your hands together in welcoming them.
What's that? All right. So this is the final panel for the day, and I'm glad that Mr. Vaswani could spare some time from his very busy schedule and come in. Thank you so much for joining us.
Thank you for having me.
It's been one of those things that we wanted to do with you for a while, and Harsh and I have been talking about it beforehand. We're trying to analyze the tagline for the event, which is the Blueprint for Viksit Bharat, right? The idea being that this country is headed towards a developed nation status in about 22 odd years. And obviously, banking is going to play a crucial part. Because Kotak is also a big business house with multiple other lines, all of which will help the entire country move forward to get closer to that. I want to first ask you and try and understand from you what you think is Viksit Bharat. To your mind, what is the developed nation? What can people look forward to?
So first of all, thank you. Thank you so much for for inviting me. Delighted to be here. I think, look, a developed nation has many characteristics. It's obviously economic, with a per capita income of a certain level, so that people have a good, sustainable kind of lifestyle. A developed nation also has, for example, a health system which is appropriate, an education system which is appropriate, opportunities to kind of do things more. Stability is another thing, and stability has many factors, including defense. And so a developed nation is one which you can rely upon to behave responsibly and play a role in the world economy.
So, sir, with that context in mind, if I can chime in, what is it that will be required of the banking system? Because banking as a whole, by its very definition, has seen a sea change. One in 2016 with demonetization, and thereafter in COVID, when everything started to go digital, and now digital is a very big part of banking. So therefore, What changes from here on?
So, look, banking is the oil of the economy, and it facilitates payments, it facilitates trade, it facilitates investments, it facilitates capital markets, and it facilitates borrowing, and therefore banking has to kind of develop as the economy develops. Now, typically what happens is that the banking industry, the financial services industry normally grows at somewhere between 1.5 to 1.75 times GDP growth. And therefore, banking has to lead the way to kind of make it happen. And this has to be encouraged, taken care of, nurtured and developed. You talked only about COVID and demonetization. Because I'm older than you, much older than you, I remember the global financial crisis, I remember the internet, the dot-com boom, the Latin American crisis, the Asian crisis, and so every 8-9 years, we've had something which is very substantial, and we've got to kind of guide our way through. Now, if you look at what the banking sector represents in developed markets, let's say like the United States of America, banking has led the way to that kind of development in all aspects of the market, whether that is, banking itself for payments and stuff, or trade, loans, capital markets, securities, and stuff like that. And as economies develop, what is going to happen is the balance sheets of banks are going to change. And the balance sheets of banks have to change because ultimately the kind of growth that is required in the economy cannot be supported purely by bank balance sheets. In developed markets, capital markets have to develop to provide alternative sources of funding for industrial growth. That in turn has to come where those capital markets reach out to banks, pension funds, insurance companies to be able to fund that kind of growth. So the whole ecosystem has to develop. Another element of that is typically what happens is in a developed market, interest rates come a tad lower than in emerging markets. And as interest rates go down, again, the bank balance sheet changes quite dramatically with things like mortgage loans taking a much, much, much higher proportion on the bank balance sheet. And different countries have evolved differently as far as mortgage loans are concerned. So for example, in the US, they have bank or government-owned or virtually government-owned companies like Freddie and Fannie who kind of buy out standard mortgages to release the pressure on bank balance sheets. So elements like this will have to be considered and will come along as we move along. I think there's a third element to it. The third element to it is internationalization, right? A developed market is going to be an international market. And actually, I commend the way the Indian regulators have actually put us on a path of internationalization, which is so unique from any other part of the world, whether that's Latin America or whether that's Asia. The kind of route that we are going down towards internationalization is quite unique. And that will be another kind of thing which will develop, because foreign flows is obviously going to be a very important part.
You mentioned banking alone can't spur the kind of growth that we need or the kind of growth that we should be looking forward to. Having said that, considering that they are large enough players in the debt capital market, at least a lot in equity as well, but largely in debt, right? How do you think banks can maybe then ensure that private companies and private enterprise in this country start spending? Because that is what will actually propel growth. Yes, the government can keep spending and personal consumption can drive balance sheets, but for the country to move forward, you need that private enterprise to start spending, to spend on capex. How do you think banks can help that?
So see, private sector capex is really a function of the opportunities that there are in the marketplace. At least in my view, private sector capex is not being restricted by availability of bank finance, right? It's about the opportunity in the marketplace. If you see the last 1 year in particular, we've had some kind of IPO fever. And frankly, that's been quite scary. If you kind of see the kind of companies that have kind of gone IPO. And it seems that a lot of promoters are looking to take money off the table, right? Now, is that a function of very high valuations? Is that a function that, that the companies have grown? There's a next generation coming in which has different views. That, we can kind of debate. So my point here is it's not the restricting factor for private sector capex is not banks. The restricting factor for private sector capex is promoters saying, hey, either my company has become so valuable, let me take money off the table, right? And I will now no longer run an operating company. It's too hard to run an operating company. I can make a very good return running a family office or investing. And therefore, those opportunities have to come back. Now, that may be a transitionary kind of period. There will be a new generation. As I go around India and I see the startup scene in India, I get very excited. The youth of India today, when I was growing up, if you got a job with a multinational, that was the great thing. After that, if you got a job with a great Indian company, that was a great thing. But today, all the youngsters want to go and do startups, which is fantastic. And those will scale and drive the kind of growth of this country. So maybe a transitionary period right now.
And so sir, as we grow in the next 22 years towards a developed nation, there will of course be plenty of banks who will stand up. How do you stand out in a highly competitive tech environment? Which are the banks which will really stand out in your view? What will be those characteristics which will help them stand out?
So look, technology is changing the world. That is not restricted to banking. In fact, I always say, two things. One, technology is no longer a vertical on an organization chart. It's actually a horizontal. And two, technology is too important to be left just to the technologist. And therefore, technology is changing banking, financial services, as it is changing every single other industry. Literally every single industry is changing. And frankly, if you look at it and you think about it, 25 years ago, even 20 years ago, if you were looking to build out a bank, you would naturally tend to getting a lot of people who had either done chartered accountancy or an MBA in finance. Today, if you look at the banks, like the new digital kind of banks, the kind of people you're looking for is engineers with computer science. That just says it all. What it therefore means is that banks today have to adopt a mindset of change, like in every other industry, frankly. But they have to adopt a mindset of change. That mindset of change is going to be getting people who understand this technology, or at least understand the art of the possible of the technology. If you can understand the art of the possible of technology and say, how is technology going to drive business, then, things kind of fall into place. Fundamentally, all banking products and services are a means to an end rather than an end in itself, right? Nobody gets out of bed jumping or dying to get a mortgage. They want a home, right? No corporate treasurer is dying to get a loan. He wants to put up a plant. And therefore, being able to be part of that journey, part of that home buying journey, part of that plant journey, and doing it in a way that is least obstructive to the end customer is what it's all about. And that's where technology will play its role. And the banks that will win will be those who do that the best.
Over the last year, I would say, this intense sort of race for the deposit, right? And it's become a bit of a joke where banks are saying that people will move their funds, they will chase returns, whatever. But then we have more or less stagnated on the deposit rate hike front, and still the deposits aren't coming. So I'm just trying to understand from you, how do you stand out? And is service, the quality of your service and the ease of your service, going to be that factor which sets you apart from your competitor?
So first, I'll give you multiple perspectives on this.
Sure.
Let's start at the macro level. At the macro level, even in a developed market like the United States, if you look at, let's say, what they call checking accounts, what we call current and savings. Checking account, the volume of current checking accounts as a percentage to GDP has actually stayed pretty much flat. This is despite that, 1 in every 2 households in the United States owns some kind of mutual funds. So generally speaking, the level of money that lies in low-cost deposits remains pretty standard to GDP. It is not so much the quantum of deposits that's an issue. It is really the cost of the deposits that in the last 12, 18 months has really become an issue. Now, in our country, a lot of the liquidity in the system is really a function of government liquidity and government spending. So when government spending kind of slows down, like it did in, let's say, Q1 and Q2 of this fiscal year, you see a tight kind of situation. Then, of course, there was the issue with the rupee, which led to some further tightening of liquidity. But in our country, the function of government expenditure on liquidity is a big deal. Now, the government expenditure drives the economy, and therefore, nobody would be surprised that the government would try and spend more to drive the economy. So hopefully, liquidity improves as a result. And the RBI has already started taking action to kind of improve liquidity. So at the macro level, I think that is the kind of picture. At a micro level, look, banks will have to come up with innovative products that help customers and attract customers, right? So for example, at Kotak, we've got a product that's called Active Money. Now, Active Money basically says that we are going to trade off liquidity and return, right? So as long as you keep the money with us, we pay you a higher interest rate. You break it and bring it down, we pay you a lower interest rate. Customer wins, we win, everybody else kinds of win. What are the other kind of products, features, innovation, technology that can be used to actually develop new products that the customer is willing or the customer fancies that leads to deposit creation for the banks? And that's what we've got to kind of work at doing. And I'm sure all the banks, including us, are working very hard on that.
Right. Across the country, the diversity in the type of customer is very high. How do you appeal to every single one of them and ensure that the best quality in each cohort get tapped?
So, I always believe that the essence of strategy is denial, right? The essence of strategy is denial. It's not important. It is important to, of course, say what you're going to do, but it's more important to say what you're not going to do. Because you have to sharpen your focus. If you try and meet the needs, if you're going to try and say that everybody is my customer or is my target market, you're exactly for the reason that you mentioned, to your point, you're going to kind of miss it. Getting very sharp as to who is your target market, what are they really looking for, how can you define products and services for them, for who you're really looking at, will make you win. See, there is, again, my belief is that a lot of people think finance is all about Excel worksheets and, 13.3% interest rate versus 13.1% interest rate and stuff like that. I would submit to you, finance is all about emotion. In fact, there's so much emotion that even sometimes couples don't talk about finance, right? Let alone you never talk about it to your friends and stuff like that. There's a lot of emotion and a lot of suppressed emotion in kind of finance. So it is ripe to actually to appeal to that emotional quotient to be able to get the customer. So if you're able to define who your customer is, who you're really going to go after, then you can get very sharp on who we go after. The good news is we have nearly 1.3 billion people. The ability to sharply define the focus on the customer is what I think will make you win.
I want to bring the focus around retail and the story there, right? The idea that retail is going to, or till now, was the steam engine behind which the entire banking system was putting its wagons. And then there was a very unceremonious stop. Then everybody started tightening things. Kotak, to your credit, the bank has remained sort of sane and static throughout this entire cycle. I wanted to get your view. Is the fear a little overblown at this point in time? That unsecured, yes, some people borrowed more than they should have, and they've had lifestyles which were entirely debt funded, and maybe that was not a pretty good idea. But is the overall fear a little overblown, or maybe there is still steam left in the engine to push retail forward?
So again, I'll start with the macro and then come down to the micro. See, on the macro level, even if you look at all the developed markets, consumer spending drives the economy, right? In the United States, about 60% of the GDP comes from consumer spending. That's true of the UK, that's true of Japan, and stuff like that. So as India moves towards Viksit Bharat, the consumer driving the economy is definitely going to play a larger and larger role. Now that is again a macro kind of 50,000 feet kind of trend, which we will see. In between that trend, you're going to see none of these things is a straight line, right? They're always kind of bumps along the road. So what happened in this recent past? What happened in the recent past is during COVID, suddenly, the world and the banks froze. Nobody was prepared for an event like COVID. It was unprecedented, right? And in fact, unprecedented became such a cliched word in those 2 years that it was quite amazing. But nobody knew how to respond. Just literally nobody knew how to respond. And therefore, everybody froze and, banks got very, very, very cautious. In fact, a lot of banks raised capital, including ours, because we said we don't know how to manage this kind of downturn. Now, what happened to the consumer? The consumer, because they could not go out, because they couldn't see movies, they couldn't eat in restaurants and stuff like that, they froze too. So, I don't know about you, but the savings rate during COVID went through the roof, right? So what's happened? The banks have kind of shrunk their balance sheets. Banks are sitting on a lot of capital. The banks are sitting on a lot of liquidity. The banks have actually not growing assets and therefore earnings are not growing. On the other hand, you have a consumer who's kind of got stuck at home, not traveled, not eaten out, not met friends and stuff like that. So the minute COVID opens up, guess what happens? There's something called vengeance travel. Everybody said, oh man, now we have to go on holiday, we have to meet, people who've got children living in different parts of the world, they hadn't met. So a lot of customer expenditure went through the roof. The bank said, frankly, nothing happened in COVID, right? Because excess cash was developed. By the way, the government pumped a lot of liquidity into the system, right? So the consumer was able to happily pay off all loans, reduce debt and stuff like that. So the bank said, wow, this is great. So now let's go and extend credit pretty extensively, right? And who do you extend credit extensively to? To the people who you think are, quote unquote, the safest, which is the salaried class. So therefore, that extension happened aggressively. Now, by the way, I was in the US and this happened exactly in the US as well. I was running the UK at the same time. Identical happened there. Identical happened in India. So there was an overextension of credit that was done, and that overextension initially was all fine. And initially it was fine because the consumer had a lot of cash to kind of, manage it. Cushion. After that, that cushion ran out, so that led to some over-leveraging. And that led to a little bit of issues, right? Now, hopefully, I think, at least at Kotak, what we're seeing is credit card kind of stuff has stabilized. It's not deteriorating. But if you go down the chain a little bit, in microfinance, for example, you are still seeing a lot of pain. Same kind of issue around over-leveraging. But hopefully the banks have picked this up pretty quickly. Again, kudos to the Reserve Bank of India. If you remember, Reserve Bank of India actually came out and changed the risk weighting on unsecured assets. They picked up the trend pretty early and signaled to the banks that, you should have been careful. And I think that way we've kind of avoided a major issue. Now, touch wood, these things you have always got to be extremely careful. But as we sit now, hopefully, we've kind of managed through this.
There's a steam left. That was the final bit.
So it will come back, right? Okay. It will definitely come. See, these things are in cycles, right? These things are in cycles. It kind of, if you want to think about an anecdote, it's like a pig going through the python, right? It kind of goes right through, and then, the python starts moving again. And then you're kind of back to, all these things go in cycles.
Okay.
Okay. So for a brief couple of years, there was a sense that your fintech industry will actually be larger than the banks. They will actually start taking risk on their balance sheets because you have plenty of customers who are sitting there. That obviously was an overextension, a little bit of an over-exaggeration. I think we are now in an era where everyone's comfortably accepted that. But I want to understand, what piece of the pie do they take? Do banks continue to take the larger piece of the pie? Because they will take some piece of it, for sure. Just want to understand your perspective on maybe the next 5 years as things stabilize on both sides. What piece of the pie do they take? And what are banks going to do to actually up their tech game? Because that will be one of the big risks for the fintech industry.
So look, here's what happens, right? Why is a fintech able to kind of move quickly? Because they're usually speaking new, and they usually deploy contemporary technology, and they focus on a particular niche. And they go deep in the niche with contemporary technology, and they're able to move quickly. The banks, on the other hand, have a very, very, very wide beach, right? And therefore, they've got to deploy technology at scale. But the advantage that banks and stuff have is that they've got scale, right? So the fintechs have the ability and the advantage of nimbleness and agility. The banks have kind of scale. Now, the minute you start posing the question, is it banks versus fintechs? I think we're getting the wrong, I think we go down the wrong path.
Correct.
I think the fintechs need the banks because of the scale. The banks need the fintechs because of the kind of contemporary technology. And therefore, the happiest fintechs and the happiest banks are the ones who've built great partnerships, right? Also, the fintechs have to be very careful because, if they kind of grow balance sheets and accept deposits and stuff like that, they come under the regulatory net, which the regulatory net obviously adds a lot of responsibility upon them. So I think the best outcome is when you kind of partner. And you partner in certain niches, and where you really require that kind of cutting edge tech and the ability to move quickly is usually where a fintech will bring the greatest amount of value. But the banks will definitely step up their game as well. They're going to invest in technology. They're going to do a lot more, and they will kind of proceed as well. So, frenemies is the kind of term that I think about when I think about banks and fintechs.
But where will the profit pool lie? Just trying to get that kind of
So ultimately, the profit pool will always lie with the person who owns the customer, right? And therefore, direct engagement with the customer is what drives.
So things are not going to go out of bank hands for anytime soon.
Well, I hope not.
All right, Mr. Vaswani, thank you so much for joining us on this conversation, sir.
Thank you.
It's been a pleasure talking to you.
Appreciate it.
Thank you, sir.
All right, we'll take a photo. Thank you, sir. Thank you. Just 1 second. We'll take a picture. And then we'll chat.
Thank you so much, Mr. Vaswani. Ladies and gentlemen, this brings us to the end of NDTV's first conclave.
Yeah, and it's been a fantastic journey. It's been a fantastic experience. Thank you so much to everybody who's sitting in the audience, who's joined us at home. And a very, very big thank you to everybody that participated on stage. I think we've got so many takeaways from the conversations today. 2047 is a long time away, of course, but then we have a better sense now of how we're going to get there and how we're going to reach Viksit Bharat 2047. for facilitating this fantastic meeting of minds, of course, we also have to thank our sponsor, our presenting sponsor, Pernod Ricard, co-presented by Shema General Insurance, banking partner SBI, co-powered by Share.Market, by PhonePe, premium menswear partner Reed & Taylor, state partner Uttarakhand government, summit partner Invest MP, government of Madhya Pradesh, and out-of-home advertising partner Lakshya Media Group. And well, that brings us to the end of this conclave. It's been an absolute pleasure bringing it to you. Thanks so much for watching.